the Fed, we have a Fed rate cut in December, but the Fed might, if it's a close call, the Fed could stop, Fed could basically take a pause. All of that being said, I think at the end of the day, a central bank will do what is domestically imperative. And I think domestic imperative has been calling for a rate cut and an easing in the restrictive stance of RBI, even though they claim that it's a neutral stance. At least that's what they said in the last policy review. It is a very restrictive stance to do, and it was just a question of timing, whether it was going to be now or whether it was going to be in February. We have 100 basis points of rate cuts for 2025, so significantly more than the market. So you can understand where our bias lies.
Very lastly, Jahangir, a last question from my end. I take your point that it takes time to act, but the counterpoint is also that why is consumption weak? It's because of inflation, right? And can the RBI at this stage do a cut without injuring its credibility in some ways? Because when we had the last reading, it was well above their comfort zone of 6.2 in terms of October's reading.
Consumption isn't weak in India. Real income is weak. Households are doing exactly what the households are supposed to be doing. If you go back to, let's say, fiscal year 24, right? Not the last 2 quarters. That's the fiscal year 24. You look at India's nominal GDP was 9.5%. India's inflation was 5.5%. So real income of households grew by 4% and consumption grew by 4%. Where is the puzzle? In fact, the puzzle is now that we've had 2 separate quarters of low growth and you have consumption actually higher than the growth rate, than the GDP growth rate. That is what the puzzle should be. So I don't see why we go back to this argument that consumption is weak. Consumption isn't weak. Real incomes are weak. And the question that needs to be asked is that why is real income weak? Or why did real income run at 4% last fiscal when growth was above 8%? I think that's the question. I don't think that the households are doing anything wrong, by the way. They are doing exactly what their disposable income is telling them.
But Jahangir, as a result, I mean, cause and effect, but as a result of that, the consumption numbers, I mean, have fallen, right? I mean, it's evident at least in the results of the listed companies.
It should fall.
Yeah, of course. But I mean, so that's why.
If your real income is growing by 4%, you can't be consuming more than 4%.
Exactly.
Yeah. I mean, right now, I think that the consumption is actually growing because of the significant amount of, income transfers that every state government seems to be promising to people. So I think part of the reason why you're seeing rural consumption growing up is largely because every state government is opening their purse strings completely.
Yeah. Jahangir, sorry, very quickly before we let you go,
sure.
Any difference if there is an extension to Governor Shaktikanta Das or no?
It does matter, right? I mean, every time you have a change in the governor, you do have a change in the manner in which the RBI thinks about policies, thinks about banking supervision, etc. So I would be the last person to say that, no, the governor doesn't matter. The governor does matter. My guess is that, they are going to look for somebody, if they want to replace the governor, with somebody who's going to continue with this policy rather than be disruptive about the policy. And the governor's case, I think we are going to continue to see what he has been doing for the last 5 years. But
go on.
No, but let's not minimize the fact that or dismiss the thing that the governor of the Reserve Bank of India doesn't matter. He or she does matter.
Right. Very lastly, as we wrap this conversation, Jahangir, will the RBI announce a rate cut today? Yes or no?
Most likely.
A rate cut. CRR cut?
Yes.
Change of stance?
Obviously, you can't have
one without the other.
Okay,
so we are aggressive. We are expecting a rate cut. Thank you, Jahangir. Have a good evening. We'll speak to you soon.
Sure.
Well, Jahangir, in the markets, Neeraj, both believe a rate cut is coming in 2 hours from now.
Yeah, let's see. Well, she's spoken to a bunch of people and he's standing by from the place where all the action will happen. Vishy, you probably got a slight idea of what Jahangir Aziz was saying as well. He expects all of the above. All the things to happen. Tell us, what is your assessment? What have you gathered from people that you've spoken to?
Good morning, Neeraj. If wishes were only horses, that's the situation here. But at this point in time, what we do know is that a majority of the economists are expecting a status quo. Having said that, the voices in favor of a rate cut and a CRR cut have been rising sharply over the last 1 week at least, specifically after the GDP number that came in for Q2 at about 5.4%, which was a widely unexpected kind of a number. Really low in terms of quarterly GDP growth. The government seems to suggest that there is likely going to be a turnaround in the second half of the fiscal. The CEA, who was speaking yesterday, was confident that the overall target of 6.5 to 7 odd percent that remains intact, but we still need to see what exactly the RBI and the MPC think of that growth number. Having said that, the RBI has repeatedly said that while they watch global developments, they do rely only on Indian developments, local developments, to tinker with their monetary policy announcements. If that is the case indeed, then the low growth number does come into the picture, and that inflation growth balance is an issue that the RBI and the MPC will have to tackle in the current policy meet. This is also Shaktikanta Das's last policy meet in his current term. Talks of extension have been rising repeatedly, but we still haven't heard from the government whether he'll get an extension or not. We still need to wait and see what he does in this last policy, whether he decides to actually take Jahangir Aziz's advice in this matter and give that rate cut, deliver that rate cut. But widely expected to be a status quo policy. Some amount of noise rising about a CRR cut as well as a repo rate cut, Neeraj.
Thank you for that, Rishi, and we'll of course continue or keep coming back to you over the course of the next couple of hours. For now, like Rishi said, status quo, but Jahangir believes a rate cut. The markets seem to also probably believe some action going beyond just a change in stance. But of course, we'll cover the policy for you live on NDTV Profit. Coming up on the show will be Aditi Nair, Chief Economist of ICRA, Jayesh Mehta, Vice Chairman and CEO of DSP Finance, Katrina L, Director Economic Research, Moody's Analytics, and Rajiv Anand, Deputy MD of Axis Bank. Right, but just before we go into what we're expecting and talk a little bit more about the policy, a quick check on how trade played out. But before I go into that, I came across a very interesting note put out by Morgan Stanley on India, and this all comes in when there have been concerns about valuations, about the fact that India has borrowed returns for the future, growth is slowing down, inflation is a worry. But Morgan Stanley remains bullish on India and believes that India remains a market to beat going into calendar year 2025. They expect India to be one of the best performing emerging markets in the next calendar year. Strong earnings, macro stability and domestic flow will aid India's investment case, and potential global risks remain. Near-term growth concerns present challenges. But all in all, they believe that India will be a hot market for 2025 as well. Well, a quick check now on how implied Nifty is doing. It's expected to be a flat morning. It will be a morning with the traders and investors will remain on the sidelines up until the policy decision. Yesterday, though, was an interesting day of trade. It was the fifth straight day of gains that came in for the street. The first couple of hours were quiet, and then suddenly at about 12 p.m. odd, the markets did see a strong reaction coming in. There was a dip that happened as well towards the last few hours, but finally the Nifty went home about levels of 24,700. We did make an intraday high of 24,850, but that got sold into. Nifty IT was the star trade, of course, closed at its record highs, up 2%, with stocks like Infosys and TCS playing catch up with the broader market IT names gaining substantially. Insurance stocks witnessed profit taking after a very strong rally that they witnessed on Wednesday. Stocks like IGL gained. You had HEG that saw profit booking, BSC hit an all-time high, and Zomato and Swiggy both gained, despite Bernstein picking Zomato over Swiggy. Swiggy also managed to hit a record high, with both those counters gaining 4.5% in trade. So all in all, Neeraj, it was a great day, and I don't think this was expected. 24,850 intraday high, closed about 24,700. While we thought 24,500 would be resistance, we took it out very easily yesterday.
Yeah, I mean, it was an interesting session for sure. And I think one of the most interesting things that happened yesterday was the flows picture that Samina spoke about. Now, remember, this may not necessarily be only block deals, but it does seem to be not necessarily a recurrence, because to my mind, I think what happened yesterday, and I don't know how Samina thinks about it, but to my mind, what happened yesterday was that the expiry day, and now that we have fewer expiries, hedgies propped up specific pockets via cash market buying and took the option writers to the cleaners. A clutch of option writers would have been stopped out at various ends in yesterday's late 1 hour volatility. Boy, was it volatile yesterday, extremely volatile. And therefore, I think that is what probably happened yesterday, and this massive buy number that you saw. There were not too many block trades in trade yesterday, at least to my mind. Now, highly unlikely that we'll see a last hour repeat in today's session. Now, maybe since the weekly expiries are going off, you probably see bunched up volatility on the two major expiries, if you will. We've been talking at length about the RBI action, so won't repeat too much, but just keep an eye out on the PSU Bank Index. That might just sink if indeed there is a lack of policy action from the Reserve Bank of India, especially on the CRR front. Even if there's no repo action, but if there's no CRR action along with, then the PSU Bank Index might actually come off quite rapidly. It paused a bit yesterday, despite the fact that the Bank Nifty was very active in trade. So it'll be interesting to see what happens on this one. That half an hour between 10 to 10:30 is a crucial time for both Bank Nifty and the PSU Bank Index, Amina.
And I don't know what's going to happen in terms of a reaction. Assuming you don't get a repo cut, all you get is a CRR cut and of course a change in stance. Will that be enough to prop the markets and take us back to 25,000? Now that becomes a tough trade, right? What do you do? Even at 10:30, if you do get that much expected CRR cut, I don't know how you'd play this, because you have seen again, for reasons which may not be directly related to what the governor will do and could be more related to the technicals and the futures and options picture, the fact remains that the rally has been one-sided for the last few days. Also, in other news, the market regulator SEBI has indicated yesterday where they've proposed a framework to convert the in-the-money single stock option contracts into futures a day before expiry. Now, this is to avoid the physical settlement that would happen on stock derivatives. We'll delve into that a little bit more, talk about that in more details when Agam joins us as well in a few minutes. But that was just, again, an update coming in on that front. Well, a start at 24,700 is what we should be expecting. It'll probably be no man's land till about 10 odd. Don't expect bravery for the bulls or the bears, because this is now not just calling on market activity, but calling out what the RBI governor will announce. There will be stocks, but this morning is interesting because you don't have too many stocks or too many big stocks that turn out to be stocks in news. I'll highlight a few smaller ones that we've got for you. You also have a listing, actually. Surya Diagnostics will be listing at 10 o'clock. So just before we go into the governor's speech, you have an interesting listing that will be hitting the street. So that turns out to be my top stock to watch. May not be at, of course, 9:15, but at 10 o'clock they will be making their debut on the exchanges, as we expect them to do. In terms of what's expected, remember, it was okay subscribed, so subscription numbers were 1.7 times, which isn't too bad. If the market sentiment supports, this could see a good start in today's trade. Well, along with that, you've got rights. They've managed to bag an order and sign a pact with IIP Raipur, for about 148 crores. So this becomes a counter that could react to that order win. You've also got GPT Healthcare, where they've signed an MOU. We don't know the size of it, for constructing a hospital building in Jamshedpur. So that becomes the second one to track. And Edelweiss Financial Services, their unit EAAA, which India Alternatives, has filed a draft IPO papers for its IPO. Edelweiss will sell stake, which could be up to 1,500 crores via an OFS if this listing goes through over the course of the next couple of months. So I would imagine this should be a positive, with cash getting infused in the parent, which is Edelweiss Financial Services. But apart from Suraksha, GPT Healthcare, Rights, Edelweiss Financial Services, Neeraj, I think it's a slow sort of stock-specific news day in that sense.
Yeah, very slow. You're right. Just a few from my end. So Harsha Engineers International, not a very large order, but it's an annual recurring order, and which is why, who knows, may get the stock to react. It's a 6 to 10 million euro annual recurring contract from an MNC bearing company. Let's see if that evokes some response in Harsha Engineers or no. I think Samina spoke about Garden Reach, but that contract of 7,500 DWT multi-purpose vehicles. Maybe it evokes some bit of response in Garden Reach.
And just on Garden Reach, Neeraj, before you continue, this is part of the 4 contracts that already announced. A few weeks ago. So I don't know, this is not a new contract in that sense. I think that's should be put out because, yeah, 4 orders of 75,000 crores, 75,000 units were already announced a few weeks ago. So this is an update on that.
Perfect. And then watch out for Canara Bank may react and Borosil will definitely react. So Canara Bank, RBI has approved the divestment of shareholding in Canara Robeco, AMC and HSBC, Canada HSBC Life Insurance, 13 and 14.5% respectively through IPO. I mean, this was in the talks, in the making, now the RBI approval as well. Who knows, maybe it brings Canara Bank to react. But interestingly, because Borosil Renewables have been talking about so many times on our channel as well about the need for an anti-dumping duty, the Ministry of Finance has finally imposed that duty. And since it's effective for a period of 6 months from effective on December 4th, maybe this stock has a bit of a positive reaction. It was up yesterday, Samina. Maybe there is more in store.
Yeah, we'll have to wait and see how Borosil Renewables does in trade. Yeah, like Neeraj said, 5% high in yesterday's trade. Apart from that, I don't think we have too much. You've got a couple of brokerage calls. I don't know if you want to take viewers through that. There's a note on Swiggy as well from HSBC.
From HSBC. But I thought HSBC note probably pointed to about 4-5% upside. But there's a Jeffries note on Newgen Software. Interestingly, I mean, the target price is 1,500, so nothing too dramatic. I mean, it's the current price is 1309, so about 15% upside, 16% upside, if you will, maybe. But they say that the order book remains strong, up 22% YOY in H1. They expect Newgen to deliver a 25% EPS CAGR over FY25 to 27 expected, and therefore, despite the rally that Newgen has seen in the last 15 days, they expect some uptick there. And there was an interesting note from Nuvama on Zen Technologies, wherein they reiterate the target of 2,200, but they say that now Zen is getting into the inorganic mode as well, and therefore that could be very, very interesting for Zen Tech shareholders. So maybe watch out for that one.
Also, a quick update on Indus Towers. We were discussing this yesterday, where we were trying to guess who would be the buyer of the 3% stake that Vodafone's unit has sold. It's not Bharti, but it's a whole bunch of domestic and global institutions that have come in. And interestingly, that was the only block deal that happened on a day like yesterday, right? Usually you have a few that take place. And the few that I want to name that bought into Indus Towers was VFTC, Kotak Mahindra Mutual Fund, National Pension System, Blackstone, Bank of America Securities, Copterhell, Mauritius Investment Fund, Jupiter India Fund, Vanguard, Blue Diamond, Morgan Stanley. So a whole bunch of very strong global and local institutions bought out that last leg of 3% stake that Vodafone owned in Indus Towers. Along with that, there was a smaller bulk deal that also took place where HDFC Mutual Fund acquired 0.6% in UPL at 192.88 paisa. So that was the other smallish block deal that hit the street in trade. But like we said, it was quiet between yesterday's close and this morning's open. All eyes, I guess, companies also focusing on what happens at the policy meet later on today. But talking about near-term triggers, I believe Jefferies sees a near-term trigger for India CDMO stocks. Remember, this has been a very interesting block, not just in the last couple of weeks, but in the last few months. And with the US Senate likely taking up the Biosecure Act in its December session. Varsha is joining us with more details on this. Varsha, what does Jefferies have to say? And of course, some of these CDMO stocks have already ran up significantly. I think the question to ask is, can an investor still make money on these if they buy into the story even now?
Yes, Amina. So the whole note focuses on how Indian CDMO companies will benefit from the US Biosecure Act. Now, speaking about the numbers or the returns that these companies have given, if you see, the Indian CDMO stocks have seen strong gains in the last 6 months due to expectations of better US biotech funding and progress on the Biosecure Act. Even Syngene International told to NDTV Profit that they are seeing increased inquiries from all these companies. Now, if you see, the high expectations from China Plus One have seen valuation of these CDMO companies re-rate to 40 to 60 times, and the Biosecure act is actually currently under consideration in US Senate, though House version was passed in September 2024. The US Senate is expected to discuss the Biosecure Act in December, with outcomes likely impacting the Indian CDMO companies. A stricter version of the act could benefit Indian CDMOs, according to Jeffries, by limiting US contracts with Chinese firms like Wuxi and other 3 companies. If the act is not passed in December, then bill will expire and then will have to take up under new administration. And delay and dilution of the act may negatively affect stock performance of these companies. You see that, so on and all, December is actually a key month for the Biosecure Act progression in the US Senate, with possibly positive impact for companies such as Divi's Lab, Syngene's, Suven Pharmaceuticals, Laurus Labs. So if the act is passed, this will benefit Indian CDMO companies, and if the act is not passed, it will actually impact negatively to all these companies. So all in all, December is actually a crucial month for all these companies.
Oh, certainly, because there is a rally that's happened. I think this note of what to watch out for, very important. Varsha, thank you so much for bringing that. Now, since we're talking about active pockets, another active pocket is cement. The stocks have been in focus because a clutch of brokerage notes have come out in the past. Now, JP Morgan adds to that list. They put out a note with a positive view on Ultratech and ACC in particular. Rucha Johnson with the synopsis of that whole note. Rucha, good morning.
Hi, good morning, Neeraj. So you rightly mentioned JP Morgan has come out with note on India Cements. Well, Ultratech is what it likes with an overweight rating given a target price of 13,470, implying an upside of about 13%. ACC also is what it likes with a target price of 3,250, implying upside of 43%. Again, an overweight rating over here. Now talking about the sectoral level, well, key cement stocks have surged about 10 to 13% since 15th November. That is less than even a month. That is on the back of expectations from central government's capital expenditure, and therefore these gains likely reflect that, is what the brokerage house is saying. However, when the brokerage house conducted channel checks with cement dealers, the checks suggested that pricing has just moved marginally, and therefore cement companies should likely deliver better QOQ returns in the second half. Better earnings seen on higher volumes and operating leverage is the thesis of going bullish on India segment. Therefore, it continues to prefer Ultratech Cement largely on growth and ACC largely on valuations. But lastly, would like to highlight the share price movement of Ultratech Cement, up about 29% in last 1 year and about 20% in last 6 months. So healthy movement in Ultratech is what we could see, and ACC in last 1 year up about largely 7%, and last 6 months it is down about 7.5%. So bullish on both of these names is what JP Morgan has.
Right, Rucha, thanks for that. So watch out for some of these cement names as well. But now let's shift focus to the derivative market. And boy, what option writers in for a root shock yesterday. Agam is standing by to talk about all of that and more. Agam, I don't know if my if what I'm saying did actually happen, but yesterday with the frenzied buying from the FIs on the cash market, right?
Yeah.
Indian option writers would have been taken to the cleaners in the last 1 hour.
That certainly was the case, Neeraj, just spot on, in fact. And, and unfortunately, a lot of those calls were written earlier on in the session, which means that, a lot of those players were also taken out completely, when perhaps forced to book very, very deep losses, at that point in time. But of course, it's always good news for those who are long in the markets, because that also meant that everyone who was long those calls also made a substantial amount of money. It's just one of those days, of course, given the fact that now we don't have too much in terms of expirations, just one weekly, that's always going to play out that way. At least for now, the implied open is indicating a 15-point up move, so flat right now. Yesterday, though, a 1% up move for the Nifty. A little bit of unwinding. The bank Nifty, of course, also advancing by around 0.6%. That's where we saw not too much change in open interest. We are looking at a very rough, 700-odd point range as we move into a new week. And I don't want to put a number on the range because it's still early days. And we also have the RBI policy. So perhaps we can hazard a guess on the range once we're out of that event. But that said, it was a mixed day of trade, but more gainers than losers. And again, a very, very good day for a lot of these capital market companies. So BSE advancing, Angel One also doing well, a lot of longs there, along with even CDSL up as much as 8%. On the other hand, unwinding seen in GNFC, Adani Green and JK Cement. So all in all, it was a good day of trade. But the question really is, what do you do with these markets? So let's get in an expert opinion here. We have Amit Goel of Amit Ventures who's joining us on the show. Good morning to you and thanks for joining in. Amit, what's the way forward? How are you reading in clues into these markets at the moment?
Hi, good morning, Agam, and thank you for having me on your show. It's always a pleasure to be here. Let's do a quick recap of what has happened in the market in the last few days. We did test the lows of about 23,000 odd levels. From there, a relief rally sort of started building up, which was more like a value buy. That gained momentum with some bit of short covering on the index futures by the FIS, which currently stands at 47,000 contracts from a high of about net short of about 2 lakh contracts. Now, with the GDP numbers coming in at lower than expected numbers, this kind of ironically fueled this rally in expectations that the RBI might do something about the slowing growth and the inflation. This has now culminated to an inflection point. If you look at the charts, technically speaking, both Nifty and the Bank Nifty are at a crucial level of resistances. Nifty, so to speak, is at the resistance level or the neckline level of the head and shoulders pattern, which was formed in the last couple of months. Bank Nifty, on the other hand, is near its previous all-time highs, trying to touch the all-time highs. And that is currently a resistance from where it has seen a sell-off. So both the indices are at a crucial inflection point, and with the RBI policy in the next, ensuing the next couple of hours, I would want the traders to, take a circumspect view and take a decision or deploy a trade only after the RBI policy comes in. So I have planned a binary sort of a trade wherein I'm suggesting two types of trade for traders post the RBI policy. So if you
stop you there. Amit, pardon me. So let me stop you there. So because of the fact that you actually have two different strategies under two different circumstances, I believe the first one that you're talking about is a bull call spread on the Bank Nifty. Yeah. Under what circumstances would you deploy it, and what strikes are you working with?
Sure. So the first scenario is the bullish case in which RBI does come in and gives us a surprise rate cut. It could even be a CRR rate cut, which a lot of PSU banks are, the kind of rally we are seeing in the PSU banks is kind of, pointing towards it, or at least hoping towards it. So if there is any sort of a rate cut, then I will suggest the traders to deploy a bull call spread in which we will buy the 53,500 call of December expiry and sell the 54,500 call again of December expiry. The max profit and loss are about in the range of 7,000 to 8,000 rupees with a total margin of about 25,000 rupees. In this, I will suggest traders to keep a rupee stop loss of about 3,500 and a target of about 4,000. From there, we can trail if the rally continues.
So, Amit, under a different circumstance, say, for example, it is status quo, under those circumstances, you are looking to play a relatively range-bound strategy. Yeah.
So, in the scenario two, if RBI does not cut rates either on the repo or on the CRR, and the stance also is, fairly status quo with some bit of, neutrality coming into it, I would suspect that the market is kind of then making its top clearly. And I would expect that the market to range between 54,500 and 52,000 on the downside. Given this view, I would I would suggest traders to deploy an iron condor with a slightly bearish view, in which we will sell the 54,500 call and the 52,000 put, again of December expiry. This is a short strangle, and I will cover this with wings by buying the 55,000 call and the 51,500 put, all again December expiry. The max profit and loss in this trade works out to about 3,300 and 4,000 rupees, and I will potentially hold it till expiry because I would believe that with no further triggers in December, the market would probably range within this and expire here.
All right, so there you have it. We are under the circumstances that it is in fact status quo. What Amit is doing is he's playing a 2,500 point range on the Bank Nifty, but slightly lower than the at the money options. And of course, as he's mentioned, he's also buying the slightly further out of the money calls and puts respectively in order to limit his losses, because of course selling options always comes with theoretically infinite losses. But Amit, on that note, thanking you for joining us and taking us through your views in the markets, and of course giving us two different strategies to work around with under two different scenarios. We continue to keep an eye on that one. With that, it's back to you all.
Thank you for that, Agam. That was, of course, a quick update coming in on the FNU action this morning. Implied Nifty is expected to, or rather is indicating to a flat to slightly higher start this morning, but don't expect fireworks up until the policy decision is announced at between 10 and 10:30. Markets will remain on the sidelines. We've had a good run yesterday. Some could call it short covering, others could call it being cautious ahead of what action the policy will bring with us. Well, remember that stock-specific news is rather slow this morning, so it may be a broad-based as opposed to a bottom-up approach in today's trade. Banks is one you want to watch out for, and so is tech. Tech did gain quite well yesterday. Today could be a morning of profit-taking for that space. Mahima is now joining us with a few stocks that one should be watching out for in trade today. Mahima?
Right. So I'll start with Ramco Cements. Thumbs up for the company. The company has entered into a partnership with Hanjin Information Systems and Telecommunications. This is basically a subsidiary of Hanjin Group Korea, and this will enable their aviation organizations headquartered in Korea, and this will digitally transform their pillars like maintenance, engineering, repair and overhaul. The next in line is Welspun Living, where the board has approved the scheme of amalgamation between Welspun Home Solutions with Welspun Advanced Material. The next one is Borosil Renewables. Big thumbs up for the company. Again, Ministry of Finance has issued and imposed a provisional anti-dumping duty on imports of textured, tempered, coated and uncoated glasses. This anti-dumping duty is imposed on China as well as Vietnam, and this is a provisional anti-dumping duty which will be in place for 6 months starting from 4th of December. The next in line is Nykaa. Thumbs down for the company. Nihir Parikh has resigned effective immediately yesterday. He was the CEO of Nykaa Fashions. More information is awaited on this particular counter, but as of now, the stock might see some negative reaction. Lastly, Just Dial is on the radar because Maharashtra state GST authorities have initiated search operation in its Maharashtra's registered office. More information again on this particular counter is awaited, but the stock again could see some negative reaction. So these are some of the stocks to watch out for in trade today.
Okay, well, we'll watch out for all of these stocks. But Thanks, Mahima, for that. Let's try and focus on trade and get in Kush Bora, founder of kushbora.com, with us on the show. Kush, good having you. Thanks for joining in. The late hour trade volatility yesterday was something to take note of. And while we've seen instances of this enough number of times in the past, I think the last 2-3 years, because of the number of expiries being there, it's kind of gone absent. I mean, what did you make of it? And what should, let's say, traders do this morning on separate indices, on options, what have you?
Sure. First up, a very good morning. And you're spot on. It's only in the last few years that, we've not, I wouldn't say we've not seen, such volatility, but maybe far fewer instances of, such volatility. If you recall, if you go back a few years, maybe pre-COVID times when we had much lesser, choice in the, option in the derivative space, we used to call this the 3 p.m. move. Almost on cue, bang on, at 3 p.m., 3:01, you would see some sharp movement in, the Nifty back then, because that was the index to play with at that time, either up or down. But, that's what we used to call the 3 p.m. move, reminiscent of, those kind of moves. If you've got positions around the expiry, you might as well have, your stop losses in place, especially if you're writing options. If you're buying, it's perhaps, slightly different. Your, the extent of losses that you can bear. But if you're writing, then, you should have stop losses in place. That's the only, advice I would give for those who are playing the hero zero trade, as they call it, especially on the expiry day. Now, the
zero trade.
it's been quite a popular term in the markets, hasn't it? So. Now separately on the views for the indices Nifty and Bank Nifty, strong momentum. Nifty has finally crossed over most of the daily moving averages. The last one was the 50-day moving average, which it crossed over yesterday and closed above very comfortably. the momentum could well continue to 25,000, 25,100 levels that we discussed yesterday during the closing show. So fairly bullish on that. The PCR is also very comfortably placed around 1.1, 1.15, which also suggests there is room on the upside before we get to those overheating territories. However, that said, I would still suggest that a better strategy to approach these markets is a buy on dip strategies. And unlike the previous rallies, the last couple of days at least that we've seen, the markets have been kind enough to give you those dips and might actually continue to do so. So close to 24,500, 24,550 is where you go out and buy. Once the news is over, after the RBI announcement, then perhaps the volatility might settle down. Closer to those levels, the risk reward ratio will become much more attractive. So buy around those levels for targets of 25,000, 25,100, stop loss being 24,300. That's the view on Nifty.
That's the word coming in on the index. Dipin Mehta now also joins in. Dipin, good morning. Thanks for joining in. Dipin, what is the bet? Rate cut or no rate cut? CRR cut, no CRR cut? What are you betting on?
Yeah, good morning and thank you for having me on your show. Maybe a CRR cut, but certainly not a rate cut. I think that has been quite made quite clear in the past as well. And you see, inflation remains pretty much high. And many analysts feel that this dip in GDP, which we saw for the second quarter, was just transient because of many external factors, and that because of a good wedding season and a good festive season, we should see a pickup in the GDP. So I don't think you will see a rate cut unless the GDP growth rate slips significantly below what RBI and the other experts are factoring in just now.
If you get a CRR cut, how would the markets react to that in your opinion? Would that be enough of a trigger for the Nifty to return back to record highs?
That's a difficult one to answer because there are many moving parts over here. And the biggest issue for the Nifty to, go beyond its old highs and get onto a solid bull market revolves around earnings growth and valuation. And till we don't have a clearer picture that the earnings slowdown, which we have seen in this quarter, which was evident in the last quarter, June quarter as well, unless we don't see a turnaround over there and some cooling off of valuations, I don't think that investors should expect very strong rally. What has happened just now, according to us, is that we've seen a steep correction, 10% above correction. Then there's been a bit of a rally over there. And maybe you could have more of time-wise sideways correction as the markets kind of cool off, valuations cool off, and earnings, give some time to the earnings to catch up.
Okay, okay. Just a word, actually, before we take in stock ideas, maybe just talk about yesterday's key mover, right, Dipin? And just the way IT surged in trade. And I think ever since the November 4th announcement, IT has actually shed the instances of it becomes very weak, per se, from just the texture that the screen is showing. You've been very selective. Do you continue to stay that way, or do you believe it could be a rising tide which would carry all boats, large cap, mid cap, ERD companies, what have you?
No, I'd be very selective in software companies, and the kind of numbers which they have been showing, the large cap ones and a whole host of mid cap software companies, have been extremely disappointing. They are growing at low single digit type of growth rates. That's not sustainable. It falls well below our criteria for investment grade companies. From a stock market perspective, a good investment is something which can grow at least at 15%. Otherwise, how are you going to make the returns? And most software companies don't fit that benchmark. There are a few exceptions, of course, the likes of, I've said them in the past, Usual Disclosures, KPIT, Coforge, Persistent Systems. You could add Tata Elxsi, and an emerging star maybe could be LTTS as well. But by and large, I think, according to me, software companies are struggling. The large cap software companies are facing competition from these global capability centers. They may deny it, but the GCC growth has been phenomenal, much higher than the growth rates of the large software companies, solid double-digit growth rate over there. And it's fast becoming a trend as well. And then there is this entire looming threat about AI doing a lot of the coding itself. So I think we are seeing silent disruption taking place within the software services business, and it's going to be quite challenging. Also, these companies are of massive size, the likes of TCS, Infosys, HCL Tech, and unless they don't get 200-300 billion type of contracts, it doesn't move the needle a bit too much. So I'd be a bit circumspect and be very selective when it comes to software.
For good reason, Dipin. There's been no fundamental change or reason for investors to turn constructive on the IT pack. I mean, Trump's victory in the US has led to some form of euphoria, but apart from a weakening rupee, there's really been nothing that we've heard from the IT sector that could lead to a change in sentiment. But Kush, while we're at it, we're going to get into pre-open in a few minutes. What are your top trades? Would you recommend anything one could look at buying before policy at 9:15?
It's a tough one.
Yeah, it's a tough one.
Well, incidentally, my stocks don't have much to do with the policy, so safe on that front at least. Larsen and Toubro, the stock has actually been making steady gains over the last 3 to 4 sessions. There is a bit of a resistance around this 3,800 mark, which it has taken out yesterday and closed above that comfortably. So it may not be a big trading bet, but from a positional standpoint, that's one stock that you could very well consider. The volumes have also picked up on this one, quite drastically over the last, or not drastically, but comfortably over the last 3 odd sessions. Now the near-term targets for this one are 38.90 and 39.50, 37.70 being your stop loss. The second stock from the cash segment is Fact. This stock too had a very big run, on the last one of the days in the last 4 or 5 sessions, but has continued to build on to those gains as well. Hasn't really given up that. So which suggests that there is some delivery buying going behind this move. So again, from a near-term perspective, you're looking at targets of 1,060 and 1,100, and your stop loss comes in at 985.
KBC, Kush Bora calls are on your screen as you see it, not related to policy. Well, it's now time for an NDTV Profit exclusive. SEBI is set to regulate algo-based trading platforms with credit rating agencies playing a key role in validation. In addition, an exchange will oversee a critical data center for this process. Charu joins in with more details on this. Charu, what is the SEBI thinking? Quant becoming quite significant in this space.
Hi, good morning. So the regulator has been a part of several debates, discussions and conversations with a lot of experts in the market along with the exchanges as to what to do about regulating the algo trading based platforms. Now we've been told via different sources that the point where these debates and discussions were stuck was that whether a validation agency for these platforms should be overseen by a credit rating agency or by the National Stock Exchange. Now this seems to have been settled as the validation agencies is something that is a role which the credit rating agencies are going to undertake. Meanwhile, the exchanges are also going to be roped into these regulations, as one of the exchanges going to be given the responsibility of coming up with a data center that is going to collect all the required data for the validation process. Now whether BSE or NSE would be doing it is not clear. Either one of them is going to be given the responsibility. Now for our viewers, I would also like to explain that algo trading platforms are the platforms which give out strategies which are based on the past performance of the markets to give information about the future returns. Now any unverified information about getting future returns is something that SEBI stands completely against. In fact, recently the regulator had come out with a notice to all the brokers in the industry, almost all of them, over 122 of them, to reply to SEBI's notice and tell them why they are associated with an algo-based platform known as TradeTron. So a lot of action is taking place in this arena, and let's see when a proper proposal paper and a final circular comes out.
We'll watch out for this. Well, thanks for that, Charu. Well, regulatory scrutiny, action, rightly as well, has been the key hallmark in the last 12 to 18 months. Sometimes it's impacted sectors in a very bad way. A lot of these things actually work out well in the end. Let's see how this one shapes up. Okay, very quickly, the profit watch list before we take that break, and a few stocks that you should keep on your mind. And let's start off with the first set of stocks. So Harsha Engineering, it's a contract win of about 6 to 10 million euros, and therefore that's the first stock that you should keep an eye out for. Borosil Renewables, anti-dumping duty on select coated glasses, but effectively a space that Borosil is present in and therefore could do well. A reaffirmation of a contract win for Garden Reach Shipbuilders, as Samina highlighted. It's a reaffirmation, not a fresh win, but could still evoke reaction in the stock, so watch out for that one. RITES as a contract, however small it is, from IIM Raipur, and Canara Bank could be in focus because RBI's nod has come in for an IPO of a couple of its subsidiaries, and therefore the company may benefit out of it.
And a few more on the list this morning. Westlife gets an upgrade, or Goldman Sachs remains positive on the stock. Zentech gets Nuvama's approval, says that they see a 16% upside on the counter. And Ramco signs a pact with Hanjin Group Korea. Nyko, on the other hand, the current CEO, resigns, could be viewed as a negative for the stock.
We set you up for the day's trade. 30 calls before the markets open on NDTV Profit.
Jubilant Food above a 600 level on Friday.
Wipro can be first trade to buy
all commodities, but in that Vedanta looks good.
Our experts give you the top stock ideas to prepare you for the day.
ICICI Lombard stocks hit the first target.
It has given a very good momentum with good volume.
Don't miss the chance to make the right moves. Only on NDTV Profit, where winners are made before the bell rings.
When the whole day passes like a blur, the news just whizzes past, and you're trying to stay informed. It is our job to bring you news that truly matters. At Profit 360, we cut through the clutter. The Wall Street deals, finance and policy news that could shape your tomorrow. The newsmakers, the trendsetters, and the innovators. In 30 minutes, we've got you covered. So stay ahead, stay informed, and stay profitable with Profit 360.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
When the whole day passes like a blur, the news just whizzes past, and you're trying to stay informed. It is our job to bring you news that truly matters. At Profit 360, we cut through the clutter. The Wall Street deals, finance and policy news that could shape your tomorrow. The newsmakers, the trendsetters, and the innovators. In 30 minutes, we've got you covered. So stay ahead, stay informed, and stay profitable with Profit 360.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
When the whole day passes like a blur, the news just whizzes past, and you're trying to stay informed. It is our job to bring you news that truly matters. At Profit 360, we cut through the clutter. The Wall Street deals, finance and policy news that could shape your tomorrow. The newsmakers, the trendsetters, and the innovators. In 30 minutes, we've got you covered. So stay ahead, stay informed, and stay profitable with Profit 360.
Well, what, about an hour left? Hour and 40 seconds, okay, to be precise. Maybe a couple of minutes after that when we hear the RBI governor come in and then say whether he's cutting rates, whether he's cutting only the CRR or nothing at all. I tell you, if it is nothing, then the markets are going to see a bit of a pullback. We have a very packed house on the policy front. Some very sharp voices out there talking today at 10:30 a.m. dissecting all of what the RBI is saying. So I want to tune in for that as well. And of course, two very great voices to talk about what to do in trade pre and post, with some assumptions, of course, rolled in out there. Now, Dipen, I reckon, and excuse me for assuming here, but I reckon that you are not somebody who's going out and going lock, stock, barrel on PSU banks as a tactical trade. My question to you is, there is an uptick that has happened in the PSU banks anticipating a CRR cut. Let's assume we get one, and let's assume the policy is very dovish, and the RBI says that they will do whatever it takes to manage liquidity in the crunch quarter, if you will. Does that make PSU banks a good tactical trade, or would you still shy away?
No, Neeraj, I think that, first of all, our view on banking is neutral to slightly negative on the medium term. Short term, you could see a rally because of RBI policy. The reason for that view is that it's becoming a bit of a red ocean over there. And the kind of runway which the private sector banks had, I think, no longer exists. And a lot of catch up has taken place by a whole host of new generation private sector banks and PSU banks as well. Having said that, if you look at the last 2-3 quarters, the numbers which have come from the PSU banks, particularly the tier 2 PSU banks, they have been quite impressive, and they are comparable to the large private sector banks and other private sector banks as well. But the valuation gap still remains pretty high. So within your allocation for banks, I think it's time to go away from the private sector banks, more into the PSU banks. But as I said, I think overall view on the sector remains mildly negative because of the kind of mild disruption which is taking place, where CASA deposits are getting increasingly difficult because of other avenues of savings. And a lot of, I would say, competition has come into the sector. And when it comes to personal loans, credit card loans, those NPAs are really inching up, and that's not as great a sector. You could add microfinance to that list as well. Is not as great a sector as it was maybe a few years ago.
Well, that's pre-open trade playing out. PSU banks still trading with a slight positive bias. Early, of course, it's only 9:01. We'll come back and take stock of this. Dipin, another sector that's been having good days and bad days, but rather more good days than bad, has been the defense sector in the last couple of weeks post-Maharashtra election outcome. Do you feel like there's any opportunity here? Because the space has largely been transient in nature in more ways than one. Not too many institutions have made money on defensive stocks. But going ahead, does this trade merit an investment?
Maybe at corrections, definitely, because a lot of the defense PSUs are sitting on very decent order book position. Execution also is improving over there. And investors who have missed out on buying these stocks in the last 2-3 years, such as ourselves, I think a correction is a good opportunity for getting slightly, at least equal weight within the sector. With usual disclosure, I think Hindustan Aeronautics Limited, Bharat Electronics, I can see that on your screen, and Bharat Dynamics are 3 companies that we feel more positive than some of the defense shipbuilders.
Okay, what else? I mean, we should get the top brokerage call in moments from now, but one more thing that we should keep an eye out for is Edelweiss. The stock has had a really good run in the recent past, the last few days. And there is news flow today that their subsidiary, the wholly owned subsidiary, has filed a DRHP for an IPO. And that could spur further interest on the stock. So first, technically, Kush Bora, I mean, does it look like it can have more momentum on the upside?
It does, and if you've seen the volumes on this one, they've picked up. What I'm more interested about is the fact that 130, that was the near-term resistance, that's been taken out yesterday. It's had a good run, but yesterday, if you see, there's been a mild round of profit booking, if we can even call it that, because it was more flattish than anything. So I think there is more room on the upside. For me, the immediate target on this one comes in at 145. Once that is taken out, you're looking at a 155 as well. So yes, you could consider this for a long trade. On the downside, your stop loss comes in close to the 123 mark, whereas is where, where the support zone lies. So from a risk reward perspective as well and a momentum trade perspective, Edelweiss does look like a good long trade from here on.
Okay. A lot of these capital market plays are now becoming more diversified, right? Though Edelweiss now, per se, quite a different beast than what it used to be when it had the full broking business, etc., etc., etc. But still, any thoughts on Edelweiss? And if not Edelweiss, any other financial services play linked to capital markets that you might be constructive on?
See, Neeraj, first of all, any capital market related investment you're looking at buying, do keep in mind that you are buying at a high. And, capital markets are cyclical businesses. And the best time to buy, wealth managers or stock brokers, exchanges, is when there's a bear market or when there's a steep correction and there's listless activity within the IPO and the secondary market as well, which is not the case just now. So it's like buying when the entire sector is in full bloom, and that means that returns going ahead may be slightly compromised. So I would just hold my horses over there. It's a great long-term industry, especially the wealth managers and some of the stock brokers. I would add even insurance companies to that list. A great long-term businesses, 5-10 year kind of runway is fantastic as the wealth effect starts to take place. But I just want to wait and watch, buy these stocks when there's as I said, when the activity level in the capital markets is at a low key and these stocks have corrected, keeping in mind that kind of a situation.
Dipin, what about Swiggy versus Zomato? Either or neither?
No, we, as a disclosure, we have an investment in Zomato and it's worked out very well for us. And I think that if you missed out on Zomato, you could look at Swiggy. It is available at a discount. But I'll tell you one thing, when you like a sector, buy the leader. That always works out. These tier 2, tier 3 players in that sector will always appear to be cheaper, but the best returns will still come from the market leader. So maybe at corrections, you could look at Zomato, and that's one high growth sector within the economy. So you should have some allocation to it.
It's a high growth sector and you should keep an allocation to it. Kush, you want to come on in? I know not too much on Swiggy, but Zomato's now been around for a while and that's in the future space. Any long trades on either of those?
So we've been discussing Zomato, I think, since 250, 255 odd levels, and the same view, which is 300 was, close to 300 was the high for Zomato. That was our target, very close to that level. Now I want to see whether this is taken out with some gusto or there is some consolidation and profit booking that comes around, at this level. Broadly speaking, very constructive on this one. For targets of 315 and 330, you could still remain long. The only thing is you might just want to see for a day whether, this 300 mark is taken out or it just consolidates. That's the only caveat. But on the whole, as I said, the view is bullish for Zomato. Your stop loss on this one comes in at 285, 288 kind of zones, which was also yesterday's low.
Well, that's the word coming in on Swiggy and Zomato, and both those counters looking okay in early trade this morning, but it's just past 9:05 and it's time for a brokerage calls. Goldman Sachs maintains a buy rating on Westlife over the target of 1,045. Harsh standing by with more on it. Harsh, what does Goldman have to say on Westlife?
30% plus upside. No increases in target price. They've obviously had their conference, and on the back of that, Goldman Sachs has put out their takeaways. Some of the key ones is that H2 will likely see a good recovery where the same store sales growth is concerned. Mid-single digits, so a tepid kind of a recovery, but a recovery nonetheless for someone like a Westlife, and that's going to likely hold the key. Operating leverage will also start to kick through along with same-store sales growth, so that will again hold the key even with regard to operating leverage, as well as percolate down on numbers therefore. Management is confident that they will outperform peers. So mid-single digit kind of growth, but an outperformance with regard to where peers are concerned. Gross margin impact in Q2 was temporary is what they are suggesting. And they've also had positive interventions with regard to their menu. So McDonald's likely to tweak menus a little bit is the sense that you're getting. Soft base will likely aid same-store sales growth. And that's going to hold the key essentially. 1,035, 1,045 being the target price, a 30+% upside from here.
30% or 35% upside on Westlife. The stock is up 2.5% in trade. A few more names that will be potentially in focus today will, of course, be backed by news flow. You've got a couple of them, like I said. So coming back to Khush on a couple of trades that we should be tracking this morning. I don't know whether Neeraj just talked to you about IT, but if you haven't, maybe a quick view on IT, and I'd like to throw in BSE as well because it had a good run yesterday.
So BSE continues to shine on. The kind of move that we saw yesterday was a very impressive one from a technical standpoint, especially because the 49.75 resistance that it had attempted thrice in the last about a month and a half, that was taken out, and and how. So I think this momentum could continue. It's despite the kind of move that you saw yesterday, it's still some distance away from overheated territories. So don't be surprised to see this one moving closer to 53, 50, even 5500 kind of zones before it kind of has any overheated signals on the technical front. So very bullish on BSE, for now, have been for some time. The stop loss on this one comes close to the 4900 mark. Now, as far as IT goes, it's good to see the participation coming from the big names like, TCS and Infosys. I don't think all of them are in the clear yet. Some key resistance levels taken out, but not with that kind of big move. So if I were to favor, I would still favor the likes of LTIM, Persistent, and Coforge. Coforge is fairly heated right now, so I would wait for a decline to get into that one. But Persistent, LTIM still better placed. And among the big names, we still continue to like HCL Tech. So preference still towards the mid-cap names, in the IT space. The large boys, as I said, haven't really made that big a dash, but the fact that they're consolidating with a positive bias, I would take it as a positive sign for the IT, for days to come.
Okay, well noted. Now, just a few stocks which I think in the pre-open session are already showing some moves. JK Cement. I don't know if it's this ex-dividend or something, but it's showing a sharp gash. Okay, no, maybe not. We'll wait for these rates to change a little bit, but the pre-open seems to have settled extremely flat and not too much otherwise anticipated, so bear that in mind. The other small bucket, Dipin, that is looking interesting is a lot of these companies which have raised some funds in the recent past and are looking at some expansion plans as well. So Bharat Forge, this week has Bharat Forge, this week had Wonderla, PG Electroplast, etc. And all of them have their expansion plans laid out, right? In PG's case, that two-wheeler and battery and two-wheeler manufacturing facility. In Bharat Forge's case, of course, a bunch of other plans. What did you make of some of these fundraisers? Anything that stood out for you?
What can I say? There is hardly any company which has not
raised funds.
Zomato also raised $1 billion or thereabout. I mean, this is great times if you're a company with a decent track record. You can just keep on raising money, that cash, then you can justify spending it on whatever you want to spend it on. It's cheap money technically, yes, but it does dilute the equity. But look, the valuation which they are selling at it is quite amazing. And I think it's fine. I think these balance sheet qualities of these companies will look up. End of the day, when you raise money and you're going in for expansion, execution is the key aspect. And then after you have set up the capacity, what is the demand scenario? What are the industry dynamics? Those also play a key role, because it's easy to set up an expansion plan or any facility, but then it has to be fully utilized for it to start contributing positively. Otherwise, it starts affecting the return ratios and the earnings per share and a lot of other financial ratios as well. So let's see. I think it's not that any of these stocks are really cheap or attractive, and one should go and rush to buy them. But yes, definitely, I think some of them, their expansion plans will click, and over a 2-3 year period, it could provide another growth phase for these companies.
Well, that's the word coming in from Dipin on all those stocks that we've just highlighted and talked about. Another space that I guess is worth or merits a quick conversation is metals. Dipin, is there any reason to buy into this SPAC? I mean, it's been a clear underperformer, and the piecemeal approach coming in from China is also not doing much to help the space. They have decent days, they may have bad days, but nothing structural so far at least. Would you want to invest in the SPAC ahead of maybe a structural change, if there is any, even though that could be a little far out?
No. Generally, we are very negative on commodities. Is that question for me?
Just for you.
Oh, sorry. So generally, we are very negative on commodities, and especially at times like this when they are trading at such rich valuations compared to their historic past, it doesn't make sense. And they've not been great value creators also going forward. Volume growth also has been pretty tepid because of the slowdown in the economy which we have seen. So I think it's best to stay away for the time being. If you want to buy any of the steel or aluminum stocks, you have to buy them when they are at absolute distress valuations available at or about 1 time book, 1.2 times book or so, which is not the case just now. So I would put a hold on all of these investments. I think there are better opportunities over there in some of maybe the new age companies, maybe pharmaceutical companies. Selectively, there could be a few opportunities.
Dipen, I'll have to come in here because the markets are just starting off. Stay on just a moment. We'll take final thoughts with you. But here's how we're starting off, and nothing otherwise anticipated. It has to be a flat morning. It will be a flat 45 minutes. I'll really doubt there'll be a remarkable up move or a massive down move, either direction, really, ahead of what the RBI governor has to say about the MPC decision. Mid caps, small caps, maybe a tad bit more, but I would really surprise if even they have some very exaggerated moves. No, not really. Get the heat map up on the screen for whatever it's worth. Maybe there are individual movers here and there, metals maybe here and there. Trent, by the way, after yesterday's 2.5-3% uptick, has gained another couple of percentage points. So that is making its presence felt. A little bit of ITC, ICICI Bank holding up. So that's the heavyweight, right? The ICICI Bank and ITC bucket is the heavyweight which is helping the index stay higher and thwarting the kind of losses that might be coming in for a TCS, SBI, etc., HDFC Bank. So that's the long and short of it, Samina. Practically nothing to report from the index, save for Trent though, because after the late surge yesterday, it's building on another couple of percentage points here.
Back at prices that we haven't seen in a while, 7,000 again on Trent. I mean, it was only a few weeks ago when it had threatened and broken sub 6,000 and 5,900 when a couple of marquee names had already invested in the stock. But looking good on Trent, but just like Trent, which had a later move, BSE continues its up move in today's session. Across the broader market universe, the picture is also as flat as it gets, but no surprises there. This is largely a trade that is expected. Traders probably have hit the snooze button this morning up until the RBI governor goes into his speech. Your top gainer is Westlife after there has been that upgrade coming in with a 35% increase in target price by Goldman Sachs. The stock becomes the biggest gainer on the Nifty 500, up 4.5%. BSE is up 3.5%, so there's no stopping this one. It seems to be playing on the trend that we saw yesterday. Record highs on BSE yesterday, another 3.8% added to the counter. REITs, I mentioned that with a big order, not a big order win, a significant order win in that sense, 148 crores coming from IIM Raipur. The stock is seeing an up move of nearly 4%. Harsha Engineers, they've signed a long-term pact. Let's see what they are getting up to. GPT Healthcare has entered into an MOU. Harsha Engineering is up 2.5%. GPT Healthcare is up 1.5%. Garden Reach, while it has only reiterated the order and contract of construction and delivery, the markets are giving it a thumbs up flat, up about 2% in trade. ITI looks good. Timken India, Praj Industries, fertilizers continue to trade higher. Yesterday also, the day started out with fertilizer counters seeing traction. Today seems to be no different in the early hours of trade. On the sell side, you have quite a few counters that are seeing some pressure in trade. Angel One is down 3%. HEG continues its downward journey after a fall yesterday. The stock is trading lower today as well. TBO Tech, Phoenix Mills, Whirlpool, G, Verenova are some of the other counters that are seeing a downward pressure. Capital market players are trading weak, so from your 361 to Angel One, there is a little bit of selling that these stocks are witnessing in early minutes of trade. So all in all, it's a flat morning. There's no reason to be concerned about. Suraj Estate was the stock in news yesterday, 6% up move on Suraj Estate. Ramco Systems, take a look at how well Ramco is doing as well, 7% up move on Ramco. So Suraj, Ramco become your top gainers from the broader market universe. Not Ramco Cement, Ramco Systems. If we can get that one quickly up on the screen, is up about 8%. HEG continues a downfall. BSE continues its upward journey in trade. Very quickly, Kush, what's the trade on trend at 5,900? Traders were unwilling to touch it at 7,100. What does one do?
Well, you wait. And if you've got a position, then continue holding, but you wait if you want to initiate a fresh position, because now it's hitting that 50-day moving average resistance. Plus, if you go back sometime in August, September, this is the zone, 70 to 50, where the stock had spent almost a month's time before actually moving to higher levels. So some relief, some supply pressure might come in at those levels. So existing position, continue to hold on. In that case, your trailing stop loss comes in at 68.50. But for fresh positions and momentum, you wait for 70 to 50.
Dipen, any thoughts here? I mean, on this space at large. So Trent, yes, won and super successful, and you probably still have Star Bazaar to perform. But I mean, there's a lot of talk of how quick commerce and the online platforms are eating into organized retail. Organized retail is trying to eat into their pie, and it promises to be a hyper-competitive space wherein all of these guys want to do what the other end is anyways doing. Great for the consumer, but is it good for the investor?
I think that at these valuations, it doesn't make sense whether it is a Trent or any of the other retail companies. A few months ago, we were very positive on specialty retail companies, the likes of Metro Shoes, Campus Activewear, Go Fashions, Ethos. All of these, showed a lot of promise, but then we had a slowdown in urban consumption, and these stocks, the quarterly numbers were really quite disappointing. I'm keeping an eye on them because they are great growth categories and they have got solid competitive edge, good quality balance sheet, and a runway for growth in terms of expanding the distribution. But it's not that these stocks are also really cheap. So let's just wait and watch. But I think that retail is something, which you can never be, ignore for a long time, because end of the day, consumption is a very strong investment theme in India. And that will always, have to keep it in mind.
Okay, so keep this in mind. Too expensive. Dipen, the argument holds for the online platforms as well. Sorry if I missed it, but the Zomato, Swiggy's, and maybe some of the others coming up, that argument holds true for them as well?
Yeah, absolutely. I think that, anything which is consumption facing, you can never, kind of let it out of your eyesight in India.
Let it out of your outside. Just let's take a look at V2 Mart as well, and you've got Vishal Retail as well that we're listing on the exchange. Of course, different market segments, but V2 Retail also up 3.5%. So like I think Dipen is saying, consumption is a space you can't get your eyes off. Dipen, very specific question. At the current price and at the current juncture, apart from this policy action that we're eyeing today, HDFC Bank or SBI to add to your portfolio?
If you don't have either, and there are very few investors who don't have any of these stocks in their portfolio, I think everybody in India has got HDFC or SBI. But between the two, I'd go with SBI.
Yeah, I guess if not directly, through funds at least, an HDFC would probably very likely be in your portfolio. Kush, now this is as expected. I thought tech would be seeing some consolidation or profit taking as expected in trade this morning. Does this become an opportunity to go long on IT for next week? And if yes, give me one stock in the IT pack that you would initiate a fresh long on, limited downside, but a good sort of return in the next 3-4 days of trade.
Well, I think, some profit booking in the IT space is par for the course. So if you're seeing them flattish, that is also something that you would perhaps willingly take, because you want some consolidation. A one-way vertical rise, as you said, without any fundamental backing, could perhaps spell some trouble for these names. But that said, one stock that we like remains from the mid-cap space, which is LTIM. We've discussed this in the past for targets of 60 to 50. Those have been hit. Even today, the stock is up beyond far beyond what it has done previously. So comfortably past those resistance levels. Now for targets of 6,500, and once that is taken out, even 6,700, you could consider LTI Mindtree. On the downside, your stop loss comes in close to 6,200. That's where the congestion zone is. So I would still prefer the mid cap names in the IT space as compared to the large caps.
That's the tech call coming in. In fact, barring TCS, most of your tech stocks are trading flat. So there's no massive up move on them, but they aren't doing too badly either in terms of trade. But Infy and TCS were your top gainers in the session. Well, I think we've highlighted a whole bunch of other stocks as well. But just coming back to you on trading activity, Kush, anything else that you've identified in the first 5-6 minutes of trade that looks good? Maybe buy today, sell today? Or buy now and sell at 10 o'clock?
I think I left my crystal ball at home today.
Oh no, it's Friday. You should bring it along.
TGIF. No, we've got a call on Jyoti CNC that we initiated yesterday. The stock opened kind of softish, but has now gained 0.75%. Good moves on this one in the last couple of trading sessions. Again, volumes were quite crazy, almost double of the monthly volumes. The monthly average volumes that we've seen. So could continue on the upside. We've got targets of 1390 and 1420 on Jyoti CNC, and 1330 is where you place that stop loss. And just as a quick update, fact FACT has had a good start, about 1.5% of gains could continue, and our targets on this one remain 1060 and 1100.
Take a look at Zentech. There's an upgrade that came in on that counter as well. Westlife, of course, reacting well to Goldman's upgrade. Zentech and up another 4%. This is interesting, Neeraj. 4 days after the promoter offloaded about 1% stake, the counter continues to do well. But I think the bigger story here is the number of licensing packs that they've signed. So they've had 20 agreements that have been signed in this calendar year, 10 of which were in this financial year. And from what I understand, the big play now for Zentech becomes the US market, where they've been left, right and center signing deals.
Yeah, I mean, and I think, which is what the Nuvama note today also stated, that they've signed an MOU with Florida-based AVT Simulation to break into the US defense markets on the sidelines of the National Training and Simulation Association. Now, some of the companies, I think that note says that this is the first of the many inorganic growth moves which come into sight. And I wonder if a clutch of these defense names have these offshoots which they'll now get into, because now there is a basic mass that the companies have in terms of domestic order flow, which was missing in the past, right? Always patchy order flows, never consistent. Now there's a consistent order flow, gives them the heft to be able to do multiple things. So which was the interesting piece, I thought, in all of this.
And I think that's what's driving stocks like Zentech higher this morning. But for whatever it's worth, Neeraj, barring this one, I haven't seen very many looking at the international marketplace, and neither have I seen very many brokerages calling out on some of these tech stocks.
But export orders, right? For example, Solar, recently the 2,000 crore order was the export order. So some export orders have definitely come in for these companies, right?
Yeah, I guess an uncertain world is always good for defense stock, even though Ashok Atluri said peace actually works better for him because he sells anti-drone. For now, whatever it's worth, the stock is up 3.5% as we see it. Dipin, you want to come in on this one? Defense, I talked to you about it, but very specifically on Zentech. Is that on your portfolio?
A great company, missed it. I had tracked this company almost 20 years ago as well. That time it was floundering, but now see how it has flowered, been a multi-bagger and going from strength to strength. So these are typically the companies you want to buy in a bear market, in a steep correction, if they're available 20, 30, 40% cheaper or so. And these things happen as well. Those are good entry points. The long-term fundamentals, the long-term dynamics are great for Zentech. And now the kind of decades of effort they have put into getting the technology right, getting the registrations correct, I think they seem to have paid off really well for the company.
Okay, well, point well noted. Sometimes it becomes difficult to buy a stock after you've seen it maybe 80% lower, right? And then it moves so much in a period of 12 to 18 months. Point well taken. Dipan, Kush, thank you so much, both of you, for joining in today and giving us your thoughts. Really appreciate your time. Well, that's the view on some specific names which are flying this morning. But a pack which should be on your focus is oil and gas, and particularly the city gas distributors, which is what Citi seems to be saying. And Agam Johnson with the rationale. Agam, what has stood out for you in that note?
Right, so in the event of the fact that we've seen so much correction in a lot of these city gas distribution companies, well, Citi is of the opinion that there could be some potential positives in store, and because of that, in fact, they do see a significant upside in a handful of these names. But I'll start off with the potential catalyst events for city gas distribution companies. That would involve a potential relief for city gas distribution expected on GST Council. In fact, they are considering a proposal to bring it under GST. Moreover, the government lowering excise on CNG with in the union budget is another expectation, another hope that could come through, and in that case, it certainly would be a very big positive for City Gas. They're also expecting a sharp earnings recovery from OMC specifically, and besides that, in the near term, upsides could be, of course, contingent to government action. But because of some of these expectations, well, City has in fact gone ahead and, well, it's rating about a 16% upside from current market levels to something like an HPCL. GAIL and IOCL are also seeing a substantial upside from current market levels. But when it comes to City Gas specifically, they're also looking at an upside of as much as 25% for Indraprastha Gas and near 30% upside for MGL. So these are the two names to watch out for from City's point of view.
Thanks for that, Agam. That is City in India oil and gas pack. The sector is not looking as bad this morning. Remember, crude prices are also trading flat. Supply cuts have now been, of course, pushed ahead, expected in the second quarter of this financial year. One stock that's got all our attention has been Wonderla. They managed to have a very successful QIP closure on Wednesday. The company has raised funds to the tune of 500 or 600 crores, which we'll confirm with the management shortly. This morning, the stock trades flat, but remember, it's in a very exciting space of amusement parks in the south. Arun Chittalapilli joins in now, MD of Wonderla Holidays. Arun, good morning. It's Amina joining in. Good having you on the channel today. First up, congratulations. You had a very successful QIP. You want to talk to us about it, talk to us what quantum of funds you've raised and how you would be utilizing these funds.
Thank you, Samina. Thanks for having me on the show. It was a pleasure meeting you as well the other day. So we had raised about between 500 and 600 crores. The exact amount is still being finalized, but it'll be close to the 550 kind of number. And this money that we have raised is going to be used for our upcoming project in Chennai mostly. It's a 500 crore investment that we are doing in Chennai. So this will be used mostly for that. And also for expanding our existing other amusement parks in Bangalore, Kochi, and Hyderabad. So this is what the money is going to be used for.
Arun, good morning. Neeraj here. Just trying to wonder what the outline of or what the business plan could be like, let's say, for the next 3 to 5 years. And I actually even want to get a sense from you of the really long term, because a lot of people are now saying that, I mean, in some sense, you have for a bunch of products, global substitutes. You can't substitute amusement parks. So that's the long-term story. But first, the short-term story. What do you do here on? Hopefully, we'll not have another COVID-like disruption, so it's smooth, uninterrupted business flow. How do you see business for the next 2 or 3 calendars?
Yeah, so we feel that amusement parks are going to be a growing industry in India, mainly because there is a huge dearth of good quality social infrastructure like amusement parks, public parks in our Indian cities. And we feel that because we have such a young population and such a growing young population, we need to be present in at least in the major cities. Our plan is to be present in the Tier 1 and Tier 2 cities of India. We are currently in 4 cities. We want to be in about 10 cities, as soon as possible. Can't give you a timeline on that, but currently we are in 4 cities and we are working on our 5th project. So we are in a way trying to build our amusement park capabilities and trying to spread across different cities in India. Our focus is mostly on Tier 1 and Tier 2 cities, so basically capital cities of India, where there's a large catchment of people and a young population. So that's what our broad philosophy is about the industry as such.
Okay. Arun, just one follow-up here, though. In the conversations with investors who have subscribed to the IPO or the QIP currently, or in general when you meet the investing community, is there a sense that investors are warming up towards a business like this in India and willing to pay higher valuations as well? I'm really trying to understand from you, because you would be the first, you would have the first-hand info, simply because there are no comparables out here, right? It's not an industry which has got peer set on which you can compare. So just wondering. Okay, Arun, just hold on. Just cutting across, just showing before you give the answer. This is the Reserve Bank of India governor arriving at the RBI headquarters, and in about 27 minutes from now, we'll hear from the RBI governor about what the MPC decision is. Remember, this is the biggest news of the morning, or will become the biggest news of the morning, arguably for the weekend as well. So bear this in mind. But okay, coming back, Arun, to the valuation question that I asked you.
I think valuation is a function of the market that we are in. So I think a lot of people all over the world see India as an emerging, growing market, and I think that reflects our valuation. And even for our industry, it's a nascent industry, it's a growing industry. Unlike in the West, where it's already a tenured, it's already a saturated market for amusement parks in the other countries. Whereas India, like I said, it's still a very underrepresented. There are not too many organized players. It's still a growing industry. So I think the valuation kind of reflects that. If you ask me, that's what I feel about it.
Right. Arun, your first half of the year was probably quieter than what the expectation is from the second half of this financial year. Now, this business, from what I understand, may be seasonal in nature because holiday season, winter season, may be times when kids visit amusement parks a lot more. What are we expecting in terms of revenues going into the next half of this financial year? And also, more importantly, over the course of the next 2 to 3 years, do you see this business change from cyclical or seasonal in some ways to more structural all year round kind of revenue?
So an amusement park business is literally a play. You build a park and then you expect people to land up every day. So that people actually have to show up, and there are various hurdles for that. As you know, there is seasonality in your business. There is climate events that can be disruptive. There could be exams. So all these affect the footfalls in our park. So I don't think the nature of going to an amusement park is going to change materially. So I think it will continue to be cyclical and kind of unpredictable in its nature. But what we are seeing is that there is growth and there is demand for this kind of an activity in large Indian cities. And people want to go out and experience new things. And we are not a high repeat kind of business. People don't come to an amusement park every weekend or every other weekend. It's something that people do for a memorable day in their lives. So it's a low repeat business. So we do see growth coming into this sector, in this segment in India. And we are kind of bullish on this sector. Some of the methods that we can do to kind of mitigate some of this is to have more group footfalls and also pre-sale tickets. We are doing both, and we hope that the growth trajectory continues.
Also, as compared to global peers, I understand that it's for Wonderla specifically, capex may not be as high as some of your global peers. Correct me if I'm wrong there, and also more importantly,
sorry, I lost you there.
I said what I want to understand from you is how high is capex for you as compared to some of your global competition or peers in that sense, and also what are break-even timelines, right? A chunk of the money you're raising in this QIP or have raised in this QIP will be directed to the Chennai amusement park. When and how will this break even? So what is the revenue flow in that sense?
So our Chennai park will be operational towards the end of next financial year. We expect roughly about 8 to 10 lakh footfalls in our park in the opening couple of years, and it should break even in the first year itself. But at the PAT level, it will break even in year 4 or year 5, depending on how the footfalls grow over the years. But at an EBITDA level, it should break even in the first year. That's the kind of expectation we have for Chennai.
Yeah, you did mention that you're looking to move or of course expand beyond the south market, right? I believe states like Madhya Pradesh, Uttar Pradesh, Punjab are on the map. Do we see this becoming reality in the next 2 to 3 years, or this is more of a 5-year sort of plan?
It's a 5-year plan. I think we want to, we want to expand to other cities, but these are large capex, large gestation projects. So it's not easy to, get a park up and running within a couple of years. It takes its own time. But yes, we are confident that we should be able to expand to other cities going forward.
Got it. Arun, just wondering, there are analysts who track you who say that your per plant capex and therefore the IRR or the break even is much lower relative to global standards. Would that be true? Would you have some comparable numbers that you could share with us?
Yeah, so Wonderla believes in keeping its capex relatively low compared to global peers. The way we do that is we design our own parks and we do a lot of the work in-house instead of contracting global companies. So we make a lot of the stuff in India, and that helps us become competitive and keep our capex relatively low. So that's something that we do consciously over the years.
Okay, but no numbers per se, but it is lower than global comparables is what you're saying, right?
Yes, I mean, I think we, yeah.
Okay. Okay. The other question, Arun, is around growth. Now, you've given a clutch of figures around what could happen as a result of this capex, when do you break even, etc. What about growth rates per se? I mean, when I look at what you've done, let's say FY23, about 430 crores, you grew about a 10-12% growth in FY24. Is that the benchmark or base rate that one should anticipate out of your business for the next 3-4 years? Or could it actually expand with the number of parks moving up? I mean, is there a J-curve effect, or is it a linear 10, 12, 15% growth story?
So the linear 10 to 15% growth will continue from our existing parks, and that's what we are hoping to do. The jump in growth will come from our new projects like Chennai and whichever other parks we kind of sign up on. So we expect to grow faster than the 10-15% at a company level, because we will have new parks coming into the fold.
This is linear year on year, more than 15% growth, or is there a step up year based on when some of the parks are coming on stream?
I think the FY27 we will see a step up because Chennai will come on stream. Till then, I think we can expect a 10 to 15% growth. Yes.
Right. Also, before I go back to talking to you about expansion for the next 5 years for different states, will you come back and do an equity fundraise? Because I'm assuming most of what you're raising right now will go towards Chennai. Once you complete Chennai in financial year 2026, my question then is, how do you expand into Madhya Pradesh, Uttar Pradesh and Punjab? Would you return back to the markets for equity, or would you look at going into debt or internal accruals? Getting a sense of how healthy the cash flow is to fund these 1,500, 2,000 crore upward of expansion.
See, our business already contributes roughly 200 to 250 crore of cash flows annually to us. So that money, that internal accrual, we will be using for also future projects. We are not looking at any further equity dilution. This is happening because we are just finished opening our new park in Bhubaneswar, and we have done we are doing another large project in Chennai. So because of that, we have done this fundraise. We are not expecting to do any further equity dilution. We might take on some debt, if new projects come, but that's not immediately.
You also interestingly have resort offerings, right? And you've had success with the 84-room resort in Bangalore. Copy paste on that, would you look at expanding into the hospitality space more, maybe constructing hotels at their resort parks like you have in Legoland world over?
Yes, so that's a plan that we have as well. Our resort in Bangalore is 84 rooms, like you said. We are expanding it by another 40 rooms, and that should be ready by the end of this year. And part of our QIP proceeds will go for that as well. We hope to do that in other cities going forward, but not immediately. We are waiting for Chennai to come on stream, and then we will plan resort expansion as well.
Arun, any merit in having these resorts attached or connected to the amusement parks? I've not been to the one in Bangalore, hence I'm asking you to give us a sense of that. And also, what sort of ARPU's growth are you working with there?
Yes, of course. We do feel strongly that resort business is kind of allied with the amusement park business. As our footfalls grow in our amusement parks, we definitely need to have resorts around it, like you see globally. And we are also expanding our resort offering in Bangalore, like I told you just now. Our ARPU growth has been also healthy. I think we grow between 8 to 10% in our, ADRs for our resort business as well.
Arun, just very quickly, so this 10 to 15% growth rate that you told us about, that includes revenues that could come in from resort properties, or that's over and above?
No, that includes resort. And right now, whatever is there is including the resort as well.
Got it. Okay. Well, wishing you all the best for this and more. Keep on giving people great entertainment days. Arun, thanks so much for taking the time out and speaking to us.
Thank you so much.
Thank you, Arun. We'll see you soon. Have a good weekend, and congratulations again on a successful QIP closure.
You know why it's an interesting business, Samina?
Because it's for kids and it's an amusement park, and actually even for adults.
and in India, right? I mean, cities are packed. There are few avenues. I mean, people say about going to theaters all the time, right? I mean, this is a great thing. We haven't had, even in a city like Mumbai, right? There's SL World, which has been there for ages. We haven't had too many others. I mean, Imagica is a distance away. I mean, it'd be great to have amusement parks as an entity built out in the country all through and through, the way we have in some of the global centers.
Yeah, and I think what happens with the iMagicas and Wonderlas of the world is that it's not a very competitive space, because while it might be relatively low capex, the fact remains that it is still high capex when looked at more objectively in that sense. But for what it's worth, it's expected to be a good quarter, seasonally a strong quarter for an amusement park such as Wonderla, on back of holiday season, Christmas and New Year. Their resort business is doing well. They are looking to increase footfalls. Chennai, of course, becomes an important amusement park that they would look to launch in the next financial year. Also interesting that they are expected to break even in the year itself and break even on PAT in 2 years out. So all in all, I think good company, good response to the QIP. We don't know what the institutions are, but it was well subscribed from what I understand.
Yep. Well, and that's Wonderla for you. By the way, just before we get to the next management, Suraksha Diagnostics, the subscription wasn't the healthiest, and shows settling in almost at 438, so flat listing expected out there. Okay, the next management, and they have a news flow to themselves as well, does Quick Heal Technologies. But let's get in Vishal Salvi, CEO of the company, to talk about the news flow, but also about what's happened in the recent past. Because Vishal, good morning, Neeraj here. We didn't get a chance to talk to you post your numbers, and I mean, when the numbers came out, you could argue that when I look at it sequentially, it seems like what you had done in June, it was a repeat. But I think people got used to what you had done in the 3 quarters preceding that, right, on operational metrics, etc., etc. And therefore, these last 2 quarters have been something that may have disappointed investors. How do you look at what's happened in the first half? Were there anomalies there, or is this a phase which you will have to tide through because you're making investments, or what have you?
Yeah, I think great to be here, Neeraj. And I think we have always said that we are investing and we are doing a significant pivot from our consumer business, and also getting big time as far as our enterprise business is concerned. We've always said that we are currently investing, and then we are looking at a long-term plan as far as our enterprise products and solutions are concerned. I know we had a sort of sluggish last quarter, and that's largely because of some of the government deals that we were working on got deferred, not really something which we lost, but so we feel comfortable that we are in the right direction, and our focus is more in terms of long term, and something which we should start seeing a momentum for our enterprise business in the next 9 to 1 year horizon.
Okay, what happens in that intermediate period, Vishal? I mean, to numbers by and large, let's say reportage, right? Because the street, because you're a listed entity, right, is concerned or is obsessed with what happens every single quarter. And you are, of course, building it for the longer term, but what happens in the intermediate period?
Yeah, I think we've kind of always said that we will focus on profitable growth, and we have delivered that for last 5, 6 quarters, and we will continue to do that. And I think all the investors that we're talking about feel very comfortable. They, in fact, like our approach of being long term and not something which we are working for quarter on quarter. Having said that, we obviously are focused on looking at what we can deliver in short term, so that the confidence of our investor remains. But at the same time, we are, constantly sharing with them how we are investing and how we are releasing our solutions. And that timeline we have kept, in terms of launching some of the announcements that we had done 4 quarters back in terms of the launches that we'll do. We have been able to meet those expectations. So I think if you look at the cybersecurity market, obviously from an Indian context, we are the only, sizable cybersecurity product company from India. And so, I think the investor community is also trying to understand really how the business model works. But, we are explaining and, getting them onboarded on that as well. But we are, it's something which, it takes time, for any product fit to come into the market, and we have to remain invested, especially in cybersecurity, because, we are constantly working against the threat actors who are constantly changing their approaches, and we have to change and dynamically adapt to their, attacks. And so we have to, keep on releasing new updates and new features and functionalities. But we are fairly confident and happy that the way we are right now in terms of our product roadmap.
No, which is fine, and I'll come to that. But to just get clarity, Vishal, again, and like I said, I repeat, you're building this for the long term, and it is great. But in the intermediate period of the next 12 months, do numbers kind of mirror what you've done in the first half, or could there be an improvement?
There is going to be an improvement for sure. And, we are constantly improving our pipe. So pipe is looking better. So and generally, our second half has always been better than our first half. So we do believe that we will have a good, quarter on quarter improvement in terms of our performance.
Okay, but difficult to pencil in. Sorry, just before I come to Seqrite, I hope I'm pronouncing it correctly. But difficult to predict if you move in from the 4-5% EBITDA margin range to the double digits which you clocked in the previous 3, right? That may or may not happen.
Yeah, I think we are right now focused on growth.
Okay.
So we still will continue to invest the money into our enterprise solutions. Our consumer business and core business is extremely profitable, but we are putting that money into the enterprise business. So we are right now we will give a positive EBITDA, but our focus is on growth.
Now tell us a bit about this malware analysis platform, SMAP. What is this all about? What does it allow you to do over the long term or the short term?
So basically, cyber security is all about dealing with the malware. At the core, at the heart of the problem is this malware, and everything that happens that you see in the consumer frauds, enterprise frauds starts with malware. And it's a very difficult problem to solve because, there are a lot of technology and solutions involved. So what we are trying to do through our Seqrite malware analysis platform is democratize it to a level where even a layman can actually use this platform and really understand what the malware is trying to do. So it is first of its kind. And the reason we are able to do that is because we have this 29 years of research. In fact, we have one of the largest malware labs in the country, in fact, in the region. And so we have that massive data. And now SMAP is actually creating a value on top of that data, which will help all cybersecurity professionals to validate the files which are coming in and get a verdict in terms of what type of malware it is, who's the adversary, and really then do something about protecting in that organization. So it's like the art of war where you understand your enemy so that you are better at really protecting yourself.
So I'm guessing because it's an enterprise solution, Vishal, is this a pivotal or a key product, if you will, or it's one of the many things that you've launched? I'm just trying to understand. And when does the proof of the pudding get shown in the growth numbers? Now, I'm not even focusing on EBITDA. I'm talking entirely about growth.
Yeah, I think so. This is from that point of view, path-breaking because it's one of its kind that we're launching. Also, I'll tell you one use case. The use case is not so much for enterprises, but for state governments and central governments, where we will have an indigenous malware analysis platform. So we can the use cases for law enforcement, for teams within the state governments who are managing cybersecurity. We will actually be able to use this platform for being able to really look at what's happening in their region and in their state. So it's not just about for enterprises, but also for state governments. And that the opportunity is the scale at which we can operate this platform. And so we are extremely hopeful that this will give us that impetus and help us in terms of creating a new additional category in cybersecurity, which is unmatched, and there's not really any competition for us as far as this platform is concerned.
Okay. Well, Vishal, about time the RBI governor speaks in a few minutes, so we'll have to call it a day here. But thanks so much for speaking to us. All the best for the quarters ahead.
Thank you so much.
That's Quick Heal for you, a new product. Hopefully, it gives them they are hopeful that it gives them a bang for the buck in the government sector, if you will. Okay, B2G. But about 6 minutes left for the RBI policy to be unveiled. We'll take a break. Come back with what Governor Das has to say. Stay tuned.
We set you up for the day's trade. 30 calls before the markets open on NDTV Profit.
Jubilant Food above a 600 level on Friday.
Wipro can be first trade to buy
all commodities, but in that Vedanta looks good.
Our experts give you the top stock ideas to prepare you for the day.
ICICI Lombard stocks hit the first target.
It has given a very good momentum with good volume.
Don't miss the chance to make the right moves. Only on NDTV Profit, where winners are made before the bell rings.
When the whole day passes like a blur, the news just whizzes past, and you're trying to stay informed. It is our job to bring you news that truly matters. At Profit 360, we cut through the clutter, the Wall Street deals, finance and policy news that could shape your tomorrow. The newsmakers, the trendsetters, and the innovators. In 30 minutes, we've got you covered. So stay ahead, stay informed, and stay profitable with Profit 360.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
When the whole day passes like a blur, the news just whizzes past, and you're trying to stay informed. It is our job to bring you news that truly matters. At Profit 360, we cut through the clutter, the Wall Street deals, finance and policy news that could shape your tomorrow. The newsmakers, the trendsetters, and the innovators. In 30 minutes, we've got you covered. So stay ahead, stay informed, and stay profitable with Profit 360.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
When the whole day passes like a blur, the news just whizzes past, and you're trying to stay informed. It is our job to bring you news that truly matters. At Profit 360, we cut through the clutter. The Wall Street deals, finance and policy news that could shape your tomorrow. The newsmakers, the trendsetters.
Well, the RBI policy about to come in about a couple of minutes from now. Let's keep the markers ready, right? And tell you what some of the key asset classes are doing. So let's get the Nifty, the Bank Nifty and the Nifty PSU index. These three first up from an equity market perspective. The Nifty 50 is lying as flat can be. I would suspect that the Bank Nifty is doing the same. So expect no big changes. The PSU Bank Index, which has had a fabulous week, but did pause yesterday, should come up on your screen next. Again, flat. I think the biggest reaction could well come in this index. Now, the 10-year bond yield, the fourth one, and at about 6.79 if I'm not wrong. So I think you probably have the 10-year bond yield being a very important determinant of what could happen. And the rupee, that 6.72, okay, interesting. And let's get the rupee currency check going, 84.66. I don't know if we see a dramatic reaction in the currency or no, but the bond yields most certainly will show a bit of a reaction. So that's something that we got to keep at the back of our mind. Our guests will be on in some time to try and tell us what they feel of the policy, the statement, whether a change of stance or otherwise. So that will be something very, very important to monitor. We should get the Bank Nifty constituents up on the screen as well ahead of the RBI governor coming in, because I think any moment from now we'll have the governor addressing the media and we'll have to cut to that. But if you can just show what the individual constituents of the Bank Nifty are doing as well there on your screen, the Nifty Bank. And as you can see, I mean, a few banks, ICICI, maybe an IDFC First and BOB, but a clutch of others on the other side as well. And all of these will be gyrating to what the governor has to say. Now, will we see stance change? Most certainly, I would suspect. Will we see a CRR cut? Very, very likely. Will we see a repo rate cut? I think that is the big thing that we have to watch out for. In between all of this, Suraksha Diagnostics has listed a small development, but yes, flattish listing for that one. But remember, all eyes on the policy. I think, okay, I think it started. Okay, just starting in moments from now. It's, waiting with bated breath, because in some sense, this arguably, viewers, becomes one of the most important policy decisions that we've seen in recent times by virtue of the fact that inflation is high, yes, but growth
Good morning
was low.
and
Let's get across.
Namaskar. Every 2 months, I have been presenting the monetary policy statement on behalf of the Monetary Policy Committee and the Reserve Bank of India before you. In fact, a detailed, elaborate statement presenting before all of you is a practice which we started during the period of the COVID, when there were lockdowns and restrictions. We considered that this was the most appropriate way of communicating with the people and with every stakeholder in the economy. Monetary policy is important because it affects the life of people. It affects each and every segment of the economy, howsoever small or big. It affects the vegetable vendors. It affects the big corporates. It affects the middle class. I think it also affects the farmers, the industry, the business. So it has wide-ranging impact on the economy, and that is why I'm sure that is the reason why most of you are listening to the governor's statement. Our effort is to follow the flexible inflation targeting framework as provided in the Reserve Bank of India Act. The Act provides that the Reserve Bank, that is the Monetary Policy Committee, is expected to maintain price stability. In fact, it is a mandate. The mandate given to the Reserve Bank of India is to maintain price stability while supporting or keeping in mind the objective of growth. Price stability is important for the people because it affects their purchasing power. It is important for stability of businesses. It is important for exporters and importers. It is important for every segment of the economy. So price stability is important. At the same time, growth is also very important. As an economy, India has been growing in the last 3 years at more than 8%. Growth, that is the GDP growth, the growth of the gross domestic product, is also very important. And as provided in the law, it is always our effort at the Reserve Bank of India, it is also the effort of the Monetary Policy Committee to follow the provision of the law as embedded, as provided for in the Reserve Bank of India in letter and spirit. So with these opening remarks, I present before you the monetary policy statement of today. And this is how it goes. As we stand at the threshold of 2025, let me reflect upon the eventful journey of 2024. In line with the trend in the last few years, central banks were once again put to the ultimate test to stabilize their economies against continuous, colossal, and complex shocks. Central banks are constantly adapting to the new global economic and financial landscape created by geopolitical conflicts, geoeconomic fragmentation, financial market volatility, and continuing uncertainties, all of which are testing the resilience of the global economy. The last mile of disinflation is turning out to be prolonged and arduous, both for the advanced economies as well as the emerging market economies, that is the EMEs. Maintaining macroeconomic and financial stability and building buffers continue to be the lodestar, especially for the emerging market economies. In India, notwithstanding the recent aberration in growth and inflation trajectories, the economy continues its journey on a sustained and balanced path towards progress. Amidst the reshaping of the global economy, India is well positioned to benefit from the emerging trends as it forges ahead on a transformative journey. Let me now turn to the decisions and deliberations of the Monetary Policy Committee, which met on 4th, 5th, and today 6th December. After detailed assessment of the evolving macroeconomic and financial developments and the outlook, because monetary policy is forward-looking, so we have to always look at the outlook, the Monetary Policy Committee decided by a majority of 4:2 to keep the policy repo rate unchanged at 6.5%. Consequently, the standing deposit facility, that is SDF rate, remains at 6.25%, and the marginal standing facility, that is the MSF rate, and the bank rate at 6.75%. The MPC also decided unanimously to continue with the neutral stance and to remain unambiguously focused on a durable alignment of inflation with the target, while supporting growth. I shall now briefly set out the rationale for these decisions. The MPC took note of the recent slowdown in the growth momentum, which translates into a downward revision in the growth forecast for the current year. Going forward into the second half of this year and the next year, the MPC assessed the growth outlook to be resilient, but warranting close monitoring. Inflation, on the other hand, surged above the upper tolerance band of 6% in October, driven by a sharp uptick in food inflation. Food inflation pressures are likely to linger in Q3 of the current financial year and start easing only from the Q4 of the current financial year, that is from January to March. And we expect that this is the trend, and it will be backed by seasonal correction in vegetables prices, Kharif harvest arrivals, likely good Rabi output, and adequate cereal buffer stocks. High inflation reduces the disposable income in the hands of consumers and dents private consumption, which negatively impacts the real GDP growth. The increasing incidence of adverse weather events, heightened geopolitical uncertainties, and financial market volatility pose upside risks to inflation. The MPC believes that only with durable price stability can strong foundations be secured for high growth. The MPC remains committed to restoring the inflation growth balance. I repeat, the MPC remains committed to restoring the inflation growth balance in the overall interest of the economy. Accordingly, the MPC decided to keep the policy repo rate unchanged at 6.5% in this meeting, and also to continue with the neutral stance of monetary policy, as it provides flexibility to monitor and assess the outlook on inflation and growth, and then go on to act appropriately. I would now like to provide an assessment of growth and inflation, and I would like to begin with the global growth scenario. The global economy has shown unusual resilience in 2024 despite several headwinds. Inflation is gradually moving towards the target from its multi-decadal highs, prompting several central banks to embark on policy pivots. Global trade remains resilient, with increasing volumes confined within geographical blocks. Since the last MPC meeting, financial markets have remained edgy amidst rising US dollar and hardening bond yields, resulting in large capital outflows from emerging markets and also in volatility in equity markets. Going forward, the outlook is clouded by rising tendencies of protectionism. I'm talking about the global economy. Going forward, the outlook is clouded by rising tendencies of protectionism, which have the potential to undermine global growth and also push inflation higher. Let me now turn to the domestic growth situation. Growth in real GDP in the second quarter of this year at 5.4% turned out to be much lower than anticipated. This decline in growth was caused mainly by a substantial deceleration in the industrial growth from 7.4% in the first quarter to 2.1% in the second quarter due to subdued performance of manufacturing companies, contraction in mining activity, and lower electricity demand. The weaknesses in the manufacturing sector, however, was not broad-based, but was limited to specific sectors such as petroleum products, iron and steel, and cement. Going forward, high-frequency indicators available so far suggest that the slowdown in domestic economic activity bottomed out in the second quarter of this year, and it has since recovered, aided by strong festive demand and pickup in rural activities. Agricultural growth is supported by healthy kharif crop production, higher reservoir levels, and better rabi sowing. Industrial activity is expected to normalize and recover from the lows of the previous quarter. The end of the monsoon season and the expected pickup in government capital expenditure may also provide some impetus to cement as well as iron and steel sectors. Mining and electricity are also expected to normalize post the monsoon-related disruptions. I specifically commented on these sectors, that is on manufacturing, on electricity, and also on mining and iron and steel, as well as on cement, because these were the sectors, particularly in manufacturing, mining, and electricity demand, which were the principal factors which pulled down the GDP number in second quarter. So that's why I have focused how these three sectors are expected to behave in the current quarter as well as in the next quarter. The Purchasing Managers Index, that is PMI for manufacturing at 56.5 for November, remained elevated. The supply chain pressures eased in October-November and fell below the historical average. The services sector continues to grow at a strong pace. PMI services remained steady at 58.4 in November, indicating continued expansion. On the demand side, rural demand is trending upwards, while urban demand shows some moderation on a high base. Government consumption is improving. Investment activity is also expected to improve. On the external front, merchandise exports expanded by 17.2% in October, while services exports continued to post upbeat growth at 22.3% in October. Taking all these factors into consideration, real GDP growth for 2024-25, that is the current year, is now projected at 6.6%, with Q3 at 6.8% and Q4 at 7.2%. Real GDP growth for the first quarter of 25-26 is projected at 6.9% and the second quarter of 25-26 at 7.3%. The risks are evenly balanced. I would now like to focus on inflation. Inflation increased sharply in September and October 2024, led by an unanticipated increase in food prices. Core inflation, though at subdued levels, also registered a pickup in October. Fuel group remained in deflation for the 14th consecutive month in October. In the near term, despite some softening, lingering food price pressures are likely to keep headline inflation elevated in the third quarter, that is, in the quarter October to December. Going ahead, a good Rabi season would be critical to the softening of food inflation pressures. Early indications point to adequate soil moisture content and reservoir levels, conducive for Rabi sowing. The estimates of record Kharif production should bring relief to elevated prices of rice and tur dal in particular. Vegetable prices are also expected to see a seasonal winter correction. On the upside, the evolving trajectory of domestic edible oil prices following the hike in import duties and rise in their global prices need to be monitored closely. Manufacturing and services firms surveyed by the Reserve Bank point to firming up of input costs and selling prices in the fourth quarter of the current financial year, that is in the quarter January to March. Taking all these factors into consideration, CPI inflation for the current financial year, that is 24-25, is projected at 4.8%, with Q3 at 5.7%, Q4 at 4.5%. Going into the next financial year, CPI inflation for the first quarter of 25-26 is projected at 4.6% and Q2 at 4%. The risks are evenly balanced. Now, what do these inflation and growth conditions mean for monetary policy? I have described the growth conditions. I have described the inflation conditions. Now, what do all these factors mean for monetary policy? And that is what I would like to now highlight. The near-term inflation and growth outcomes in India have turned somewhat adverse since the last monetary policy in October. The medium-term prognosis on inflation suggests further alignment with the target, while growth is expected to pick up its momentum. Persistent high inflation reduces the purchasing power of consumers and adversely affects both consumption and investment demand. The overall implication of these factors for growth is negative. Therefore, price stability is essential for sustained growth. On the other hand, a growth slowdown, if it lingers beyond a point, may need policy support. The Reserve Bank's anti-inflationary monetary policy stance has been a crucial factor in bringing about a significant disinflation. Going forward, as food price shocks wane, headline inflation is expected to ease and realign with the target as per our projections, which I just read out. At present, it is necessary to draw on the flexibility provided by the neutral stance of monetary policy to wait for and monitor the incoming data for confirmation of the decline in inflation. The gains achieved so far in the broad direction of disinflation, notwithstanding the recent upticks, need to be preserved. At the same time, the growth trajectory and the evolving outlook also need to be monitored very closely. At this critical juncture, prudence and practicality demand that we remain careful and sensitive to the dynamically evolving situation with all its complexities and ramifications. A status quo in monetary policy in this meeting of the MPC has thus become appropriate and essential. I would now like to turn to liquidity and financial market conditions. System liquidity as represented by the net position under the LAF, that is net LAF, that is net liquidity adjustment facility, it continued to remain in surplus during October and November on account of higher government spending, despite a significant increase in currency in circulation during the festive season and capital flows. Of course, towards the end of November, for a few days, the liquidity became tight, but overall, I think there was adequate liquidity both in October and November, and it remained in surplus. Given these conditions, the Reserve Bank mainly conducted variable rate reverse repo operations, that is VRRR operations, to absorb surplus liquidity. To alleviate temporary liquidity tightness because of large GST outflows, however, fine-tuning variable rate repo operations, that is VRR operations, were conducted intermittently during October and November. The two-way liquidity operations of the Reserve Bank ensured close alignment of the interbank overnight rate with the policy repo rate. Transmission to the credit market has been satisfactory. As you would have noticed, as in the previous monetary policy statements, a lot of data is given in the footnotes. So those of you who are interested may have a look at the footnotes, because the data in the footnotes justify and back up whatever I am saying as a part of my statement. Now, even as liquidity in the banking system remains adequate, system liquidity may tighten in the coming months due to tax outflows, increase in currency in circulation, and volatility in capital flows. To ease the potential liquidity stress, it has now been decided to reduce the cash reserve ratio, that is, to reduce the CRR of all banks to 4% of net demand and time liabilities, that is NDTL, and this will be done in two equal tranches of 25 basis points each, with effect from the fortnight beginning December 14th and December 28th. This will restore the CRR to 4% of NDTL, which was in fact the prevailing rate before commencement of the policy tightening cycle in April 2022. The reduction in CRR is consistent with the neutral policy stance and would increase primary liquidity of about rupees 1.16 lakh crore, that is 1,16,000 crore to the banking system. Going forward, the Reserve Bank will continue to be nimble and proactive in its liquidity management operations to ensure that money market interest rates evolve in an orderly manner and the productive requirements of the economy are met. During 2024-25, that is from the period April to November, the Indian rupee depreciated by 1.3%, largely due to pressure from strengthening US dollar and selling pressure by foreign portfolio investors, especially in October and November. Nevertheless, both the depreciation of the Indian rupee and its volatility was less compared to its EME peers. And this reflects India's strong macroeconomic fundamentals and improvement in the external sector outlook. The Reserve Bank's exchange rate policy has remained consistent over the years, and it is market determined. Its central tenet is to maintain orderliness and stability without compromising market efficiency. Foreign exchange reserves are deployed judiciously to mitigate undue volatility, maintain market confidence, anchor expectations, and preserve overall financial stability. These interventions focus on smoothing excessive and disruptive volatility rather than targeting any specific exchange rate level or band. At the same time, our effort to deepen and modernize the foreign exchange market have also yielded significant results in terms of, first, widening access and participation, and second, ensuring efficiency and ensuring efficient price discovery. Our overall approach ensures that forex reserves act as shock absorbers, safeguarding the economy from external spillovers, while supporting competitive and orderly market conditions. The flexible or market-determined exchange rate regime is not merely a tool for managing external shocks. It is an important element of our approach to macroeconomic and financial stability. By combining market discipline with prudent intervention, we have created a system that supports stability, resilience, and growth. Let me now focus on financial stability. The financial parameters of banks and NBFCs continue to be strong. The incoming data suggest that the gap between growth of credit and deposits of scheduled commercial banks has narrowed, with deposits keeping pace with loan growth. In fact, on the financial sector, I can say with confidence that I think the health of the financial sector today is perhaps at one of its best in a long time. The Reserve Bank's supervision of the financial sector and its entities continues to be vigilant and proactive. Incipient signs of stress, if any, either at the systemic or entity levels, are monitored closely and proactive action is initiated. The effort is always to resolve the issues non-disruptively. Continuous engagement is held over several months, sometimes even exceeding 1 year, with the regulated entities. Only in extreme cases where sufficient corrective action is not visible, the Reserve Bank resorts to imposition of business restrictions as a last resort in the interest of consumers and financial stability. In fact, there are a large number of entities where the corrective action is taken and where we simply do not take any action because the response by the regulated entities is found to be, very proactive and, very responsive. And so in many cases, without imposing any restrictions on their business or other kinds of activities, the problem gets resolved. Obviously, the list is not known outside. That list is much longer. And the total number of entities, I'm not being defensive about it or in any way. Why I'm emphasizing on this is that this is something which we have to do in the interest of stability of the system as well as the stability and health of the individual entities. So only in extreme cases where sufficient corrective action is not visible, the Reserve Bank resorts to imposition of business restrictions as a last resort in the interest of consumers and financial stability. To address the issues of unclaimed deposits, inoperative accounts, and frozen accounts due to pendency of KYC updation, banks have been advised very recently once again to take necessary steps urgently to bring down the number of such accounts and make the process hassle-free. Further, banks have been advised to segregate the accounts of beneficiaries of various central and state government schemes through direct benefit transfer, that is DBT, and facilitate uninterrupted credit of the DBT amounts into their accounts, and also utilization of the DBT amounts by the account holders. And we have advised the banks to do it without inconveniencing such vulnerable segments of customers, because the DBT beneficiaries are usually, and they are the vulnerable sections of the society. So being fully mindful of that, we have emphasized that there should be a kind of a seamless and smooth flow of DBT amounts into the bank accounts of such individuals in a situation so that it facilitates the individuals to withdraw the money to meet their various requirements. Progress made by individual banks in this regard will be monitored by the Reserve Bank. I would now like to turn to the external sector. The statement today is a bit, because we have too many announcements, so I request your continued patience. External sector. India's merchandise exports expanded at a 28-month high pace in October. Merchandise imports also increased for the 7th consecutive month. Services exports sustained buoyancy and posted double-digit growth in second quarter as well as in October 2024. The robust services exports, together with strong remittance receipts, are expected to keep the current account deficit within sustainable levels during 24-25. On the external financing side, gross FDI to India increased at a robust pace. I'm talking about gross. The gross FDI to India increased at a robust pace during the first half of the year. Net FDI, however, moderated during this period due to higher repatriations and rising outward FDI. Foreign portfolio investment, that is FPI inflows to EMEs have generally declined in October. Net FPI inflows to India stands at $9.3 billion so far in the current year, that is from April to December 4th. And this was supported mainly by inflows in the debt segment. External commercial borrowings and non-resident deposits, on the other hand, witnessed higher net inflows compared to the last year. India's external sector remains resilient, as reflected in various key indicators where India has been consistently performing well. And the key indicators and the data they are given in the footnotes. In order to attract more capital flows, in order to attract more capital inflows, it has been decided to increase the interest rate ceilings on FCNRB deposits. Accordingly, effective from today, banks are permitted to raise FCNRB deposits of 1 year to less than 3 years maturity at rates not exceeding the ceiling of overnight alternate reference rate, that is overnight ARR, plus 400 basis points as against 200 basis points at present. So in addition to the overnight ARR, currently the banks are allowed a spread of 250 basis points that is being increased to 400 basis points. Similarly, for deposits of 3 to 5 years maturity, the ceiling has been increased to overnight ARR plus 500 basis points as against 300 basis points at present. This relaxation will be available till 31st March 2025. I shall now announce certain additional measures. I again request your patience because the additional measures, they are very important. The first one relates to the FX retail platform, and this is how it is. The FX retail platform, which was launched in 2019, is now proposed to be linked with the Bharat Connect platform of the NPCI. This would enable users to transact on the FX retail platform through mobile apps of banks and non-bank payment system providers. This will expand the reach of FX retail platform, enhance user experience, and promote fairness and transparency in pricing with adequate safeguards. The second announcement relates to introduction of secured overnight rupee rate, SORR, a benchmark based on secured money markets. With a view to further develop the interest rate derivative market in India and improve the credibility of interest rate benchmarks, the Reserve Bank proposes to introduce a new benchmark, namely secured overnight rupee rate, that is SORR, which is based on all secured money market transactions, that is overnight market repo as well as TREPS. The third announcement relates to Connect to Regulate, an initiative for open regulation. As part of Reserve Bank's consultative approach in framing regulations, a new program, namely Connect to Regulate, will be launched under the ongoing RBI at 90 commemorative events. A dedicated section in the Reserve Bank's website will be made available for stakeholders to share their ideas and inputs on specific topics. So we will give out a specific topic on that. We are not going to upload a discussion paper or anything, but we will just mention the topic, and we would like all stakeholders to give their opinion, suggestion and thoughts to the RBI. So it is that makes our process of consultation much wider and much more flexible, which has been our approach over the last few years. Next announcement is introduction of podcast facility as an additional medium of communication. Over the years, the Reserve Bank has expanded its communication toolkit and techniques to enhance transparency and better connect with the people. In continuance of this endeavor, the Reserve Bank proposes to add podcasts to its communication toolkit for wider dissemination of information. And the next announcement which I am going to read out is very important for the agricultural sector, especially for small farmers. And that relates to collateral-free agricultural loan enhancement of limit. The limit for collateral agricultural loans was last revised in 2019. Taking into account the rise in agricultural input costs and overall inflation, it has been decided to increase the limit for collateral-free agriculture loans from rupees 1.6 lakh crore per borrower to rupees 2 lakh per borrower. This will further enhance credit availability for small and marginal farmers. The next announcement relates to UPI. A credit line on UPI was launched in September 2023 and was made available through scheduled commercial banks. It has now been decided to permit small finance banks also to extend pre-sanctioned credit lines through the UPI. This will further deepen financial inclusion and enhance formal credit, particularly for the new-to-credit customers. Next announcement relates to artificial intelligence, its deployment in a very prudent manner. The financial sector landscape is witnessing rapid transformation enabled by technologies such as AI, tokenization, cloud computing, etc. In order to harness the benefits from these technologies while addressing the associated risks such as algorithmic bias, explainability, data privacy, etc., a committee comprising of experts from diverse fields will be set up to recommend a framework for responsible and ethical enablement of AI. I repeat, a framework for responsible and ethical enablement of AI, and the acronym is FREE AI in the financial sector. The last announcement relates to dealing with mule accounts. As part of the Reserve Bank's continued efforts to prevent and mitigate digital frauds, an innovative AI/ML based model, namely the Mule Hunter.ai, has been developed by the Reserve Bank Innovation Hub at Bengaluru. This will help the banks to deal with the issue of mule accounts expeditiously and reduce digital frauds. Let me now conclude. The world today is characterized by intricate complexities and profound uncertainties. As a central bank, our job is that of an anchor of stability and confidence, which would ensure that the economy achieves sustained high growth. Since the last policy, that is since the October policy, inflation has been on the upside while there has been a moderation in growth. Accordingly, the MPC has adopted a prudent and cautious approach in this meeting to wait for better visibility on the growth and inflation outlook. At such a critical juncture, prudence, practicality, and timing, I repeat, at such a critical juncture, prudence, practicality, and timing of decisions become even more critical. Our endeavor in the Reserve Bank has always been to implement timely and carefully calibrated measures to derive the maximum impact. This will continue to be the guiding principle for all future actions also. As Mahatma Gandhi had said, and I quote, "There is nothing that cannot be attained by patience and equanimity." In the last few years, we have traversed one of the most difficult periods in the history of the Indian economy and perhaps in the global economy. And this has been a very difficult period in the economic history, in the history of Indian economy and the global economy, just as I pointed out. It was a period of relentless turbulence and jolts. As a country, we can derive satisfaction that the Indian economy has not just navigated this period of trials successfully, but has emerged stronger. As we strive together towards making India a developed economy, I recall what I had said in my statement of February 8, 2023, wherein I had quoted Netaji Subhash Chandra Bose, "Never lose your faith in the destiny of India." Thank you. Namaskar.
All right, that's our MPC decision quoted by the RBI governor. No change in repo rate. You know that. Neutral stance, no change there. CRR cut by 50 basis points. That's the big thing, and a lot of other detail around inflation, etc. And we'll get into the minutiae, but let's get in our guests to try and understand what do they make of these announcements. Aditya Nair, Chief Economist, ICRA; Jayesh Mehta, Vice Chairman and CEO at DSP Finance; Katrina L., Director of Economic Research at Moody's Analytics. All three with us. Thanks so much, all of you, for joining in. Jayesh, I'll start off with you. Anything caught by surprise? I thought the change in stance probably the only outlier. Otherwise, you could argue that it is on expected lines. The optimists may have hoped for a repo rate cut. It hasn't come.
Yeah, that's absolutely on expected line. Though some people were expecting a repo rate cut to be only 0.25%, but normally we have seen in past also they may move by 0.5%, which gives off kind of 1.116 lakh crore, 1 lakh crore plus liquidity situation. So I think that's was required, and that's a start. And with this, it kind of cements the view for February rate cut, because if you look at the inflation projection for the balance 3 quarters after that, is at much lower rate. Like Q4 is almost 4.5, 4.6 Q1 next year, and 4% Q2 next year. So from that perspective, kind of affirms February cut, and that was what market was expecting. So good, actually.
Well, Aditi, good morning. What did you make of the policy decision? No change in stance, no rate cut, but a CRR cut to ease liquidity in the system. And surprisingly, no mention of the global or foreign shocks that we may have to face.
Actually, quite interesting. We were not expecting any change in the repo rate or in the stance, and we were also not really expecting a CRR cut to come in right away. So that's a positive surprise that we got in today's policy. And while there was a lot of talk of patience and prudence and practicality and timing, I think which is completely warranted by the fact that currently the headline inflation is above the MPC's upper threshold of 6%, which is what really ruled out a rate cut in this policy. Now that we've got the CRR cut, I think that's a very strong signal that if the CPI inflation does moderate in line with what the MPC is expecting, then a Feb rate cut would definitely be on the table. So our own view is that we're going to see a good amount of retracement in the CPI inflation, so 550 in November and hopefully down 5% or a little below that in the December print. And if there are no other negative surprises that emerge and the trajectory for inflation that's been outlined today remains intact, then I think that will really set the stage for February rate cut.
Okay, Katrina, your initial assessment, there seemed to be this, not too much of a reference to global pulls and pressures, if you will, a lot of local factors, a lot of emphasis on inflation as well. 4% mark only reached in Q2 of FY26 with risks evenly balanced. What did you make of it all?
So I thought it was to be expected that we didn't actually see a rate cut from the RBI this time around. I think when you've got an October inflation print that surprises on the upside and comes in at 6.2%, which is at that, breaching the upper threshold of the RBI's bands, then they're not really going to want to be cutting rates in that sort of environment. And I thought it was really interesting how it was very clear how delivering sustained moderation in inflation is really the priority, perhaps even more so over the fact that we did see moderating GDP growth. And it was interesting as well to see that they're highlighting, at quite length how negative a sustained inflation environment can actually be in terms of eroding purchasing power for both households and businesses. And so it is really their priority to get inflation sustainably back to that target range. And so with these upward revisions to inflation over the 25 financial year, even though they are modest, I think that does, is quite telling to the fact that the RBI is going to tread incredibly carefully when it comes to the timing of their rate cut. And it won't take much for them to continue to push that out. So with that in mind, our expectation is that we will see a cut being held off until around Q2 of next year. So looking around the April-May type kind of timing at this point.
Jayesh, my next question is a bit of a conundrum that Neeraj and me were talking about. You have the Fed meet in 10 days from now. If the Fed doesn't cut, will the RBI still have the ability to cut in Feb? And the reason I ask you this is because rate differential is important. Even though the governor chooses not to talk about it, it has a direct impact on flows, which then directly impact our currency and the setup on the bond and the equity market.
I think earlier rate differential really didn't matter for us much because we were not really having that FPI investment. Now with inclusion in JP Morgan index, it will have some impact, but it is still very, very limited, right? I think in India, we have always seen, of course, regulators think differently, but we have always seen, higher rates, therefore equity outflow, and therefore not good for currency, because that's where most of the, unlike most of the countries, we have more equity inflow outflow to tackle rather than debt inflow outflow. But having said that, I think with growth kind of staggering down, or maybe even the forecast went down, keeping this real rate so high, if your inflation target in February policy will come down to below 4.5 almost, if you look at the Q4, Q3, Q1 next year and Q2, there is no reason, even if you are 4.5, 4.25, to keep 6.5 repo rate. The real rate being so high can really, really damage the growth. And therefore, irrespective of what US does, we will have to look at that.
Okay. Now, Aditi, the word around inflation seemed to be the key driving point because, like I said, I mean, when I looked at the numbers given out by the Reserve Bank of India, 4% inflation only coming at Q2 FY26 in a scenario when that is the inflation expectation. And if indeed the Fed were to be hiking rates, even if growth were to not quite pick up in Q3, do you think the RBI just refrains from any kind of rate action because of those factors?
Look, I think primarily the RBI has always made it clear that they're looking at the domestic growth inflation balance. And even in the last few policies, while the Fed has been cutting, it has been the domestic trends which have taken center stage as compared to what the Fed has been doing. And overall, I still maintain that the Fed is going to, in the entire cycle, end up cutting a lot more than what the RBI will have the space to do. We are only looking at 50 basis points in this rate cut cycle coming in from the MPC. Our baseline expectation at this point in time is that the 2 cuts will come in February and April. If we end up with a negative surprise on inflation, certainly that is something that could push the timing out to April and June, for instance. But I don't think we're going to be doing a one-to-one correlation with what the Fed is doing. The Fed has already cut and we haven't done anything. So if the domestic situation allows it, I think the rate action will come.
Katrina, do you feel like a CRR cut for now would be enough to help growth come back on track? The GDP shocker didn't go down too well with the street, and I'm assuming a piecemeal approach at this stage may not do much either.
Yeah, it's an interesting conundrum, I think. I think that the RBI is, trying to manage lots of different forces in the economy with, several different policy levers. So I think that the CIR reduction does certainly help, but it's not going to, reinvigorate growth to a 6% type level at this stage. But it is certainly going to help in terms of the liquidity and those, lower income households or, smaller businesses that are more struggling with, credit lines. I think they will get a little bit of relief, but it's certainly not going to be a game changer at this point. And I think the RBI is incredibly aware of that. They don't want to, completely reinvigorate domestic demand when they do have an inflationary problem. And sure, that inflationary problem might be driven by domestic supply side factors, particularly around food prices, especially vegetable prices. But they need to be cognizant that even though that might be the case, if they were to inject too much to, really lift domestic demand, then that would be problematic. And then, of course, that's going to then further push out the timing of when the RBI can actually reduce rates. Because if we know that they're favoring inflation and really prioritizing that, then lifting domestic demand too aggressively through these CIR cuts isn't going to help the timing of cuts, and it's certainly not going to bring them forward. It's only going to push them out further.
The follow-up to that, Katrina, though, is this, that the governor did mention that Q2 growth has bottomed out. Q3, there are signs of pickup. No one knows the extent of the pickup. But is the presumption that liquidity management in a case of government capex picking up and growth shoring up in Q4 is probably the only thing needed to do right now? Wait and watch what the Fed does, what the inflation print plays out, and then take a decisive action only in February. Because, like I said, the one surprise to some people, I know Aditi didn't say that, but for a lot of people, the stance change was almost a given, and that hasn't happened.
Yeah, it's interesting, right? And there's so many uncertainties. I mean, not just when it comes to Indian domestic data, but also in terms of how the global economy is going to perform. And if we, bring in the recent US election result, we know that President-elect Trump, for instance, has proposed some sweeping changes in terms of global trade from a US perspective, of course. And so if we do see, reductions or, rather increases in terms of tariffs on exports, or if we do see immigration reductions of Indian arrivals into the US, and that could, of course, have consumption impacts. So there's a whole lot of uncertainty at the moment. And I think that the RBI is really just trying to manage that and try and keep inflation as its priority. They can control that, and also trying to manage the domestic kind of growth uncertainty. So certainly it does make sense to tread really carefully at this point.
Aditi, I know we are all talking about a neutral, accommodative stance by the RBI, but the fact remains the Trump card is Trump, right? Because if he talks about tariffs, he talks about everything that he's going to do. On one hand, India central bank may be okay with a depreciating rupee because that gives us a competitive advantage over China. But on the other hand, if we do follow the mother market and the Fed pauses, is there a small outside chance that maybe we go into a setup where we don't actually get a rate cut? We may even be staring at a rate hike in the next 6 to 8 months because that uncertainty is fairly important.
If we have a situation where all of the global factors that you're talking about lead to a sustained increase in inflation, I think only in a scenario like that could we come in for a rate hike. I don't see any other scenario building up for a rate hike right now. If anything, the Trump tariff threats would only reduce our growth further, depending on when they're imposed and how widespread they are. That's certainly not going to set up the case for a rate hike. It will be the inflation impact that could do that, and I'm not seeing a large possibility of that right now. On growth itself, our view is that the Q2 5.4% was a bottom. That quarter was an aberration in some ways because there were some sectors that were completely doused by the heavy rainfall. And that's a temporary factor that has gone away. The high frequency data for Q3 is looking a lot better, whether it's the auto sector, some improvement in the coal sector, electricity, etc. The typical high frequencies that we track. And the scope for government capex is, of course, very high in the second half of the year. We do expect that there will be a shortfall. The government is unlikely to be able to meet the budget estimate for capex. However, the YOY growth in Q3 and Q4 would still end up being quite high, which will provide a boost to domestic growth. And also, the rural economy should see a more sustained sentiment now after the Kharif output, with reservoir levels being better. The last round of data that I saw for the Rabi sowing had also improved. And generally, the stage is set for a more sustained rural sentiment as compared to what we had seen in the previous year. So that would also be a positive. However, my sense is urban consumption will remain uneven. And, we have periods where our urban consumption does better, but rural doesn't, and then vice versa. My sense is that urban and rural consumption are not necessarily, they're not substitutes for each other. They drive very different sectors. And secondly, the tax impact of which part of the consumer economy is booming can be quite different. Urban consumption being on an uptick would be more tax positive, would probably generate more tax revenues than rural consumption. So obviously there are differences in the revenue implications of where consumerism is booming in the economy. But generally, I am also constructive for H2 from a domestic standpoint. And our GDP growth forecast for FY25 is 6.5%, so just a tad lower than what the governor revealed this morning.
Jayesh, very lastly to you, and you're probably the best person to talk to about what's happening in the bond and the currency market. Forex reserves have declined for the last 8 weeks. We've been touted as one of the safest or least volatile currencies since the pandemic, right? So rather stable. Do you feel like an increase in the interest on FCNRBs, maybe a CRR cut for now, could be enough to protect the downfall on the local currency? And how significant is maintaining forex reserves at this time, at this juncture?
So, of course, as governor always used to say, right, we have an umbrella to use in rainy season, right? But the way the global trends are going in, your umbrella will still make you wet, and that's where you feel you will depreciate, which is what is reflecting today is 84.61. We touched 84.70. I don't think this thing can rein in so much, but hopefully FPI equity outflow, if it's, I'm not saying that we get an equity inflow, even if it stops going outflow, we should be okay on our currency. I think it's right now the momentum, and it's also the NDF market, which is also driving it with all other PM currency. So there is a there is a point up to what you can, support that or resist that. So it's more about the global situation rather than domestic situation for currency to appreciate.
Mehta, emerging market bonds funds have seen outflows the last 2 consecutive months. But thank you, Aditi, thank you, Jayesh, and thank you, Katrina. Have a good day and a great weekend. We'll speak to you all soon. Well, that was, of course, policy action, largely, Neeraj, in line with what we were expecting, a CRR cut. Status quo on rates and no change in stance.
Maybe that is arguable. But
I think we're waiting and watching what the Trump does.
Yeah. But the rupee moving a little bit as you mentioned as well. So interesting thing. But with that, it's a wrap on this leg of the policy coverage from Sabina and me. Thanks so much for watching. Stay tuned though. All your questions answered on the next show.
We set you up for the day's trade. 30 calls before the markets open on NDTV Profit.
Jubilant Food above a 600 level on Friday.
Wipro can be first to buy
all commodities, but in that Vedanta looks good.
Our experts give you the top stock ideas to prepare you for the day.
ICICI Lombard stocks hit the first target.
It has given a very good momentum with good volume.
Don't miss the chance to make the right moves. Only on NDTV Profit, where winners are made before the bell rings.
When the whole day passes like a blur, the news just whizzes past, and you're trying to stay informed. It is our job to bring you news that truly matters. At Profit 360, we cut through the clutter, the long street deals, finance and policy news that could shape your tomorrow. The newsmakers, the trendsetters, and the innovators. In 30 minutes, we've got you covered. So stay ahead, stay informed, and stay profitable with Profit 360.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
When the whole day passes like a blur, the news just whizzes past, and you're trying to stay informed. It is our job to bring you news that truly matters. At Profit 360, we cut through the clutter, the long street deals, finance and policy news that could shape your tomorrow. The newsmakers, the trendsetters, and the innovators. In 30 minutes, we've got you covered. So stay ahead, stay informed, and stay profitable with Profit 360.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
When the whole day passes like a blur, the news just whizzes past, and you're trying to stay informed. It is our job to bring you news that truly matters. At Profit 360, we cut through the clutter, the long street deals, finance and policy news that could shape your tomorrow. The newsmakers, the trendsetters, and the innovators. In 30 minutes, we've got you covered. So stay ahead, stay informed, and stay profitable with Profit 360.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
When the whole day passes like a blur, the news just whizzes past, and you're trying to stay informed. It is our job to bring you news that truly matters. At Profit 360, we cut through the clutter, the long street deals, finance and policy news that could shape your tomorrow. The newsmakers, the trendsetters, and the innovators. In 30 minutes, we've got you covered. So stay ahead, stay informed, and stay profitable with Profit 360.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Hi, thanks so much for joining in. You're watching Ask Profit on NDTV Profit. My name is Alex Matthew, and with me is Mahima Vachrajani. We will take you through the next half an hour. Unfortunately, well, this show has gotten curtailed just a tad bit, but if you've been tuned into the channel, you will know why that is. In fact, quite a bit of that still flashing on the screen. It has to do with the outcome of the meeting of the Monetary Policy Committee. And if you tuned into just the 5 minutes at the start and were a little disappointed that there wasn't a repo rate cut, as some people were hoping would be the case, well, you wouldn't have been disappointed, because there was action in the form of easing. It was easing on the liquidity front, the cash reserve ratio. And in case you were wondering what that is, banks have to keep a certain amount of their net demand and time liabilities, basically their deposits, with the Reserve Bank of India as a reserve, as an emergency fund in the event of a redemption event. That is called the cash reserve ratio. As things stand right now, that stands at about 4.5%, not about, exactly 4.5%. What the RBI governor has said is that the MPC has decided to allow banks to cut that cash reserve ratio over a period of 2 fortnights, starting from the 14th of December and heading into the 28th of December, 25 basis points each. They're cutting that to 4%. And what that means is that over the course of a month, you will have a substantial amount of liquidity, a substantial amount of money that is currently parked with the RBI that suddenly gets freed up to go into the system. The banks will be able to lend this out theoretically. Let's see how that pans out. In fact, we will get you a banking, no, I shouldn't say an expert, but a senior functionary in one of the private sector banks to tell you about where this likely will go. So let's pull up the Nifty Bank, because that will give you a picture of how the market took this. Initially, you saw a bit of a drop when there was the clarity that there would not be a repo rate cut. But then it was a recovery when the CRR cut, or the cash reserve ratio requirement cut, was announced. And at this juncture, you have gains of about 0.3%. Similar gains, I think, more or less for the Nifty 50. You will see a similar trajectory. We may be flat right now or thereabouts, but you see a similar trajectory for the benchmark Nifty 50 as well. We've got our experts in. We've got Avinash Gorakshakar of Profit Mart Securities, as well as Kushal Gandhi joining in. Thanks so much, gentlemen, for taking the time. We will take as many questions as possible, and so sorry to keep you waiting. Avinash, always glad to have you on the show. Kushal, you as well. Avinash, I'll ask you what your initial take is, and whether or not this changes anything from what you're thinking of heading into next year. Of course, that GDP expectation cut is also a big item to focus on.
Yeah, I think, good morning, Alex. I think clearly the kind of commentary which was expected from the governor is as per what, most street people were expecting. And I think, the CRR cut was on expected lines. I think, as you rightly mentioned, a lot of liquidity with RBI would now be available with the banks, and that would obviously be a very good kind of cushion to, lower the interest rate structure. It's a good beginning, but I think, on inflation, he clearly commented that food inflation has moved up significantly, and it would take a little more time before we see that elevated food inflation coming down. So I think net, I think, we might have to wait for maybe another 3 to 4 months for a proper rate cut to happen. And I think the markets are definitely happy that at least the CRR cut has happened. Maybe the rate cut, which was anticipated, has not come in. I think at this point of time, Alex, the markets are definitely looking at the fact that the next, kind of commentary which possibly comes from Mr. Shaktikanta Das or maybe from the new governor is going to be something which is going to be positively, pleasing to the markets in terms of inflation and in terms of the rate cut. So I think net, we are quite positive on the market. We still feel that, rate sensitives could possibly take a lead in some time. I mean, maybe as of now, it may not impact them. But overall, liquidity easing is going to help some of the larger corporates, and that is definitely a good beginning.
In case our viewers are wondering what Avinash said at the end, and they're saying, why would Shaktikanta Das not present the next monetary policy outcome? Well, he is due to end his term, and of course, there is an expectation that he will be given an extension that has not been announced yet. He's already, by the way, in case you didn't know, the longest serving Reserve Bank of India governor in the history of independent India.
Right, absolutely. Let's move on to our queries, Alex. For viewers who are tuning in, you can ask all your stock-related queries on the number that is flashing on your screen. The number that's flashing on your screen, you can call us or you can WhatsApp us on the number which will, yes, there you go. That's the number on which you can WhatsApp us all your queries. Let's move on. The first query is from Nivendu Sharma, who's from Hyderabad. He and his family together are holding around 400 shares of Lincoln Pharma, and he wants to know whether he should book a profit or should he keep holding it with a stop loss. He's not given the price at which he's bought it, so we don't know whether he's making a profit or a loss. But Kushal, I'll come to you for this one. How does Lincoln Pharma look on charts?
Lincoln Pharma looks very bullish. The stock has given a very nice breakout from a cup and handle pattern, with some monumental volumes. So I think all in all, it's got a very positive trajectory. But if you've seen the last 3 odd sessions, the stock has already moved up 50%. So I feel there should be some profit booking. They should save their capital and wait for the further trajectory. I'm bullish on the stock for a target price of 980 followed by 1000.
Okay, I believe we have a first caller for the day. We've got Ramu from Gujarat who's calling us. Ramu, if you can hear me, good morning to you, and how can we help you?
Good morning to all, and I need to say thank you to the NDTV. I am recently entered into the stock market and gaining the profits.
Yes.
And my question is, I am holding 250 stocks at the stability at the price of 31 rupees.
Okay.
And the last 2 days it's getting upper circuit continuously, and I need to know the target price when I can exit, or I need to hold on it.
Okay, not too much data, I'm guessing, so I cannot go to you, Kushal, on this one, but do you have any coverage on this, Avinash? What would you say about Sagility? It has indeed gained quite considerably, so 31 is the buy price, 39 is where it is, very close to 40 right now. Would you sell if you can?
Yeah, I think my sense is, the investor, if he has purchased the shares recently, I think, it's still too early to take a call on whether one should exit the stock, because I think recently the company came out with their first quarterly numbers. Very strong numbers, Alex. I think cash flows have also been very strong, and plus they operate in a very niche business in the US, hospital market. I think the size and scale of the opportunity for this company is quite significant. So I think, if the investor can give a time frame of at least, say 12 to 15 odd months, then I think he could expect a further risk reward in the stock, because this is one of those unique companies which I don't think has any comparable peer in the Indian market as of now. And it operates in a market where it competes with global peers. So I think very solid business, good promoters. So I think he can hold on. I think wait for some further 12 to 15 months wherein he could get a better risk reward.
Avinash, Kushal, do stay with us. And viewers, I know that you have a lot of questions regarding what was just announced by the Reserve Bank of India governor, and we were talking about getting you somebody from the banking space to give you some clarity on how this will likely pan out. Rajiv Anand, Deputy Managing Director of Axis Bank, is joining me now, and who better to tell you what this would mean for the banking sector and indeed for you. Rajiv, thanks as always for taking the time and for speaking to us on NDTV Profit. Some people were murmuring, yeah, our pleasure entirely. Some people were murmuring that there was a possibility of a repo rate cut. And when the RBI governor stated that there wouldn't be one, perhaps some people were a little bit disappointed. They were also talking about a CRR cut. And whenever I've been taught about monetary policy, Rajiv, you correct me if I'm wrong, the repo rate is looked at as a scalpel, whereas the CRR is looked at as a hammer. Correct me if I'm wrong, what the impact of this will be.
I think in an environment where inflation in India currently is running at 6.2%, although the trajectory is expected to tend towards 4 over a period of time, it was highly unlikely that the RBI would cut the repo rate at this point in time. But on the other side, we've all seen the shocker in terms of the growth number for Q2. And so therefore, there was some expectation, from certain quarters that to be able to support growth, the RBI would cut the repo rate. But I think, what the RBI has done is actually, quite prudent, that they have kept their eye on the ball, i.e. inflation. And the expectation is that sometime around February, we could see inflation becoming a little more manageable. And perhaps expectations of a rate cut sometime post-February is the expectations that the RBI has built in this policy. However, on the other side, we've also seen the short-term rates, i.e. the rates between the repo rate and let's say a one-year fixed deposit continues to be quite high. And what the CRR cut will actually do is that it'll bring that rate down, meaning that if you are a depositor, you should expect that deposit rates will come down in the months to come because of the fact that the CRR has been cut. So it's a liquidity measure. Short-term rates will come down because inflation still continues to be sticky in an environment of relatively weaker growth. I think the expectations of a repo rate cut have been pushed out by some time.
Okay. Rajiv, implications of this 1.16 lakh crore coming in to the banking system over the course of 2 fortnights starting the 14th of December, in the context of the measures that have been taken and the commentary that has come in over the last 2 quarters from the RBI itself about the kind of lending that banks and the financial institutions have been doing, of course, there is no mandate to say they will utilize these funds in a certain manner. But because some banks and institutions have been more wary in the unsecured space, where do you think this money will be utilized?
Let's look at it like this. The 1.15 lakh crores was earning the banks nothing because it was impounded as CRR. Now that it is being released, at the very least, we can actually go out and put this money in overnight liquidity at 6.5%. Obviously, what banks would do with this money is they would put this money into a mix of corporate lending, retail lending, including unsecured, and so therefore this CRR cut will positively impact NIMs of banks by somewhere between 3 to 5 basis points. Not in this quarter, but because the CRR is being released in 2 tranches in 2 fortnights, the impact will come from the next quarter onwards.
Okay, that's an interesting point that you make, and so therefore no immediate implication, Rajiv, you would think on the lending rates at all, or not lending rates, but lending growth at all in any segment on account of this?
Because of the macroprudential measures that the RBI has taken, I think RBI has consciously pushed the rate of credit growth down over the last, let's say, 6 to 9 months. I think we've also seen that, particularly on the unsecured side, risk has gone up, although from relatively lower levels. I think the CRR cut is a welcome relief. We should see credit growth going back up slowly but steadily as we go forward.
That's a fair point. I do want to get your opinion on the sharp reduction in the GDP growth expectation, 6.6%. Not very often that you see the central bank cut from 7.2 to 6.6%. Was that something that you had anticipated? And what are the implications for the economy as a whole? Of course, second half, we're expecting there to be more spending by the government and perhaps to a certain extent capex. Is that something that you're seeing at all take place, private capex? Any signs of that recovery?
I think if you looked at the Q2 numbers of corporates as well, I think you would clearly see that there was a palpable slowdown in the economy. And I think at this point in time, the RBI is projecting that yes, growth will go back up from the 5.4%. But our own belief is that perhaps the expectations that the RBI has put out for Q3 and Q4 is actually a tad optimistic. I think there is certainly risk to the downside on these expectations in the second half of the year, and I think this increased growth is predicated on particularly increased government spending, and whether the economy has the absorptive capacity to take on this high level of government spending for capex in the second half of the year. I think is something that we will need to wait and watch. But I think there is a palpable slowdown in the economy.
And then the last question, Rajiv, that I want to ask you today is you expect, and you said this earlier, you expect that a rate cut could potentially come through early next year, February perhaps. What is your base case assumption as to how the trajectory will be in terms of the rate cuts? Of course, one would assume that this entire cycle will be shallow.
Absolutely. I think the problem that we've seen so far is, on the one side, we have certainly, like I mentioned to you, the slowdown in the economy is palpable. But on the other side, we are certainly seeing inflation being quite sticky at this point in time. We need to see those inflation numbers, come down into the four handle before we can even think about a rate cut. So I think the RBI's own expectations is that we will see a inflation number in the vicinity of about 4% sometime in February. So the earliest expectation that we have as far as the rate cut is post-Feb. But having said all that, I think the rate cut cycle itself is going to be quite shallow at the very best in this sort of an environment. We don't expect the rate cycle to be more than 50 basis points, which means that the 6.5 could at best go to 6%.
Okay. Wow. Thanks so much, Rajiv, for that perspective. It reinforces certain ideas that I had as well. Thanks so much for taking the time.
Thank you so much.
All right. Let's go back to Ask Profit. Sorry to keep you waiting, but this was an engaging conversation. Hopefully it gives you perspective on what to expect heading into next year as well. And I believe we've got our next caller.
Yes, Alex. Shweta, thanks for waiting. I believe you're calling from Hyderabad. How can we help you? Can you hear me, Shweta? Okay, I don't think we're patched. Yeah, she can. Hi, Shweta. How are you doing? How can we help you?
Hi. Hi, I'm Shweta, and thank you so much, Alex and Mahima. You guys are helping me a lot. And I would like to thank even Neeraj, Tamaina, and Tamanna also. You guys are making us sit in front of the TV throughout the day.
Sure, I'll convey your regards to them.
Yeah, my question is regarding Garden Reach.
Okay.
I bought 40 shares of Garden Reach at price 2557.
Mm-hmm. Okay.
Now I can see there is a small reversal happening in all the different sectors. But is there any chance I can recover all my losses, or if not, at what levels can I take an exit? Because I already have HAL and I recently bought BEL also.
Okay.
Both of them are at no profit, no loss situation. So I would like to switch from Garden Reach to any of these two.
Got it. Got it. I got your question, Shweta. Avinash, I'll quickly take this one with you. Your view on Garden Reach as well as for the entire defense pack.
I think first on the defense pack, I think it's a long compounding story, and I think if the investor has got at least a couple of years kind of time perspective, I think value can be generated. I think at these levels, of course, valuations don't seem to be cheap. They are fair to expensive, but I think if you look at the order wins, the visibility of top line for most of these companies, I think the government of India is going to focus on defense in a big way. In fact, my sense is that over the next 3 to 4 months before we end this financial year, the government may announce a large capex for sectors like railway, defense, which would obviously propel some of these stocks going forward. Coming specifically to Garden Reach, I think some news flow has come in for Garden Reach. They've got some fresh orders, but I think the price at which the investor has entered is slightly on the higher side. So unless the investor gives a 2-year perspective, I don't think you're going to make money in the short term. These levels would take some time for the investor to actually break even. At best, I think, probably if the investor has got some money, you can average the stock, but take a 2-year view and I think stay invested.
Shweta, hopefully that answers your question, and thanks so much for your kind words. We really appreciate it. The next question is from Vishwanta Reddy, who's writing in from Madanapalle in Andhra Pradesh, and he's got NHPC, which he's bought at levels of 27. He's been holding since 2018, so he's making a considerable gain here. The stock is in fact up and about in trade today as well. Kushal, what are the indications on the chart? Potential for further upside, or should he book out right now?
I'm positive on the chart. I mean, after a 36-37% odd correction, the stock is again bottoming out. And today's move is just about that. It's a very nice breakout from a cup and handle pattern. So I feel that trend is going to go up. And I'm positive for, NHPC from a shorter term point of view for a target price of 93.
Is the target price. All right. I believe Kiran is calling us from Hyderabad. Kiran, good morning to you. How can we help you?
Good morning, sir.
Yes.
Actually, I am holding 400 shares of Adani Ports at the rate of 1280, sir.
Okay.
So should I hold it or...
Okay. So when did you buy this?
Recently, sir.
Okay. Recently when the stock... Yeah, okay, recently.
Yes, sir.
Okay. So, but when you bought it, was the perspective based on the price action or was it based on the fundamentals?
No, sir, actually I have bought 200 shares at the rate of 1180.
Okay.
And another 200 shares at the rate of 1280. Sir.
Okay. So, Kiran, how long can you hold this for?
6 months, sir, actually.
6 months. All right. So, based on the technicals, you would like to get a perspective on what the stock price action will be. Let me take this across again to Kushal. Kushal, on the charts, of course, we've seen a pretty sharp movement in the recent past. Does that momentum continue? And what is the kind of upside that you could potentially see in this kind of in this stock?
Adani Ports, I mean, there's been a phenomenal recovery, and I feel the momentum can still continue. And it's a very good price, to buy at because the risk reward is quite favoring. So yeah, I'm positive on the charts for a target price of 1430.
So, could you repeat that? Target, please?
1430.
1430. All right. Unfortunately, we're out of time. This has been a curtailed session. I need to give you a standard disclaimer as well. I completely forgot. Adani Ports, part of the Adani Group. NDTV Profit, part of the NDTV Group. NDTV Group, of course, owned by the Adani Group as well. But on that note, I'd like to thank Kushal as well as Avinash for joining in. I promise the next time we'll spend more time speaking to you and getting more questions to you. Thank you so much in any case for taking the time. Pleasure having you. And viewers, well, we tried to answer as many questions as we possibly could, but we also tried to give you some perspective on the Monetary Policy Committee's decision, and hopefully that holds you in good stead over the course of the remainder of the session as well. We've got lots lined up over the course of the day from Mahima and myself and the team that put the show together. Thank you so much for watching. Do stay tuned. This is NDTV Profit.
We set you up for the day's trade. 30 calls before the markets open on NDTV Profit.
Jubilant Food above a 600 level on Friday.
Wipro can be first trade to buy.
All commodities, but in that Vedanta looks good.
Our experts give you the top stock ideas to prepare you for the day.
ICICI Lombard stocks hit the first target.
It has given a very good momentum with good volume.
Don't miss the chance to make the right moves. Only on NDTV Profit, where winners are made before the bell rings.
When the whole day passes like a blur, the news just whizzes past, and you're trying to stay informed. It is our job to bring you news that truly matters. At Profit 360, we cut through the clutter, the Wall Street deals, finance and policy news that could shape your tomorrow. The newsmakers, the trendsetters, and the innovators. In 30 minutes, we've got you covered. So stay ahead, stay informed, and stay profitable with Profit 360.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
When the whole day passes like a blur, the news just whizzes past, and you're trying to stay informed. It is our job to bring you news that truly matters. At Profit 360, we cut through the clutter, the Wall Street deals, finance and policy news that could shape your tomorrow. The newsmakers, the trendsetters, and the innovators. In 30 minutes, we've got you covered. So stay ahead, stay informed, and stay profitable with Profit 360.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
When the whole day passes like a blur, the news just whizzes past, and you're trying to stay informed. It is our job to bring you news that truly matters. At Profit 360, we cut through the clutter, the Wall Street deals, finance and policy.
Hello and welcome to KYC, a brand new show at NDTV Profit. And in this fast-paced world of stock markets, investors are bombarded with information, but what they often lack is a deep, comprehensive understanding of the company they invest in. KYC, Know Your Company, is a show designed to give regular investors powerful, actionable insights into fundamentals of a single NSE-listed company every day. And today, we are going to talk about KRN Heat Exchangers. Now, this is a recently listed company, and it's actually seen a strong showing, and perhaps for good reasons. And we'll talk about all of those aspects in just a bit. But let me start by taking a look at what, in fact, the company does. So the company actually looks at, well, specializing manufacturing in, your tube type heat exchangers, which means that it does cater to the heat industry in general, perhaps those who manufacture heaters as well as those who manufacture air conditioners. So heat ventilation, air conditioning, and refrigeration industry are the three key focus areas for the company going forward. And the current production facility stands at around 1 billion units, and it's made its debut just back in the month of October of 2024, and since then that it's done rather well. Now, at least in terms of your revenue breakup, in terms of how products are distributed, about half of its revenues come from condenser coils, And that's followed by another, 40 odd percent comes from evaporator coils, and all the balance you will see coming in from headers and coppers and street metals and all the other operating revenues. But in general and largely, as you can see, the bulk of the revenues come from condenser coils as well as evaporator coils. But let me stop there and perhaps get in my colleague Anushi into the conversation as well. What Anushi and I are going to talk about is essentially all the parameters in terms of the kind of ratings that we can give the company based on 6 essential heads. Firstly, we're going to talk about the income statement, we're going to talk about the balance sheet check, as well as the return ratios too. And besides that, we're going to talk about the cash flows, shareholding, as well as street cred. Unfortunately, we don't have too much to go in for when it comes to the street consensus because, well, it's a newly listed company, and for the same reason, we won't have an update as far as your dividends are concerned. But I reckon that even these 6 parameters are going to give you a comprehensive update on how the company has turned out and possibly also the reason why it's moved the way it has. So Anushi, welcome to the show. Let's start off with how the revenue growth has been for the company as well as the profitability for KR and heat exchangers.
Agam, just by seeing the kind of street performance of this last 1 or 2 months itself, we can see that the investors in general, even the retail side, are very bullish on this counters. This can be reflected in their financials as well. We are seeing a 3-year revenue CAGR growth of 60% now. EBITDA also has seen about a 120% of a jump. The FY24 revenue stood at about 308 crore, but EBITDA stood at about 58 crore, and margins remained at around 18 to 19% of range. When we last spoke to them also, they expect their they started on a very stronger note, but they expect this momentum to carry on with H2 performance also in terms of margins and all, and the revenue metrics that we are seeing. Net profit, if we look at 39 crore of FY24 was their net profit, in which they had clocked in about a 153% of a 3-year CAGR growth. So this is how the income statement check looks like, a big positive from all the key numbers that we are looking at.
Those are some staggering numbers. There's no doubt about that in terms of how things have panned out for the company over the course of the last 3 years. And if you consider how things have panned out for the balance sheet, the picture is no different. In fact, it's on a very, very strong footing. Remember that this company is considered to be a capital goods company. So, one might expect a little bit of debt on the books considering the working capital requirements. But what's really surprising is that that's not come through. In fact, while the company has an equity shareholders value of around 500 odd crores, that's its net worth, its gross debt stands at around 50 crores. But against that, the company has cash reserves around 350 crores. So this is practically, no debt. And even if you consider just 50 odd crores on a gross debt basis, that is also negligible in comparison to the kind of traction that the company is getting. So on the balance sheet front as well, it certainly is a thumbs up, a very strong footing when it comes to the balance sheet. But, Anushi, we were talking about cash flows as well. There is some encouragement coming in here too.
Right. We are looking at some healthy cash flows also, while we are seeing what is happening over here. But I'll talk about the return ratios. You can take about the cash flows in one. Return on equity, if you look at, I'll take the FY24 numbers in picture. 41% of return on equity that the company had as of FY24 end. Return on capital employed was 31%. But do note that these are the FY24 numbers that we are looking at. Post the IPO, there has been a substantial change in their equity numbers. So we have to consider that. So strong numbers on ROE and ROC. But Agam, you were talking about the cash flow picture as well.
Absolutely. Cash flows have improved over the past 1 year. We just have data of, what's happened in the previous financial year and what's happened now. And it does seem like we're looking at cash flows of around 34 odd crores against an outflow of around 6 odd crores, and this is of course year on year for the first 6 months of this financial year. So on an operational basis too, it does seem like it's on a stronger footing. But remember that we've seen a considerable improvement in the metrics of the company, which is explainable, and that's the reason why that is, as you can see there. Anushi, moving on to shareholding, how tightly is this company being held?
Very tightly held. In fact, 71% of stake remains with the promoters as we speak. So high promoter holding that we are looking at. Foreign institutions hold about 4.1%, while domestic institutions see about 7.4%. And with the recently concluded IPO and all that, we are seeing a 18% of a stake here. So again, this is also a very strong indicator with the management remaining highly invested in the company as we speak.
And that actually brings us back to how things have panned out for the stock since it's listed. So firstly, the stock has moved up around 81% since its listing back in October. So in about 1.5 months, it's moved up and zoomed up and nearly doubled. But, as Anushi and I have been talking about, these are the many reasons why you have seen so much growth. And, the valuation picture is always going to be a little bit of a question mark. We don't have too much to go in for when it comes to dividends. We will know that in time. But I reckon that because the fact this company is in the growth phase, well, we may not expect too much in terms of dividend. That said, it's throwing up a lot of cash. So, I may even be wrong in that assessment. But overall, at least as far as your statements are concerned, it's on a very strong footing right now, and which is why we're rating this company 6 out of 6 parameters that we are discussing on KRN heat exchangers. So, one of the better IPOs to come about as far as the primary market is concerned. With that total score, with that perfect score of 6 out of 6, let's also talk a little bit about the strengths and the weaknesses of the company. So I'm going to talk about strengths and weaknesses. In terms of the strengths, of course, we have a long-standing business relationships as far as KRN is concerned, along with something like a Daikin, a Schneider Electric, also something like Kirloskar, Chillers and Blue Star. And these are all very well-established companies, So, well, they have partnerships with companies which also have a fundamental strong footing. Also, moving on, we have in terms of financial performance, where we've seen how things panned out, and the question is that the expectation of sustenance of margins, their operating margins, could only boost the company further. In terms of weakness, well, there are no long-term agreements with any of their clients or customers, but and their imports have accounted for as much as 78% of the raw materials. So they are dependent a lot in terms of their RM costs, and that could see a lot of fluctuation given the kind of traction that we've seen. As an example would be the kind of traction that you've seen in the metal sector on account of China and the kind of implications that it has had with respect to raw materials. And it relies heavily on Malaysia and Vietnam as well for several other raw materials. So that potentially could be a weakness. But Anushi, moving on to opportunities and threats.
So Agam, the biggest opportunity for this company is its subsidiary KRN HVAC Products, which has signed a 1,000 crore MOU with the Rajasthan government. While this is one of the pegs of the company's growth going forward, if we look at the capacity in this is set to expand by around 6 times by April 2025, which will take another 1-2 quarters to then stabilize, and from second quarter of next year, that is FY26, we can expect a strong set of revenue growth with the additional capacities flowing in. So just to give a picture on that, capacities which will in the next 3 years, their target is to take those capacity utilization rates to also 80 to 90%. Now, other than that, they're also focused on their increasing their export numbers, and these pertain to geographies like North America and Europe. If you look at the export numbers, that currently makes about 15% of their revenues. So another strong factor is the data centers. So we've all read reports. We've seen the kind of growth that there is in data centers, which currently contribute about 7% of revenue. So how that also plays as a leading indicating factor for the company is something that we should be watching out for. Other than that, we've spoken about these additional capacities. So with these additional capacities, they're also increasing their product offerings, which include bar and plate heat exchangers. But also coming to the threat side, it's important to highlight this also. You spoke about one was the import, the dependence on imports, about 78% coming from some of the key geographies outside. But in the threat side also, they have like 33% of their revenue from single customer, that is Daikin Air Conditioning, and 72% of their revenue from top 10 customers. So high concentration risk from their top 10 customers can be one of the factors that we should be watching out for. But other than that, even their top customers, if they plan to enter into the segment in which KRN is operating, could be one of the threats for the company's performance going forward. So this is the overall picture on the SWOT analysis also that we are seeing.
Absolutely. Well, I really hope that we've given the viewers a very comprehensive look on a very newly listed, very newly minted, listed company out there. Anushi, thank you so much for joining us and giving us those insights around the company KRN Heat Exchangers. So it's something to keep an eye on. Now, at least on the market capitalization basis, it's a relatively small one, but it certainly is one which has gained a lot of traction of late. So continue to watch out for that. In fact, let's take this conversation forward, because we spoke to the management of KRN Heat Exchangers earlier, and we caught up with Santosh Kumar Yadav, the CMD at KRN Heat Exchangers, and here's what he had to say about the company's growth prospects going forward. Listen in.
We already talked in maybe before listing and after listing also. So our existing capacity, like we are doing almost 85%. So it's, you can say, almost full. So we like going for 6x expansion, and that's why we receive money from IPOs. Almost full money we are investing on this new expansion and adding new product, also expanding our existing product. So based on that, I think our investor maybe the keen real growth. So that's why, honestly, my side I don't know how we received so good response. But from my side, we are doing a good effort, and we are want to deliver right product to our industry, best product, reliable product, and also we are want to expand our products to North America, Europe, as well as our domestic big OEMs.
Absolutely. Indeed, the market is very much optimistic on the expansion that you've mentioned. It's a 6x jump in the capacities that we are looking at. And this is through your KRN HVAC products that you're seeing. In fact, you've also made an additional stake worth about 236 crore in the company as we speak. Can you expand more about what this arm is? What is it concentrating on? What is its focus products? And the expansion, which is expected to be completed by April 25. More on the timelines and what this is for the company.
So in IPO, of course, we claim 242 crore, but we are expanding slightly more in new entities, 100% subsidiary. So with the expanding our existing, almost double the capacity first go, and then adding new product for refrigerator industry. It's one roll bond, then fin and tube, and then wire and tube condenser. Additional to one of the new heat exchanger like bar and plate heat exchanger we are going to add, and we are also like backward integration, our sheet metal parts and header manifolds, that also we are going to add. So in club we call 6x capacity compared to our existing. And then when our target for this new facility, our domestic customer as well as North America customer and Europe side and UAE customer.
So, Mr. Yadav, you've mentioned that by April 25, we are looking to open this new facility, if I'm right, with the additional capex coming in for this. So, is it that the additional capacity which is coming from April 25 onwards, what would be the kind of capacity utilization rates that we are looking at? Because if we had to compare it from the previous 1 to 2 financial years, there would be a ramp up that we are looking for in terms of revenues, in terms of orders for the company. So if you can give us perspective on what is the kind of revenues and the order size that one should be looking out for.
No, like current capacity, we are doing almost a best one, but however this new capacity we are targeting to start from April 25th, and then it will take almost 4 to 5 months to settle the process, to hire the new teams and approvals from our customer side. So from my side, I think next year, half year, we will have good production, but for of course half year we will need time from approval from our customer side and set our process and manage the other things.
So can we expect by Q2 or Q3 of next financial year, this additional capacity would be on stream for the company, and from there onwards we can expect the higher orders coming in for the business and the higher revenue that you expect to generate?
Like for our existing product, we have already new customer in our pipelines, and some of customer we already received the approvals, but we unable to start supply because of capacity constraint. So for sure, existing product we will have ramp up very soon from maybe next second quarter from next financial year. But for new product, of course, we will start with like small OEMs and aftermarket. Then we need some time from approvals from our big OEMs. So as per my opinion, I think next financial year, 2 quarter will be like maybe ramp up plan, and of course next 2 half of the year we will have maybe good production.
And what are the utilization rates that we can expect from these additional capacity?
As of now, our trend is like that we grow like if available capacity almost 50 to 60%. I think so same stream we will achieve after half year next year. Then we will have almost 50 to 60% each year. We will our target to growth on the same pattern.
So 50 to 60% in next financial year onwards that you expect?
And we are expecting in next 3 years, start from next year, we can achieve our 80 to 85% of total capacity.
This is for the existing capacity?
No, I'm talking about new capacity only.
Okay, so 80 to 90% of the capacity utilization?
In next 3 years, start from next year.
Okay, great. So from next 3 years, that is the perspective. Now, if you look at the revenues and the margins also, I'll talk about the revenue first. 28% is the growth rate that you've achieved in the second quarter. I want to understand from your sense that is this the level that we should be looking for the next half also? Because next year, as you speak, the additional capacity coming in and all that, so the revenue numbers would look much staggered, much higher than what is anticipated. So I wanted to get your sense for the next half as well as for the next 2 to 3 years.
Next half year, it will be same way because we are on the top of the capacity. And from when our new venture will start, so if we start from 25 to 26 half year, we need like approvals time, and then 25, 26 end of the half year, we will have good production, and then we will achieve this. Our new facility will try to consume about 80 to 85%. It's 3 years.
Mr. Yadav, would it be possible to quantify the numbers for us?
I think numbers cannot quantify. Of course, capacity is the 6x, so numbers will be similar that way only.
And on the margin side, 20% is what the margins are currently. So with the additional capacity coming up, what is the kind of margin picture? Would that also remain as the forefront in the 20 to 21%, or can we see further upside also with your planning backward integration, as well as we are looking for higher economies of scale with more of this capacity coming in? So can we expect a upside on this margin numbers?
We are expecting slightly upper side. There will be multiple regions, like we are putting solar plant on the roof of the top. It's almost 8 megawatt. So it means our electricity cost will be less compared to existing. Secondly, we will target export side more, like North America market and Europe market. So our margin is slightly up compared to our domestic. Third, we will have like production side more, and we are doing backward integration also. So if I club is 2-3 regions, then we are able to increase some points compared to existing.
Absolutely. You've mentioned about the growing importance of exports also. Currently about 15% of your revenues come from the export side. So, and you are planning to increase your export opportunities in countries like North America and Europe. Can you emphasize more on the export opportunities and what are the type of products that you're looking for? What is the competition scenario like when on the export side of the business?
Like with the existing fin and tube type heat exchanger, we are trying to, like as of now, last half year, we achieve almost 19% of the export. And for new facility, we will try to at least 50 to 60% to North America and Europe. So there will be also multiple region, like North America, they have anti-dumping on Chinese product, particular on our segment, almost 25%. Secondly, now our cost benefit to them is around 10 to 15%. So many customers, they are approaching us, and of course we want to start, but we will start from new facility. So it will like impact to our new facility. Mainly we are targeting to this facility like single piece flow, and we are buying new machinery with latest technology. So this facility will be, you can say, one of the best facility in India with solar plantation, green building, and new technology machine. So of course, North America side and Europe side, the customer need some good facility and of course we will invite them and then be able to target to them in well condition.
Absolutely. And Mr. Yadav, with the entry of Trump now as the president for USA, what does this mean for a company like KRN Heat Exchangers? Are we seeing, is it on the positive side? Are we looking at this entry coming in for you? Can you expand more on that front also?
My personal opinion, I think Trump is better on our product. If I had like experience on last, so he put like anti-dumping on Chinese product. So if they want to, we want to like compete with Chinese products. So for as a Indian supplier, particularly in heat exchangers, so I look seems like a positive side, of course. But I am think he putting duty on Mexico. So Mexico also one another place. They are like targeting to USA market on cheap products. So it's also good news on our product. But I feel if he will put some anti-dumping on our product, but it will be less compared to Chinese. So I think it will be better for us.
Okay, so a positive side that we are looking for this announcement. Now, I want to understand from you, what's the road ahead? You've mentioned about the capacity expansion that is happening, the new products that would be in focus post this. But for an investor, if he wants to look at the next 2 to 3 year picture for KRN, what are the 3 important metrics that one should be considering when looking at the company as a business perspective? And what are 1 to 2 points according to you, which can also be as the challenges for the business that we can point out? So it's on the basis of what are the goods and the good and the bad that one can look out for KRN.
So good side, if anybody like study our history, so I'm like first generation entrepreneur only. So we started 6 years back only. And we, like in the last 6 years, each year we bought new plot, we are expanding our capacity and we target big OEMs and we succeed on that the same. So based on that, now we are going for 6x capacity, and this, you can say ki, like my old facility, I can say it's the optimized facility, but now we receive good money, and based on that we are targeting one of the best facility in the world for our product. And then we have like same trend we will going to achieve in future as well. So that's why we're expanding 6x capacity, which really from my side, I receive an inquiry from like my customers. So they need such type capacity in India. So based on that, we design our facility, and of course we are targeting to them, and they are like some customer already visited us, and of course they really appreciate on us. A negative side from my side, I think there is nothing from my product. Of course, force measure is there, and some government policy like BIS certification on the import material they are putting, and that other side like Trump or maybe Chinese, some policy will change, so maybe they will put some anti-dumping. Right. So that I feel negative side, but the rest all is positive side.
Well, that's some very interesting commentary coming out from the management of KRN Heat Exchangers. We've also spoken about the kind of traction that, well, some potential tariff hikes from the US could impact the company, and the management seems to suggest that they're not immune to it, but it will be less as compared to several other competitors across the world. But as you can see, at least in terms of how the company has done so far, it's a 6 out of 6 in terms of the parameters that we spoke about. Of course, with that, we are also at the end of this edition of KYC, but lots more lined up on the other side. Stay tuned to NDTV Profit, and we will keep bringing you more.
We set you up for the day's trade. 30 calls before the markets open on NDTV Profit.
Jubilant Food above a 600 level on Friday.
Wipro can be first trade to buy
all commodities, but in that Vedanta looks good.
Our experts give you the top stock ideas to prepare you for the day.
ICICI Lombard stocks hit the first target.
It has given a very good momentum with good volume.
Don't miss the chance to make the right moves. Only on NDTV Profit, where winners are made before the bell rings.
When the whole day passes like a blur, the news just whizzes past, and you're trying to stay informed. It is our job to bring you news that truly matters. At Profit 360, we cut through the clutter. The Wall Street deals, finance and policy news that could shape your tomorrow. The newsmakers, the trendsetters, and the innovators. In 30 minutes, we've got you covered. So stay ahead, stay informed, and stay profitable with Profit 360.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
When the whole day passes like a blur, the news just whizzes past, and you're trying to stay informed. It is our job to bring you news that truly matters. At Profit 360, we cut through the clutter. The Wall Street deals, finance and policy news that could shape your tomorrow. The newsmakers, the trendsetters, and the innovators. In 30 minutes, we've got you covered. So stay ahead, stay informed, and stay profitable with Profit 360.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
When the whole day passes like a blur, the news just whizzes past, and you're trying to stay informed. It is our job to bring you news that truly matters. At Profit 360, we cut through the clutter. The Wall Street deals, finance and policy news that could shape your tomorrow. The newsmakers, the trendsetters, and the innovators. In 30 minutes, we've got you covered. So stay ahead, stay informed, and stay profitable with
Hello and welcome. This is Hot Money on NDTV Profit. Of course, all the focus currently on the RBI, MPC and everything the governor has said. Let's quickly though try and see how markets are responding. And there has been a bit of a response. Let's pull up the Nifty 50 and the intraday will likely show that you're seeing a bit of a recovery in that sense where markets are concerned from the lows of when the policy announcement actually started. We've seen a bit of a recovery. Nifty just about flattish. When you're looking at some of the other indices, can we pull up the Nifty Bank as well? The Nifty Bank has seen a very healthy recovery in comparison because the CRR cut definitely aids banking counters. The CRR cut will mean that at least around 1 lakh crore rupees worth of funds sitting in banks doing nothing, earning 0% interest because that's the cash reserve ratio they are essentially required to maintain, now moves straight into slightly higher yielding instruments. Something as low as even a money market fund would technically earn banks a higher return than a 0%, of course. And then a lot of that money will also go out and start getting lent out as loans, and therefore loan growth will start to also revive. A couple of factors that will likely play out. Something like a Citi, if we can pull out the CRR numbers, a 50 basis point rate cut, Citi was expecting that a 50 basis point rate cut will likely impact banking numbers by around 2 to 3 basis points in terms of margins and around 0.8 to 1.5% in terms of operating profit. So both of those metrics will start to hopefully revive, but that will only happen in Q4 because, as you can see, two tranches of decreases with regard to the CRR, 25 basis points on 14th of December and 25 basis points on 28th of December. And that will ensure that Q4 will see a bit of a margin uptick. As a result of only this, hopefully no other changes in the pipeline, and therefore that will likely impact the Q4 numbers for banks. You can see as a result, Bob being the biggest beneficiary, Axis also within private banks being one of the top beneficiaries, PNB, SBI, those are the three banks we highlighted even yesterday, that in case of a CRR rate cut, those three banks will be the best placed in terms of the impact that they will see of the rate cut. ICICI Bank, Axis, some of the other private names also come into the fore on the back of that. So the Nifty Bank doing well and showing some resilience due to that. Let's pull up some of the other sectors as well. The Nifty IT not doing as well today after the kind of push that we saw with regard to how it performed yesterday. But also let's try and understand that the Indian rupee will likely be more resilient due to the fact that the repo rate has been left unchanged, and that will mean that IT will have a softish kind of a day because a weakening rupee always favors the Indian IT industry. Not seeing that weakening likely, but let's also understand this a little better. The Reserve Bank of India left rates unchanged, maintained a neutral stance, and a positive surprise when the central bank announced a cut in the cash reserve ratio by around 50 basis points. Vishy is here, but actually we also have live visuals coming straight from the press conference which the RBI hosts post the MPC, and you can see that press conference just about beginning, and we'll probably give you a live feed straight as soon as the RBI governor starts speaking. He'll obviously give us his takeaways, and thereafter the media will ask questions to him with regard to the policy and what they see. It's going to be interesting to understand how sticky inflation is going to be. He's of course hiked the inflation expectation, really trimmed the growth forecast in a big manner. How confident is he of that 6.6% kind of growth is going to be interesting to hear. All of that likely will get discussed as part of this presser. But growth coming off, and what the policy rates will and how the policy rates will play out as a result of this pullback with regard to growth, how quickly will we see rate cuts, and why haven't we already seen it, is going to be something that hopefully we'll get more insights on as part of this press conference. There you go, live visuals coming straight to you. Let's go straight to it.
Post monetary policy press conference. Friends, we have with us Governor Reserve Bank of India, Shri Shaktikanta Das, Deputy Governor Dr. M.D. Patra, Shri M. Rajeshwar Rao, Shri T. Ravi Shankar, and Shri Swaminathan J. We also have with us Dr. O.P. Mal, Executive Director, and Executive Director Dr. Rajiv Ranjan, and other colleagues from Reserve Bank. Sir, to begin with, I would request you to make your opening remarks. After that, we'll have the Q&A, please.
I would like to, in the beginning, make five observations. First, number one, the MPC remains committed to restoring the balance between inflation and growth, which has got unsettled recently. Two, the Reserve Bank will use its various policy instruments to create the conditions for restoring the inflation growth balance. Three, the credibility of the flexible inflation targeting framework needs to be preserved. Four, inflation has to be brought down in the interest of sustainable growth. Five, prudence, practicality, and timing. I repeat, prudence, practicality, and timing will continue to be the guiding principles for the Reserve Bank's future actions. It is all about dissection of the inflation growth conditions and acting accordingly. Timing of actions is the key. Thank you.
Thank you, sir. Before we begin, I'll request the media friends present here to wait for their turn. You may see my colleagues on the aisle. They have the mics with them, so they'll give you the mics, and please speak in the mic because otherwise you'll not be audible to outsiders. And in the interest of time, as I always say, please restrict to one question per person, and if time permits, we can consider the other one. Sir, there are 24 participants from media today, and with your kind permission, I'll start calling out their names. So I'll start with Mr. Yogesh from Doordarshan.
Good afternoon, sir. Thank you for the opportunity. Sir, despite the reduction in the GDP forecast, the rates are basically maintained. The status quo is maintained, but the CRR were reduced by 50 basis points. What is the thinking behind that? Thank you.
I think I have explained it elaborately in the statement which I presented earlier today morning. And as regards growth, the second half of this year looks better than the first half. The first quarter of this year, there were issues of, that coincided with the election season, countrywide election. Probably that affected, in particularly government expenditure. Second quarter, the reasons for the slowdown we have explained. Monsoon, continuing monsoon rainfall also affected activities, particularly in mining, in electricity demand. Manufacturing also was slow. So I have explained why we expect the second half to be better this year, better than the first half. And on inflation, I have also given a path. We have also given a roadmap. So we need more credible evidence that things are happening the way we are expecting. That the direction of developments, the direction of evolving conditions, the outlook is playing out in line with our expectations. And then, as I have just now mentioned, it's a question of timing. You have to appropriately time your actions. When there is a time for a particular action, be it rate cut, be it liquidity action, be it whatever is the action, they have to be well timed. They have to be timed in a manner keeping the outlook in mind, and also action has to be taken when it is really going to be most effective and impactful.
Thank you, sir. Next, we'll have Mr. Manojit Saha from Business Standard.
Thank you, sir. Let me ask something which is there in everybody's mind. Have you heard anything from the government so far, whether you are continuing this term, at least informally, before the policy meeting started? I will have one more question today. Yes.
Is that your only question?
No, I will have one more.
No. Let's stick to monetary policy. Please ask your question on monetary policy. Otherwise, you will miss your chance on asking a question on the monetary policy. So you choose which one you want to ask.
Okay, since
it's your choice.
Okay.
I'm willing to answer the first question also, but it's your choice.
Okay, please answer the first question then.
Okay, I'm not giving you any headline, and I think it's better we stick to monetary policy. Thank you.
Thank you.
Thank you,
but
sir.
You can ask your main question, please.
The question I wanted to ask also is, how did you get the growth estimate so wrong for the Q2? You projected 7% even in October. It came out at 5.4%. So what exactly went wrong in the projection?
I would request Deputy Governor Michael Patra to take that question.
There is a lot of commentary on that already in the press. If you look at the demand side, the main problem is investment. On the supply side, the main problem is manufacturing, and the two are intertwined. In the manufacturing, the biggest issue is the slump in the sales growth, and that is reflecting inflation hitting the urban consumer. So when sales growth is down, companies do not want to invest in new assets because they see demand as moderate and it can be met from existing capacity. Since they don't want to engage in new capacity creation, investment is down. So the underlying slowdown in growth is because of inflation.
Thank you, sir. I'll now request Mr. Ankur Mishra from ET Now.
Good afternoon, Governor. I want to understand the inflation scenario which you have explained. You are also maintaining that in Q4 the situation might be slightly better, while in Q3 the upper side risk remains. Last time you had mentioned about the horse bringing back to stable. What is the scenario now? Is it the scenario that a controlled trot may continue, or you see that you need tighter reins to control the horse?
The horse has made a very valiant effort to bolt. Our effort is to keep it in tight leash.
Thank you, sir. May I now ask Mr. Vishwanath Nair from NDTV Profit?
Good afternoon, Governor. The first question is, you mentioned that if growth continues to linger lower, then you may need policy support. You are admitting that Q2 was looking weaker, even though the rest of the financial year may look better. Your cut on the growth projections is sharper than your hike on inflation projections. I still want to understand why then the status quo, because it's clear that you have a growth bias in your commentary.
No, whether I have a growth bias or inflation bias, I think it's for you to interpret. But if you recall, before I presented my statement, I made some extempore opening remarks where I have exactly explained our approach. Why monetary policy is important, what exactly is the mandate given to the Reserve Bank. In the Reserve Bank of India Act, the provision is very clear. And our effort is always to follow the legal provision, the mandate given to us, both with regard to inflation and growth. Our effort is to follow it in letter and spirit. There is no, in the life of a central bank, there is no scope, there is no room for knee-jerk reaction. We need more credible evidence. We need more evidence with regard to how the outlook is likely to be, and based on that assessment, the effort is always to take action in time. Whatever action, I'm not talking about rate cut or again, but whatever action we take, it has to be well timed, and it depends on the outlook. No room for knee-jerk reaction, because you take a certain knee-jerk reaction which you may have to reverse. So you should not, one should not regret, but let me tell you very clearly that our effort has always been to remain in line with the curve, never fall behind the curve, and I think we are maintaining that trend.
Thank you, sir. अब मैं जी बिजनेस से श्री ब्रजेश कुमार से आग्रह करूंगा.
सर, जैसा कि हर बार यही होता है कि इन्फ्लेशन को लेकर जो चिंता होती है कि फूड इन्फ्लेशन एक बड़ा कंपोनेंट होता है जो चीज़ों को डिस्टर्ब करता है आपकी टारगेटिंग को. एक डिबेट ये भी थी इकोनॉमिक सर्वे में कि क्या फूड इन्फ्लेशन का कंपोनेंट हटाकर फिर टारगेटिंग को देखा जाए. तो इस पर सवाल ये है कि क्या सप्लाई साइड को दुरुस्त करने के लिए सरकार से आपकी किस तरह की कम्युनिकेशन हाल फिलहाल में हुई है कि ये चीज़ ठीक हो, और जो इकोनॉमिक सर्वे का एक व्यू था कि फूड इन्फ्लेशन को हटाकर टारगेटिंग की जाए, उसको लेकर कोई बात?
इसी सरकार के साथ हमारा क्या डिस्कशंस होता है मैं आपके साथ शेयर नहीं करना चाहता हूं, लेकिन आपको ये कहना चाहता हूं रेगुलरली हम सरकार के साथ डिस्कशन में रहते हैं इन्फ्लेशन को लेकर, और सप्लाई साइड मेजर्स के बारे में काफ़ी इंटरनल डिस्कशन रहता है, तो उसके बारे में मैं बाहर कुछ बोलना नहीं चाहता हूं. और जहां तक आपने इन्फ्लेशन टारगेटिंग फ्रेमवर्क और फूड इन्फ्लेशन की बात आपने वो सवाल उठाई, मैं आपका ध्यान आकर्षित करना चाहता हूं कि शायद अगस्त पॉलिसी में मैंने विस्तृत रूप में एक्सप्लेन किया था कि हेडलाइन क्यों टारगेट होना चाहिए और फूड इन्फ्लेशन को हम लोग क्यों इग्नोर ना करना चाहिए। रिजर्व बैंक ऑफ इंडिया एक्ट में जो प्रोविज़न है उसके अनुसार हेडलाइन इन्फ्लेशन हमारा टारगेट है। हम अपने मर्जी से कभी कोर इन्फ्लेशन को टारगेट नहीं बना सकते हैं, कभी फूड इन्फ्लेशन को टारगेट नहीं बना सकते हैं, कभी फ्यूल इन्फ्लेशन को टारगेट नहीं बना सकते। वो जो है वो लॉ में, रिजर्व बैंक ऑफ इंडिया एक्ट में लिखित रूप में है, उसको हम फॉलो करना चाहिए। और हमारे पास वो मतलब ये डिस्क्रिशन नहीं है कि हम अपने मर्जी से कभी इसके ऊपर कभी उसके ऊपर ध्यान दें। जो लॉ है उसको हम फॉलो करते हैं। थैंक यू।
धन्यवाद सर। नेक्स्ट विल बी मिस लता फ्रॉम CNBC.
Thank you, Pani. So you couple of times you have said that the growth inflation balance has gotten skewed and you have to restore the balance. Does it mean you were skewed in favor of growth and you're going back to inflation, or was the balance skewed in favor of inflation and now it will become pro growth? How do we understand this skew question? And just a word on CRR, is that is only going to take care of the liquidity that has already gone away from the system. Q4 we are still staring at cash withdrawals, possible dollar inflows and RBI dollar sales. So do you still have OMOs or any such thing on the table?
You see, whatever action we have on the table, I will not be able to spell out. It will depend on how the situation evolves. We expect in the next few months, we expect tight liquidity for reasons which I have explained. One is that we expect the tax-related outflows from the system, both direct tax in the middle of December and thereafter the GST. Together with that, there is a possibility of likelihood of increase in currency in circulation because the busy credit season, agricultural activity has now picked up and that requires cash. That will merge into the harvest season also, which requires cash. So the currency in circulation is also likely to go up. And then there have been a significant amount of capital outflows in the months of October and November. That is, outflow of forex has happened because of FPIs exiting. So therefore, with regard to your point about dollar inflows, that is something which is difficult to quantify at the moment. Our assessment is that liquidity conditions will remain tight. And let's also bear in mind the fact that the CRR increase was done sometime, I think if I remember correctly, in April 2020. In April 2022, I think in that policy we did it. It was a temporary measure. It has served its purpose. It was time to normalize it. And with regard to growth inflation balance, I didn't say skewed, I just said unsettled. And I think in the statement I have used a different word. So basically what we mean is that last time we had said that growth inflation balance is well poised. Well poised means the growth looked good for that quarter as well as for the whole year. Inflation outlook also, we were aware that September and October inflation prints will be higher. But as you know, September and October, because of weather factor and other factors, food inflation went up very steeply. September numbers were broadly a little higher than what we had estimated. October also we had expected it to be high, but the actual number came a little higher than what we had estimated. So therefore inflation, was more than what we had expected, little more. And growth also has moderated. The numbers are, we have we have given the numbers. So the well-poised character of the dynamics between growth and inflation, that has got somewhat unsettled. Our effort is now to restore that balance, which basically means that we want inflation to be brought down closer to the target. We want growth also to pick up, and I think our estimates, our assessment also shows that growth is is picking up. So we have to be very watchful. We have to maintain that that balance between growth and inflation, and that's it. Thank you.
Thank you, sir. Next, we'll have Mr. Mayur Shetty from the Times of India.
Thank you, sir. My original question was on this GDP coming as a surprise, but Manoj has already asked that. My other question is on during your term, there have been a couple of crises, and RBI has coordinated with the government at that time, and that has worked very well, the coordination. Now that uncertainty is constant, do you think there is scope for continuing this coordination, given that, like you said, the inflation mandate is enshrined, and there is an expectation from the government that there should be a focus on growth? And also, you all do not give any forward guidance on your actions. So, do you think there's any forward guidance on your actions? So, do you think there's more scope for coordination?
No, I think coordination has been there, coordination is there, and coordination will continue to be there. So that is a constant process, and it continues. And whenever we have any thoughts or any concerns, we always share it with the government. That engagement and coordination continues. In fact, in one of my recent speeches in an international seminar which we organized in Mumbai, with the participation of, I think, the central bank governors from the south, I had highlighted the importance of fiscal monetary coordination. So that is very important. It has proved its mettle, it has proved its strength during the stressful times of COVID, and thereafter when the Ukraine war started and inflation suddenly spiked. So coordination continues.
Thank you, sir. Next, we'll have Ms. Swati from Reuters.
Thank you, sir. So we've seen growth numbers come down sharply. The 5.4% was a shocker. You also revised down your growth estimates for the next 2 quarters, whereas inflation is high. Is it fair to say that India is now in a stagflationary phase? And also looking at these growth numbers, is the trend growth for India coming down from the 7.5-8% levels closer to 6.5? Is the trend growth for India much lower than what we have been talking about?
I will pass on this question to Deputy Governor Michael Patra, but I would also suggest that, there have been so many other announcements, some very important announcements in the, in the part B of as part of our additional measures. So I think maybe some questions on that would be useful, for the wider audience which is watching this this press conference. Go ahead.
So I explained why there is a slowdown in GDP growth in the second quarter due to a special set of factors. Now, it's not, I think, appropriate to make a judgment on the trend rate on one data point. So what was expressed as 8% was not a trend. It was just the average from 21 to 24. And all over the world, for every country, the projections that are being made for 25 and 26 are implicitly correcting cyclically for the rebound from the pandemic for all countries in the world. So even when we made our initial projections, they were not at 8%, they were 7.2. And also in the monetary policy report, we gave a projection for 26, which was the same cyclical correction. After this correction is over, it will revert back to a trend, and we are yet to see the data points of that trend. What the governor has been saying is that the average between 21 to 24 was 8%. Now, if you see the second half of the year's projections, there is a reversion back towards an upper rate of growth, 6.9, 7.3, and that continues into 26. So we are hopeful that we will reach that level again.
Thank you, sirs. Next, we'll have Ms. Hamsini Kartak from Money Control.
Hi. What exactly was the rationale for reducing CRR? The question here is in the context of, in absolute terms, we don't have a liquidity deficit as such. And if I were to look at it from a banking perspective, I would think that a CRR cut would allow banks to ensure that they don't have to compromise much on margin versus a repo rate cut at this point in time, given that profitability of banks has also sort of been under the weather for the last 3-4 quarters. Was that also a thought process that you had in your mind when you initiated the CRR cut? And as such, the bank lending is also anemic. So do you believe that this will spur up or free up some more money for them to lend, increase the lending?
You see, the CRR cut I have just explained a little while ago. We have normalized it. And it was time to normalize. It was a temporary measure, so we have normalized it. What the banks do with the CRR money is entirely their call. Whether they use it for giving credit or whatever purpose they want to use, it is their call. And with regard to liquidity, it is surplus today. It is surplus today, perhaps on Monday, next week also 2-3 days it is likely to be surplus. But we clearly see that, we are going into a phase where liquidity is going to be very tight in the latter part of this month, December, and continuing into January and perhaps, into February. So we thought it was time to sort of normalize the CRR levels. And the other questions which you mentioned about, banks, some other these things, we don't make monetary policy or liquidity decisions keeping in mind the balance sheet requirements of banks. Our policies are governed by the growth inflation dynamics. Our policies are governed from the point of view of maintaining overall stability of the economy. Whatever issues are there in the banks, etc., that is dealt with through the supervisory arm of the Reserve Bank.
Thank you, sir. Next, I'll ask Mr. Ashish Agashe.
Thank you, sir. What prompted the FCNR-B measure, sir? Last time we saw upwards of $30 billion coming in after some relaxations. This time, is there some bit of idea of how much incremental money would flow in? What are your expectations?
These measures are intended to enhance the capital flows, and that has been clearly articulated in the circular. There is a scope for foreign and non-resident Indians or eligible Indians who are eligible to invest into the FCNR-B to increase their deposit base in India, and that is purely what has been contemplated at this point in time.
And it's a temporary measure, which is there till 31st March.
थैंक यू सर. अब मैं ET9 स्वदेश के श्री अनुराग शाह को आमंत्रित करूंगा.
धन्यवाद पुनीत सर, सवाल पूछने का मौका दें. सर, इन दिनों चर्चा में है कि जो बैंकों के द्वारा इंश्योरेंस का कारोबार किया जा रहा है, उसको लेकर वित्त मंत्री ने भी हिदायत दी है और हमने देखा है कि कुछ प्राइवेट बैंक, सरकारी बैंक जो है इंश्योरेंस कंपनियों में हिस्सा खरीद रहे हैं. तो वहाँ पर कुछ मामलों में RBI मंजूरी देता है, कुछ में नहीं देता है, और कई सारी जो इंश्योरेंस कंपनियां वहाँ पे बैंकों का 50% तक भी हिस्सा है. तो क्या RBI केस बाय केसेस पे ही वो हिस्सा मंजूर करता है या फिर कुछ नियमों में बदलाव किया है? और दूसरी तरफ जहाँ पर देश में इंश्योरेंस का पेनिट्रेशन बढ़ाना है और बैंकों की बड़ी भूमिका है इंश्योरेंस के पेनिट्रेशन में, लेकिन कोई कंपनी जो काफ़ी बड़ी है जिसको कोई बैंक नहीं खरीद सकता, वहाँ पर रिजर्व बैंक की तरफ से केवल टेम्परेरी मंजूरी दी जाती है बैंक में हिस्सा खरीदने पे. तो क्या उन नियमों में कुछ अभी बदलाव किया है? और सर, अभी जो आपने अपने स्टेटमेंट में बताया कि अब पॉडकास्ट शुरू करने वाले हैं, कम्युनिकेशन का भी नई स्ट्रेटजी होगी, तो उसका क्या मकसद है, किस ऑडियंस को टारगेट कर रहे हैं?
आपने बहुत सारे क्वेश्चंस पूछ लिए. मैं फर्स्ट
नहीं सर, वो पॉडकास्ट वाली नई इंटरेस्टिंग चीज
नहीं, बस वही तो मैं कह रहा था. बाकी चीजों के बारे में भी सवाल पूछना जरूरी है. आप डिप्टी गवर्नर राजेश्वर राव जी इसके बारे में रिप्लाई देंगे.
आपने जो आपने इंश्योरेंस के बारे में पूछा था, फॉर्म्स ऑफ बिजनेस के बारे में हमने एक ड्राफ्ट सर्कुलर पुट आउट किया है, जिसमें व्हाट इज द परसेंटेज ऑफ होल्डिंग, व्हाट टाइप ऑफ बिजनेस जहाँ पे बैंक्स इन्वेस्ट कर सकते हैं, उसके बारे में लिखा है. तो उसके आधार पर फ्यूचर actions will be taken or regulatory actions will be taken on that basis. So we are waiting for feedback on the forms of business circular, and that will guide us in the way we look at investments into subsidiaries or associate companies of banks.
ने बैंकों को हिदायत दी है, तो आपने भी जो मिस सेलिंग हो रही है प्लेटफॉर्म पे उसको लेकर कुछ
नहीं, इसके बारे में हमारा ऑलरेडी एग्जिस्टिंग इंस्ट्रक्शंस है. देयर आर क्लियर इंस्ट्रक्शंस. जो हमारा बैंकों के लिए जो डायरेक्शंस या इंस्ट्रक्शंस कुछ भी कहिए वो ऑलरेडी एग्जिस्टिंग है. उसमें कुछ नए करने की ज़रूरत नहीं है. लेकिन हमारे सुपरविजन के द्वारा हम ये चेक करते हैं जहाँ पे जो अपना आरबीआई इंस्ट्रक्शन से डिविएशन होता है उसमें हम कार्रवाई करते हैं. देखिए, पॉडकास्ट एक न्यू इंस्ट्रूमेंट है. इट्स बिकम वेरी पॉपुलर नाउ एंड आई थिंक व्यूअरशिप स्पेशली जो है यंगस्टर्स में बहुत वाइड है. तो इसीलिए आरबीआई हम वी वांट टू रिमेन इन टाइम्स रिक्वायरमेंट ऑफ द टाइम्स. कहीं इसमें वी in this matter also we should be ahead of the curve. So it's basically a communication tool to communicate with wider cross section of the people. There is sometimes it may be necessary not to give a detailed interview. Sometimes it may be necessary not to do a press conference. You want to talk on a particular issue, some new measure has been announced that needs to be explained to the people. Podcast will help in those kind of things.
Dhanyawad, sir. Next we'll have Mr. Anup Roy from Bloomberg.
Sir, you said that the growth slowdown is probably over. Next half's growth will be better. But at the same time, you are saying that inflation pressure will be there, probably more than what we have witnessed. Are you indicating that February rate cut is also very risky?
I have not indicated anything about the future cycle of interest rates.
Thank you, sir. Next, I'll request Mr. Sachin Kumar from Financial Express.
Sir, the growth in unsecured loans, it has come down significantly in the past few months. So, but now there is one pocket of gold loan where the growth is very strong. So, do you think is it a cause of concern, and it may also warrant the same kind of measures to curb that growth?
I would request Deputy Governor Swaminathan to take that question.
See, the growth in unsecured loans at that point in time when we took some additional macroprudential measures last year was essentially to curb the exuberance that we saw in that particular segment, so that any possible stress or a risk build-up is avoided. So that was the intention with which we took that step. Otherwise, in terms of what should be the product mix as to how the banks should drive their business is purely a business call, and gold being a collateralized loan, the banks and NBFCs have shown a preference to grow. What is more important for us is to ensure that there is fairness in their conduct towards the customers, and then the appropriate norms relating to LTV, income to repayment obligations, etc. are being adhered to in a fair and transparent manner. So our instructions are more aimed towards ensuring orderly conduct of this business. Growth or product mix is something which is essentially left to the bank's wisdom to pursue.
Qualify as an exuberance according to you?
There are no golden numbers to determine as to which is less or which is more, and also you'll have to see the percentages in reference to the base. When we talk about almost 175 lakh crore of bank credit, what is the proportion that the gold loan of a lakh plus crore constitutes? So percentages at times can look different, but what is more important is whether the portfolio is being built in a responsible manner, in a prudent manner. So that is what we would keep watching. But in any case, we remain watchful of the incoming data, and if some prudence demands that we should initiate some action, we will take it at the appropriate time. At this point in time, the guidance in terms of the conduct would suffice is our view.
Thank you, sir. Next, may I request Mr. Piyush from Hindu Business Line?
Good afternoon, Governor, DGs. Thanks, Puneet sir. Governor sir, first question is with regard to Sachin sir asked about gold loans. My question is on MFI. A lot of MFI companies are seeing higher delinquencies, creating higher provisions. Is the RBI concerned about SHGs? Somebody mentioned only 6 months also they don't have any experience, but they still get loans. So in MFI sector, are we seeing any incipient stress building, and what are your views on that? And so separately, what gives you the confidence that current fiscal 6.8% GDP growth can be achieved, the revised projection that you have done? Because November, we saw 6%, 7% fall in UPI transaction. I know it's not a only indicator, but month on month, it's fallen 7%, and it is a month of festivals. So these are the two.
No, you see, on the gross number, I think I have explained it elaborately in the statement, and now also I have explained. Now, what gives us the confidence or no confidence? I think it's for you to assess whether our numbers for the third quarter are realistic. We have made our assessment, and we look at multiple factors. It's not just UPI is just one of the factors. But on the other part of your question on MFIs, I would request Deputy Governor Swaminathan to reply to that question.
Yeah, these are some of the segments in which, as we spoke last during the course of MPC as well, there are certain segments we saw increased slippages in the Q2 numbers that were emerging. And as we mentioned earlier, it was not very surprising to us because these were the segments which saw an outlier growth a year before, and we had taken some proactive measures on that. And we had also, if you recall, in the August monetary policy statement, Governor has said that in these segments where enhanced slippage is being witnessed, we have requested the banks and NBFC to strengthen their underwriting standards, and B, to step up on their collection efforts to ensure that the stress does not translate into NPAs. So on the same theme, we continue to engage with the entities wherever we see any outlier behavior. At the system level, it is still not a big concern. About 20-30 bips uptick in stress is something which we are confident that the entities will be able to handle. And in certain entities where these particular numbers are a little outlier, we deal with them on a bilateral basis, examining as to the steps that they are taking up to ensure that the stress is not widespread. And third, of course, through the SRO, there are enough levers that are available to us to ensure that the self-regulatory organization in this particular space, in the MFI space, are taking adequate steps to sensitize their members to adhere to the prudential guidelines of Reserve Bank and ensure that the household income assessment and the repayment obligation towards the net monthly income, etc., are strictly adhered to. And as Governor said earlier, to avoid the push effect, just respond to the demand rather than give loans to achieve someone's target. So I think these are 3-4 key messages that we have managed to deliver in the last 2-3 months. I think that should be good enough to ensure that the balance is restored in this particular segment.
Yeah, please.
On the PI numbers, I think we shouldn't read too much. There was an oversized increase last month because of the way the festivals fell this year. So that got corrected for this month. So I expect that the trend will continue going forward.
Thank you, sirs. Next, I'll request Mr. Laltendu Mishra from the Hindu.
Good afternoon, Governor. US President-elect Donald Trump has reportedly threatened to have tariff barriers on BRIC nations like India. Will it impact on exports or is it a matter of concern? Thank you.
No, it is. We have to, first thing is, let's not prematurely, let the policy come. And so far as the BRICS, you're referring to the BRICS countries in the context of the BRICS currency and all that. You see, sorry? Yeah. So now the BRICS currency was an idea which was raised by one of the members of the BRICS countries, and it was discussed. No decision has been taken in the matter. The geographical spread of the countries also is a factor which has to be kept in mind. Unlike the Eurozone, which has a single currency, then they have geographical contiguity. BRICS countries are spread all over. That also has to be kept in mind. And with regard to the dollar, de-dollarization, etc., there is absolutely, so far as India is concerned, there is no step which we have taken which specifically wants to de-dollarize. All that we have done is that we have permitted opening of Vostro accounts, and we have entered into agreement with couple of two countries by now to do local currency denominated trade. That is basically to de-risk our Indian trade. dependence on one currency can be problematic at times because of appreciation or depreciation. So as a part of de-risking our trade, that is a step which has been taken. Nothing, de-dollarization is not our, certainly not our objective. It's not on the table at all. I think it's more of a more of a narrative which is being said in some sections of the media. Our effort is basically to de-risk our trade. Nobody is talking about or thinking about de-dollarization.
Thank you, sir. I'll request Ms. Sangeeta Mehta from the Economic Times.
Thank you, sir. Sir, could you share your thinking behind the introduction of SORR that you have spoken in the policy? And sir, could you give some idea on the timelines for the draft guidelines, because almost 4 of them are already being talked about, the project finance, LCR and ECL, climate finance. Could you give some idea when they would be?
Okay. SORR, I think you can.
So as of now, we have 2 benchmarks which are set out by the FBL. One is the MIBOR, which concerns uncollateralized transactions, and we have the MROR, which is based on the market repo. But the TREPS, which is 60% of the market, is not in that index. So this index that we will have now will capture all secure transactions. That's the limit.
And on the other part, I would request DG Rajeshwar Rao to give the reply.
Guidelines are fairly major game changers as far as the banking system is concerned. So we have got significant feedback on all these guidelines. Those need to be carefully evaluated, and we will calibrate the way these guidelines are rolled out. So I think there is, but we are in the process. We are close to finalizing some of the approaches. I will not give a definite timeline.
No,
we will do it as fast as
we have
possible.
followed a very consultative approach. These are all, they will bring about significant changes in the banking system. So we are, proceeding on it. These measures are necessary, but we have to proceed in a very careful and calibrated manner, in consultation and taking into account, not in consultation, but taking into account the suggestions and other issues, which have been raised by the banks and several other stakeholders. So we want to move very carefully, very cautiously, so that when implemented, the implementation is as non-disruptive as possible.
Thank you, sirs. Sir, with your permission, 2 more questions. Yeah. So I'll request Mr. Ben Jose from New Indian Express.
Hi, sir. Hope to see you announcing the next policy, sir. And congratulations for the 6 years of tenure. And Patra sir, we will miss you at the next policy. My question is what Laltendu asked about. It's a further building on that. The rupee has been under pressure, and if the Trump tariff war happens, say 10% on Indian exports, and what could be the impact on the rupee going for if the tariff war happens?
I'll take that question.
The tariff hypothetically, if it happens, will not be an isolated event. There will be other events around it. Like, for instance, they say that perhaps China may react by devaluing the currency, or there might be retaliatory tariffs. So at this point, it is very difficult to say what will be a unilateral move and a unilateral effect. Let us wait for the general equilibrium effects.
Thank you, sir. And lastly, I'll request Mr. Siddharth Upasni.
Thank you, sir. Afternoon, Governor. A couple of months ago, there was a paper co-authored by you, Dr. Patra, saying that the rate hikes since May 2022 have negatively contributed to growth by around 160 basis points. So has too much growth been sacrificed to reduce inflation? And are those rate hikes and the retention of the repo rate at 6.5%, is it expected to continue impacting growth going forward? And second, on FCNRB, is the FCNRB limit increased to reduce the pressure on RBI's forex interventions, because the monetary policy and forex management policy has been at sort of odds. The interventions have drained out a lot of rupee liquidity. So is that also been a consideration? Thank you.
I think since the paper was authored by Dr. Michael Patra, he should. I think he can reply.
So I'm happy that you've read the paper, but I do hope you've read it carefully. What it says is that the cumulative rate increase of 250 basis points reduced inflation through aggregate demand by 160 basis points. But inflation fell from 7.8% in April to 3.8% recently in August. So of the 320 basis points, only 160 is due to monetary policy. Okay. Now, in the same paper, you will see that there are charts which show the impact of an interest rate change on output and inflation. The impact on output starts after the rate increase and reaches its peak in the third quarter after the rate increase. It plateaus in the fourth quarter. And after that, it fades away. So if you take the cycle of rate hikes, the cumulative peak was in July-September 2022 in terms of quarters. So take 4 quarters from there for the effect on output. July-September 2023. So after that, output starts to rise back. The effect on inflation lingers for 10 quarters. So by now, output has started to go back and it has actually crossed what we call its potential level. So to ascribe the growth slowdown of the second quarter to that is, I think, stretching the case too far.
Sir, one last question. So, Ms. Gopika, you would like to ask, right? Yeah, you can please speak now.
Yeah, I mean, just adding to his question, is that a concern? I mean, was that a consideration, the forex reserves, given that we had seen, the kind of outflows last 2 months, and more is expected. The market is expecting a similar quantum of outflows the next few months. What is a consideration? Is that a consideration behind coming out with the FCNRB hike? And also, will there be more measures to sort of protect the currency? And my second question, sir, on usurious rates, RBI has raised a lot of concerns around usurious rates. Now, the Reserve Bank has followed a principle-based regulation and has removed any sort of caps on interest rate lending rates. But given the kind of concerns that are rising in the industry, MFIs, unsecured loans, is there a need to define a boundary or a threshold in terms of lending rates?
You would take that thing, or you will take usurious? You will take. But before that is FCNRB. Let me say, first thing I want to say that our forex reserves are quite robust even now, and the depletion in the reserve, which has happened in the last few months, part of it, and a good part of it, is because of valuation losses. Still our reserves, the latest print, I think we gave out 656 or something like that. I don't remember the number exactly, but reserves are still, forex reserves are still quite adequate. We are confident of dealing with any spillovers. Now, you mentioned that is Reserve Bank concerned about outflows and all that. You see, somebody said that key inflows are expected. So how the forex market will behave going forward, we cannot really sort of, we cannot make a guess. We cannot really assess. We have to see there are so many uncertainties. New administration in the US that will take over, the response of other countries. So it's a very dynamically evolving situation. So as per requirement, we will take action. And so therefore, at the moment, we have no concern at all. It is a facilitation which we have provided to attract more, more inflows and an opportunity for NRIs to invest. And I actually lost a bit of, because your question, 2 questions so long. Is there anything else you asked in that FCNRB?
Will there be more measures?
No, about more measures you will have to wait. I can't spell out now. More measures as and when they are required, we will take. But on the FX front, let me say very clearly and emphatically that our forex reserves are strong, and I have, I think, devoted 2 paragraphs in my statement to explain the rationale for RBI's forex management. The focus is not just to deal with spillovers. It is an essential part of Reserve Bank's policy to build stability of the macroeconomic stability and financial stability of the domestic system.
Thank you, sir. Sir, so this is the end of question. Would you?
Oh, sorry, there is a user.
Yeah, maybe. See, as you would recall, Reserve Bank, after extensive consultation, has deregulated the administered interest rates, and this freedom has been placed with the boards of the banks and NBFCs. And we have also said that the boards are expected to use this freedom placed in them in a prudent and sensible manner to ensure that their pricing practices are not considered usurious, whether it is pricing or fees. And we have also said in the same regulation that this will be subjected to supervisory assessment. So basis such assessment over the last couple of years, wherever we have found such practices, where we found that the customer interest was in danger, and the decisions were more driven by profit motives rather than securing customer interest, we have called out such entities. As Governor mentioned, we have had extensive discussion with multiple entities. Many entities have taken measures themselves to correct the situation, and a few entities which were considered outlier, we have singled them out for supervisory action, which we will anyway going forward review subject to they rectifying their position. And the third part of your question is in terms of are we having a rethink? I don't think at this point in time we still expect the industry to correct itself and use the freedom placed with them in a sensible manner so that their business grows in a responsible manner, ensuring fairness in their conduct and fairness to the customers. That is what we will continue to push at this point in time. Thank you.
Thank you, sir. Sir, would you like to?
So, I mean, before we conclude, there was one announcement which I made about this mulehunter.ai. I thought there will be a question on that, but since it's not there, but just to disseminate the information to the wider audience, people who are viewing this broadcast, I would request Deputy Governor Ravi Shankar to very briefly explain that.
Thank you, Governor. Thank you also for intervening so that I got a direct question after a long time. No, the Mule Hunter is basically an infrastructure level setup we are creating, which will use the databases from all banks, all other payment system operators, and its AI engine will be trained based on this wide set of data to be able to identify frauds, etc., much more effectively in the financial system. If you look at frauds, the number of frauds are increasing, the amount involved in frauds are increasing, although number of frauds per transaction is coming down over the years. But the number is increasing fast enough for us to be concerned about it. I just wanted to clarify one point with respect to Mule Hunter, because there was some talk about it, that any entity, any payment system operator, any bank, any credit card network, every entity is free to use their own fraud detection systems. They will probably be used over and above this, and every individual is free to in fact innovate based on their own expertise, their own AI engines and so on. Reserve Bank's idea of introducing this Mule Hunter is to create an infrastructure level facility which others can use. With many participants, many small banks, etc., cannot devote enough resources to develop such systems, can actually use this. Even for the well developed ones, this is a base which everyone can use. Thank you.
Thank you. I think before my colleague Puneet Pancholi concludes, there is just one information I want to provide. This is about the RBI. This is about the RBI 90 quiz, which we started in which we launched this year. So, as you would be aware, we had launched the RBI 90 quiz in August this year. This was a nationwide quiz for undergraduate students as part of the commemoration of the Reserve Bank's 90th year. I am happy to say that there was an overwhelming response to the quiz, we are holding the national finals today at 2:30 p.m. in Mumbai. It will be live streamed on Reserve Bank's YouTube channel.
Well, so many interesting takeaways coming in, more so that the RBI will be patient with regard to where inflation is concerned, and no knee-jerk reactions coming from the RBI just due to the fact that growth has slowed down. In fact, they believe growth not necessarily slowing down because rates are higher. So plenty coming through, but with that, out of time on this edition of Hot Money. Stay tuned for all the news and updates. We'll continue to pour all of those your way on the other side. Thanks so much for tuning in.
We set you up for the day's trade. 30 calls before the markets open on NDTV Profit.
Jubilant Food above a 600 level on Friday.
Wipro can be first trade to buy all commodities, but in that Vedanta looks good.
Our experts give you the top stock ideas to prepare you for the day.
ICICI Lombard stocks hit the first target.
It has given a very good momentum with good volume.
Don't miss the chance to make the right moves. Only on NDTV Profit, where winners are made before the bell rings.
When the whole day passes like a blur, the news just whizzes past, and you're trying to stay informed. It is our job to bring you news that truly matters. At Profit 360, we cut through the clutter, the Wall Street deals, finance and policy news that could shape your tomorrow. The newsmakers, the trendsetters, and the innovators. In 30 minutes, we've got you covered. So stay ahead, stay informed, and stay profitable with Profit 360.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
When the whole day passes like a blur, the news just whizzes past, and you're trying to stay informed. It is our job to bring you news that truly matters. At Profit 360, we cut through the clutter, the Wall Street deals, finance and policy news that could shape your tomorrow. The newsmakers, the trendsetters, and the innovators. In 30 minutes, we've got you covered. So stay ahead, stay informed, and stay profitable with Profit 360.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
When the whole day passes like a blur, the news just whizzes past, and you're trying to stay informed. It is our job to bring you news that truly matters. At Profit 360, we cut through the clutter, the Wall Street deals, finance and policy news that could shape your tomorrow. The newsmakers, the trendsetters, and the innovators. In 30 minutes, we've got you covered. So stay ahead, stay informed, and stay profitable with Profit 360.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
No rate cut. RBI Governor Shaktikanta Das says the Monetary Policy Committee is in wait and watch mode as they attempt to balance inflation and economic growth. More liquidity in the banking system. This was welcomed by the markets and economists. The Monetary Policy Committee decided to stagger rate cuts for cash reserve ratio, that is CRR, by 50 basis points. Inflation remains stubborn. The RBI has hiked inflation projections for the current financial year from 4.5% earlier to 4.8%. The battle against mule accounts used for money laundering continues. The RBI announces an AI tool which will help to reduce the AI digital fraud. Well, hello and welcome to NDTV Profit. You're watching Market IQ. My name is Rucha Somaya and we'll quickly begin looking at the markets. But before that, our big headline for today is the decision from the RBI's monetary policy. Here are the 5 key takeaways from RBI Governor Shaktikanta Das' speech. Number 1 takeaway is no rate cuts. The RBI Governor said that the MPC has voted 4:2 to keep the rates unchanged. Takeaway number 2, the RBI has also decided to keep a neutral stance in order to watch inflation amid and also ensure growth. Takeaway 3 is that the RBI has lowered GDP growth projection to 6.6% from 7.2% earlier. And takeaway number 4 is that the inflation is projected to be higher at 4.8% from the expectation of 4.5% earlier. Well, the governor said that the last mile of deflationary period has quote long and arduous unquote. And the takeaway 5 is that the CRR, that is cash reserve ratio, has been cut to 4% from 4.5%, and this will inject more liquidity of over 1 lakh crore rupees into the banking system. Well, the cash reserve ratio is the amount of money that needs to be set aside by the bank to be able to pay out deposits. Well, the markets reacted almost instantaneously to the RBI governor's speech. There was a sharp dip when the governor announced that the rates were unchanged. Some minutes later, when he announced that the CRR, that is cash reserve ratio, will be cut, the markets took heart and surged again. Take a look at how this played out.
The Monetary Policy Committee decided by a majority of 4:2 to keep the policy repo rate unchanged at 6.5%. Consequently, the standing deposit facility, that is SDF rate, remains at 6.25%, and the marginal standing facility, that is the MSF rate, and the bank rate. To ease the potential liquidity stress, it has now been decided to reduce the cash reserve ratio, that is to reduce the CRR of all banks to 4% of demand and time liabilities, that is NDTL, and this will be done in 2 tranches, 2 equal tranches of 25 basis points each.
Banker Rajiv Anand said that he expects a rate cut of 50 basis points in the next cycle. Well, this is due to what he calls a palpable slowdown in the economy. Listening to what he had to say.
The problem that we've seen so far is, on the one side, we have certainly, like I mentioned to you, the slowdown in the economy is palpable. But on the other side, we are certainly seeing inflation being quite sticky at this point in time. We need to see those inflation numbers, come down into the 4 handle before we can even think about a rate cut. So I think the RBI's own expectations is that we will see a inflation number in the vicinity of about 4% sometime in February. So the earliest expectation that we have as far as the rate cut is post-Feb. But having said all that, I think the rate cut cycle itself is going to be quite shallow at the very best in this sort of an environment. We don't expect the rate cycle to be more than 50 basis points, which means that the 6.5 could at best go to 6%.
Well, my colleague Vishwanath Nair is at the RBI headquarters and he breaks down what the RBI's decision means to you and me. Over to you, Vishy.
So you just heard the RBI governor talk about the latest monetary policy announcement. Here's 5 key takeaways that we at NDTV Profit are bringing to you. The first one is that there is no rate cut. So as far as interest rates are concerned, it is a status quo policy. Repo rate continues to be at 6.5%. What does that mean? Well, essentially your or my interest rates on loans as well as deposits are not really moving anywhere. The other part, the second takeaway is that the RBI and the MPC have maintained the stance at neutral. Now remember that till before the last policy, the stance was at withdrawal of accommodation, which means that all the accommodations that the RBI and the MPC had made during the COVID era, those were being withdrawn. So now what the MPC is saying is that we are in a neutral stance. Essentially, we are not committed to any kind of rate cut nor rate hike. Depending on the evolving situations, we will take the next call. The third important takeaway is that the RBI has lowered its own GDP forecast. So GDP forecast earlier was 7.2%. That has been lowered to 6.6%. This comes on the backdrop of a weaker than expected Q2 GDP number. And there is hope that at some point in time in the second half of the financial year, the government will boost some amount of consumption, some amount of spending. It will also, there is also going to be some amount of agricultural produce, which is going to again boost the rural economy. So growth will come up, but maybe not as much as what was originally anticipated. The fourth key takeaway is on CPI inflation. There, the MPC and the RBI have decided to up their projection from 4.5% for the full financial year to 4.8%. What does that mean? Well, essentially, the RBI is saying that in Q3, that is the October-December quarter, you will likely see food prices keep trending higher, and therefore you will see overall inflation trending higher. But eventually, as the Kharif crop comes in, these prices will start to tinker down, but that still has a bearing on the overall number for the financial year. That's why from 4.5 to 4.8%. The last key takeaway and probably the most important news of the day is the cash reserve ratio being cut. Now, what the RBI is saying is that we will be cutting the cash reserve ratio by 50 basis points in 2 tranches, so 25 basis points each over the course of December. This will boost the liquidity in the ecosystem by about 1.16 lakh crore. What does this mean? Well, essentially banks will have more money and they will have less of a funding crunch, which means that credit availability for you improves. Hopefully that translates into some amount of interest rate benefits, but that part may not actually happen. What will probably happen is that banks are slightly more comfortable and your access to credit remains as easy as possible.
Well, thanks for that, Vishy. But to talk to us more and to give us some more insights on the RBI meet policy takeaway, we are being joined by Kaushik Das, who is the Chief Economist of India and South Africa at Deutsche Bank. Well, thanks for joining us, Mr. Das. And in addition to him, we also have Mr. Dheeraj, the economist and strategist at ANZ Research. Well, thanks, gentlemen, for joining me. And with me is my colleague Pallavi, who tracks the economy very closely. My first question to you, Mr. Dheeraj, well, this one to you. What do you make of this outcome which has come this morning?
Well, look, I was in the rate cut camp for today. The idea was that the growth slowdown, which is underway, is sharper than expected initially. So, of course, there is a requirement for policy support, and that is the stance I maintain even now. So, I do think that while the CRR cut was quite welcome from a liquidity perspective, the rate cut is possibly getting delayed to February, but not later. And I do think that the growth outlook is still optimistic as far as the Reserve Bank of India is concerned, and growth will likely undershoot even their revised assessment. And I think that warrants policy support. So yeah, 25 pip rate cut in February, 3 rate cuts in total. But as of today, welcoming the CRR cut, I was hoping that a rate cut also happens, but better late than never.
All right, thanks for that, Dheeraj. But coming to you, Kaushik, thank you so much once again for taking time out to speak to us. But any quick thoughts, any quick summarization of today's events, broadly in line with your expectations, right?
Yeah, hi Pallavi. It came just in line with our expectations. Even before the GDP data came out, our view was that the CRR should be cut. And the reason being that, you were seeing some tightness in liquidity in the system because RBI was intervening in the FX market. And, we knew that, in the next few weeks, we'll have advanced tax outflow. currency in circulation leakage. My calculation is about 1.6 trillion INR will flow between December to March. So there'll be tightness in liquidity. And we think that RBI will continue to intervene in the FX market. So in order to take care of domestic liquidity and be consistent with the neutral stance, first what you needed was to cut the CRR so that domestic liquidity doesn't tighten too much. You've done the change of stance to neutral in October. The next logical sequencing should be to cut the CRR and make the liquidity a little bit more comfortable. And then you follow it up with a repo rate cut in February or April, depending on the data. But this is the sequencing that we expected, and RBI, delivered on that today. And we are not surprised at all. I mean, it came in line with our expectations. I think Governor Das talked about timing, being the key of any decision. And I think the CRR cut has come at the right time. Going forward, I think you will get a repo rate cut. Typically, in the past, 20-year period, different cycles, the maximum that RBI has held on between the end of a rate hike cycle and start of a rate cutting cycle is 11 months. So this has almost become, 2 years. And part of the reason is because the Fed delayed its own rate cutting cycle. So to that extent, I think beyond this, it could have a little bit of problem on growth going forward. RBI will be forward looking when it comes in February. And at that time, it will look at inflation being at close to 4%. And even, growth, if you get 6.5%, it is still below potential. And therefore, RBI will have justification to cut the repo rate in February, in my view.
Okay, so, taking that forward, Kaushik, so, you've spoken about how growth might still be below potential. Now, I do want to understand, what are you making of economic activity currently? Is the worst behind us? Even the governor alluded to, bottoming out of high-frequency indicators in Q2. Broadly, we're all expecting a better second half to the fiscal. So, in terms of growth as well as inflation, would it be fair to say the worst is sort of behind us?
Yeah, so the broad view is that the 5.4% number that we got, that is probably, the lowest that we've got. Going forward, it will be better than that. And there could be some upside revisions to that number as well. We know that GDP number tends to be very volatile, and the revisions, often are pretty meaningful when it happens. So remember that October-December GDP number comes out in end February, and it will come with all kinds of revisions to the past numbers. So all these numbers can change. Now, the issue is that RBI has given a 6.6% forecast for the year, which would require, second half growth to be about 7%. I would not say it's impossible. It is possible because we are seeing, kind of economic indicators taking a little bit of upward move from what we've seen in September. October was much better than November, but overall, I think we can still get to 6.5%. Maybe 6.6 is a little bit too much. But the number that RBI has given for FY26, 6.9 and 7.3% in the first half, I think those are slightly on the upside. Those could have downside risk. The broad story is that if you still manage to grow at 6.5, 6.7%, that is below potential growth rate of the economy. And, different people have different estimates for potential growth, but most people believe that potential growth rate for India is 7% or slightly higher. So from that perspective, if you have growth coming below potential as an average for the year, and you have inflation coming towards 4% in the next 3 to 6 months, monetary policy should always be preemptive and forward-looking. So when you come to February and you take a call for the next 3 quarters, I think that will be a good enough time for the MPC to decide to cut the repo rate. Already 2 people have moved for a rate cut from 1:5 earlier. I think in the next policy you will have a rate cut from the MPC.
I have a doubt there, Kaushik. So you've spoken about how we're still looking at below potential growth, right? But another camp is also of the view, right, that so far we were seeing some benefits from post-pandemic recovery, and now we're looking at growth normalizing. So, how do you sort of view that as, and what is potential growth rate in the current scenario then looking like? Are we still looking at potential growth rate of 7% odd, or do you think that figure is now slightly lower?
No, so when we came out of the pandemic, we thought that the potential growth rate has fallen, and that's why we thought RBI's neutral real rate should be lower at about 1%. RBI themselves came out with a calculation of 1%. Then what we realized is that the potential growth rate has not fallen that much because of the supply side reforms and a lot of changes that have happened in the economy. So probably potential is still 7% or higher. And that is probably one of the reasons why the core inflation trajectory was coming down when RBI hiked rates, tightened liquidity, came out with macroprudential norms. If indeed the growth was more than the potential growth rate, then core inflation should have gone up. So to that extent, we think the potential growth rate is still 7% or higher, and that hasn't kind of got affected that much. Compared to that, if you take care of all the noises and the idiosyncrasies that are there in the GDP data, deflator, I think we are growing below potential. And the point that you made, what happened was after COVID, a lot of growth support came from the urban side, and the rich people in the urban areas, supporting growth. Now, those people who have made luxury purchases of a property or a car, they're not supposed to do it every year. So those 2-year period of spending that had happened, I think that has kind of slowed down. So that incremental slowdown is reflecting on consumption growth. Rural consumption is improving on the margin, but that cannot offset completely the slowdown in the urban consumption. Therefore, overall, you are seeing growth coming down to 6.5% odd number, and that is lower than the potential. And the problem is that next year you have the global backdrop, probably, which could become more challenging. Exports could become an issue if tariffs are imposed. So taking all that into consideration, our growth estimate for next year is also 6.5% FY26 compared to RBI's at 7. And that's why we think some monetary support is required, particularly when the government will keep on consolidating the fiscal deficit towards 4.5% next year.
All right, Dheeraj, coming to you, like Kaushik just mentioned about, the fact that we might require some monetary support. You've also spoken about possible requirements for some policy support for growth as well. Do you think there's requirement for some fiscal policy support, especially given what we've seen consumption trends to play out as now, even when we are seeing signs of some sort of a rural recovery, now it's urban consumption that's, growing at a slower pace. On what basis can we even expect that to then flip?
Look, at the moment, I don't think there is a very strict imperative for fiscal to push for urban consumption. It's a cyclical slowdown. Let's sort of understand that first. And business cycles happen always. So I don't think there is a strong fiscal imperative to push urban consumption higher. In fact, I would still think that the imperative for the fiscal should be to lower the fiscal deficit further. So I would advocate for the government to stick to the fiscal deficit reduction path, even in FY26. Having said that, I see the support for monetary policy as being more important at the moment, because whether it's business capex or the real estate cycle or urban consumption, these are all to some extent interest rate sensitive sectors which may have felt the burden from higher real rates as well as macroprudential tightening of the recent quarters or in the recent past by the Reserve Bank of India. And as it appears in high frequency indicator that the real estate cycle or the construction cycle looks to be peaking, urban consumption has moderated substantially, and wage growth does not seem to be very encouraging for the outlook on private consumption growth. So I think at the moment, monetary policy is where we need greater adjustments than the fiscal policy. But at the same time, I would also acknowledge that, coming off a very strong base and a period of very strong years, strong growth years, this is perhaps reflective of a cyclical correction, which is usually inevitable.
All right, guys, this is Vishwanath Nair joining in. Kaushik, I want to ask you, so I hope you've not answered this already, but the one point that the regulator, the RBI governor mentioned very clearly was the fact that they feel that they have been right in line with the curve, they've not been behind the curve at all, and that they do not want to take any knee-jerk reactions just by reading one growth number. Having said that, do you agree that maybe the RBI has been with the curve or maybe behind it? What's your assessment looking like?
So I think, today's decision of cutting the CRR and not cutting the repo rate immediately, I think that's a very, very prudent and timely decision. Because if you had cut the, repo rate immediately, it would have also signaled that you are panicking, that, growth has kind of fallen completely and you are kind of going to stay in that trajectory for a long time. When you're saying that your growth will improve over the next few quarters, this was, maybe a temporary kind of number, and not this kind of low numbers are expected. I'm not saying growth hasn't slowed down. We have been arguing for a long time that growth is slowing down, but nobody expected growth to be this low. But this looks like more of an aberration going forward. Maybe we'll not hit the RBI's numbers, but growth will still be quite decent compared to global standards and compared to India's own growth as well. But the point is that today, what they needed to do was first take care of the liquidity, because unless you have sufficient liquidity in the system, even if you cut rates, you would not have effective transmission of those rate cuts into the real economy. And this also gives time for RBI to kind of be sure with their assessment whether inflation will actually come down to the extent that they're hoping. Our guess is it will come down, but I think RBI wants a little bit of confirmation from the data that the worst is behind for inflation as well. What we saw in October at 6.2, November we're expecting around 5.6, and then incrementally it comes down towards 4% in the first half of next year. Similarly on growth, if they think that growth is kind of improving, but maybe not to the extent that they had hoped earlier, then taking both these things into consideration, they can consider cutting rates in February. And monetary policy, as I keep on saying, is always forward looking. It's not about just the growth rate that we are getting now. It is about taking a call that 2 quarters or 3 quarters down the line, or maybe even a year down the line, what would be the growth number, what would be the inflation number without any monetary policy support. And if you believe that those numbers could be much lower without monetary policy support, then you need to start easing 3 quarters before, and not wait till the time growth has fallen quite low and you are behind the curve. So I think RBI is on ball, and February would be a good time for RBI to cut the repo rate once they have already cut the CRR in December.
Right. Right, Dheeraj, I want to take this question with you. The FCNRB announcement that came from the RBI. Now, during the press conference, reporters did ask that, does this take the pressure away from the forex reserve spending that they've been doing, the depletion that has been happening? The RBI governor and the deputy governor sort of played it off as a lot of it is because of valuation losses and not necessarily only because of rupee intervention. I just want to get your view, how effective a tool is FCNRB as far as managing the forex situation is concerned?
Look, if the situation was really dire and we needed a lot of that foreign capital to come in, maybe that would have been an effective tool at the margin, giving that required boost to the reserves. Right now, the situation is not such. I mean, reserves have fallen, of course. They're sharply lower the past few weeks, but they're not at a level which makes you very nervous. But I do acknowledge the fact that the drawdown in the reserves, whether it's because of valuation effects or actual intervention, coupled with the fact that the RBI's forward book is looking so stretched on the net short side, tells me that the pressure on the rupee has been substantial. And it's understandably so. Not only our external headwinds were against the currency, so to speak, but after a very long time, after several years, even the domestic pull factors, are not working in your favor. Growth has slowed, inflation has remained sticky, current account is widening, even if it's manageable, equity markets are taking a bit of a beating. So I do think that when both your push and pull factors are not working in your favor, the pressure on the currency can be sharp, and possibly the only way for USD INR is higher from here, maybe even in quicker adjustments that we have seen in the recent quarters. So coming back to the question on FCNRB, in such a situation, it may marginally help, but I don't think it would be a strong tailwind that can really offset the kind of depreciation pressure that we have seen in the rupee in the recent weeks.
Right. Thank you so much, gentlemen, Kaushik and Dheeraj, for those insights. And I thank my colleagues Vishwanath and Pallavi as well for joining this conversation. But that's all that we have on the show for now, viewers. It's from me, Pallavi, Vishwanath, and the team who has put this show together. Thank you very much. Do stay tuned to NDTV Profit. Lots more action on the other side.
We set you up for the day's trade. 30 calls before the markets open on NDTV Profit.
Jubilant Food above a 600 level on Friday.
Wipro can be first trade to buy all commodities, but in that Vedanta looks good.
Our experts give you the top stock ideas to prepare you for the day.
ICICI Lombard stocks hit the first target.
It has given a very good momentum with good volume.
Don't miss the chance to make the right moves. Only on NDTV Profit, where winners are made before the bell rings.
When the whole day passes like a blur, the news just whizzes past, and you're trying to stay informed. It is our job to bring you news that truly matters. At Profit 360, we cut through the clutter, the Wall Street deals, finance and policy news that could shape your tomorrow. The newsmakers, the trendsetters, and the innovators. In 30 minutes, we've got you covered. So stay ahead, stay informed, and stay profitable with Profit 360.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
When the whole day passes like a blur, the news just whizzes past, and you're trying to stay informed. It is our job to bring you news that truly matters. At Profit 360, we cut through the clutter, the Wall Street deals, finance and policy news that could shape your tomorrow. The newsmakers, the trendsetters, and the innovators. In 30 minutes, we've got you covered. So stay ahead, stay informed, and stay profitable with Profit 360.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
When the whole day passes like a blur, the news just whizzes past, and you're trying to stay informed. It is our job to bring you news that truly matters. At Profit 360, we cut through the clutter, the Wall Street deals, finance and policy news that could shape your tomorrow. The newsmakers, the trendsetters, and the innovators. In 30 minutes, we've got you covered. So stay ahead, stay informed, and stay profitable with Profit 360.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
When the whole day passes like a blur, the news just whizzes past, and you're trying to stay informed.
Some of the most memorable experiences in my life have been when I have traveled. I'm sure this is true for you as well. There's something life-changing about pushing the boundaries of what you've been comfortable with, meeting new people, and seeing how they live. And when you've done it once, even if you don't have the restless feet of a seasoned traveler, your heart seeks out that feeling again and again. The thing is, travel is not something that everyone can afford. but it's something to work towards. Thanks so much for tuning in to MoneyWise. I'm Alex Matthew. On today's episode, I want to help you put some items onto your bucket list and also talk about how you can check them off. My first guest today is someone you may recognize. She's probably already helped you plan some of your holidays. YouTuber, explorer, travel expert, Tanya Khanija. Thanks so much for joining me on MoneyWise.
Thank you so much, Alex, for that lovely introduction. And I'm so happy to be on the show and talking about the one thing that I absolutely love, which is traveling.
So I do want to tell our viewers what this is all about. Of course, this is going to help them put a few places that you visited, and you've gone to so many places, but you're going to narrow it down to just about 5 locations that you think that everybody should visit.
Yes.
And you're also going to tell them about a few travel hacks, but that's just in a bit. But yeah, I know that I asked you to drill it down to 5. Was that difficult to do?
It was probably the hardest thing I had to do this morning, because some of the destinations, I think at least the list that I'd sent to you are some of my favorite countries, some of my favorite places, because I feel travel is one of the most transformational experiences of life, and once you get hooked to it and you experience it once, you realize just how much it can change who you are as a person, the kind of people you meet, the friends you make for a lifetime, even though you just probably talk to them on a video call or something once in a while. But still, it just feels like a very cozy, warm, fuzzy feeling inside of you, and you want to do more of it. And these destinations are very close to my heart, and I think our viewers are going to be really surprised and their minds are going to get blown with the kind of details I have for them today, especially, I think, the hacks for how you can save on travel.
Absolutely. So let's kickstart this list. I think Norway is on top of the list. Tanya, why is this making the list? First of all, it's not something that people would normally think of as something to put in their bucket list, right?
Yes. But when I visited Norway, I was so surprised with everything that it has to offer, because it's very close to the North Pole. So you could say it's within the Arctic Circle. At least the northern side of Norway is within the Arctic Circle. And this year, 2024 and 2025 happens to be these are 2 of the best years to see the northern lights. So for our viewers who are not aware, the Aurora Borealis, which are these dancing lights in the sky, green and red and beautiful magical colors. And there are only 8 destinations in the world from where you can see them. But Norway tops the list for me because of also the kind of experiences you can have over there. Imagine being in a yacht and seeing the northern lights from the middle of an ocean.
Fantastic.
Or going for a whale watching tour in a boat with somebody who's really close to you, maybe your partner, maybe your family. And you're packed in multiple layers, but you can see snowy mountains pass you by, and everything is so pristine over there. It feels otherworldly.
And the fjords are really famous, but it sounds expensive, Tanya. Is it?
It is one of the more expensive destinations for sure, but I think something that has to be on everybody's bucket list, like I said, at least this coming year. And if you plan in advance and you plan it really well for, let's say, the end of 2025, it is something that I think people can afford with a little bit of planning.
Okay, so how much would it cost? And give us a sense of how many days you would normally spend. What would you do?
Okay, so I would say you can also go for a shorter trip, let's say a 4-day trip to just Tromsø, which is the Arctic capital of Norway. And if you spend just 4-5 days over there, 3-4 days, I would say, to begin with, to maximize your chances of seeing the northern lights, even that could be enough. And you could plan it in a way that you maximize a lot of these activities that you get to do, like I said, the whale watching and seeing the fjords, going for a fjord tour, or even dipping in ice cold water in a sauna. I think that should also be something on everybody's bucket list. But on an average, it could cost up to 3 lakhs per person to visit. And if you plan it really well, let's say if you're not renting a car and if you're just staying in one place, or if you're just booking a lot of tours or group tours to minimize your budget, it can be done and you can see some beautiful things over there.
But 3 lakhs with the airfare?
With the airfare, yes.
Shifting to a completely different location from the north to the to the east of Asia, we go to Japan, right? And a lot of people have probably considered it because of the kind of depreciation that you've seen in the yen.
Yes.
It's made things a little cheaper from that perspective.
Yes.
Why is it on the bucket list, though?
Japan is such a unique destination. I think most people call it the most futuristic country in Asia. And I won't disagree. I think it has such unique things to offer, from Tokyo, which is obviously quite futuristic, but also how traditional it is and very similar to India, I would say, in its cultural and family values. The way people are so close-knit within each other and how polite they are. The whole experience of Japan is, I think one of the favorites from my 2024 travels, and I've been to a lot of countries in 2024, but I think Japan stands out for me so much, especially because I went during the cherry blossom season.
Yes.
And
Which is when?
Which is it's from March to April. In the beginning of April, it's on the lower side. But I have a very good tip for people actually.
Which is?
You know how the country stretches from north to south, right? And most people only go to the south side of Japan. So they'll probably go to Tokyo, Nara, Osaka, Kyoto, or maybe even Hiroshima or Mount Fuji at most. But if you hit the north side of Japan, that is where you get to see cherry blossom in mid-April, which does not happen in the south anymore. In south, it ends by end of March. And if you go to the north side, it's one of the most beautiful cherry blossom you'll ever get to see. And nobody hits these places because they just hit all the popular destinations.
So in the north, where would you go? And okay, so how many days would you spend in Japan? How much does it cost?
I would say a 14-day trip could cost you a little lesser than 10-day trip could cost you 1.5 lakh per person.
Okay.
If you do it on a budget. Actually,
that's really cheap.
Yes, and that's how much I ended up spending in Japan with flights. And I booked my flights a little bit in advance.
Are you serious? But
yes.
You're talking about a real budget. You're not spending on luxury hotels, obviously.
I did not spend on luxury hotels, and hotels are the only expensive commodity you could say in Japan, because each night could cost you about 10,000, 15,000, at least in Tokyo. But the rest of the destinations, especially north, was not that expensive.
Oh, okay.
And I also got a JR pass, which is the pass for taking all of these bullet trains, and you normally get a 7-day pass. So if you're going for a 10-day trip, you spend the first 3 or the last 1 day traveling or taking the JR pass. But when you do have that pass, you can actually take unlimited number of bullet trains, and you can hit any destination you want to. So don't stay limited to just these popular destinations. You can actually go to the north, you can come back from north, hit the south. And if you plan it really well and understand how to use this pass, you can hit so many nice destinations.
A few places to hit in the north?
Okay, I went to Hirosaki, and that is where I saw the most magical cherry blossom, and there were no tourists over there. Nobody from the West, nobody from India, only Asian tourists, probably just from Japan or Korea, because they know where to go to.
So I know that we spoke about a certain number before, but I could spend endless amounts of time talking about the places you could go to. Let's run through the last 3, right? Because we've got Peru, we've got
Oman,
Zimbabwe, and we've got
Zimbabwe.
Oman.
Yes.
Why would these 3 be on your list?
Okay, Peru, because I think it's a great entryway into South America. Of course, it's pretty far away from India, but it's again a really popular destination, and I think one that's on every traveler's radar. So we've got Machu Picchu over there, we've got the Rainbow Mountains, some amazing hikes. You can actually do the Salcantay trek, or you can do the trek to Machu Picchu. So beautiful treks, beautiful hikes, amazing destination, so much to see, so much culture to experience.
It's tough to get there though.
It's a little far away to get to.
Yes.
So if you'd ideally want to take probably a 30-hour flight to get there, which can get long for a lot of people. The way I went there was that I went to the US first, which was a direct flight, and then I flew down from there to Peru, and I got it during the season where the flights from US to Peru were pretty cheap. So overall, because I broke down my trip a little bit, it became a little more convenient. But again, there are a few challenges, like if you don't have the US visa, if you're directly flying to Peru, then it's a pretty long flight. And
so therefore, in this situation, you want to keep more days, right?
Yes, you want to keep at least 14 days to be able to see the country properly. And of course, people must have that kind of time on their hands. But again, a destination that is on every traveler's radar, and one that I would absolutely recommend if you want to go to South America.
And how much would it cost you? 14 days?
I would say, because the flights are expensive, it can shoot up your budget to about 3 lakh per person.
Okay.
Or if your flights are cheaper, like in my case, I think because they were lesser, it cost me a little less than 2 lakh for the entire trip, 14 days. So,
and this is not extravagance. It's simple.
It's very simple. I mostly, in fact, stayed in hostels, and I probably did it for a little lesser than that. I don't have the exact number, but it was okay. It was manageable. For a solo traveler as well, it was manageable.
A couple more. Zimbabwe first.
Yes. Okay, Zimbabwe is another destination that I went to this year, and Beautiful. Not many tourists visit again, and Indians, I don't think, not many. But the kind of experiences I had over there, we started from Victoria Falls, a helicopter ride over Victoria Falls, and these are the largest waterfalls in the world right now.
Yeah.
You see the sheer volume of it and the chasm of water, and it falls into like a little, a ditch in earth. So it feels like a U-shaped hole in the earth, like a, what do you say?
A trench.
A trench, yes.
Yes.
And the waterfall falls inside it. And you have multiple viewpoints from the Zimbabwe side to see it, almost 16 viewpoints where you can see it from, and it's blew my mind. And then we did a self-driving road trip through Hwange National Park, which is a national park filled with so many actual animals who living in the wild, like lions, giraffes, and elephants, so many elephants. And you just see elephants by the road. We stopped at this viewing point where we saw real lions just having their...
This was on a safari?
On a safari. Just two girls, just the two of us. We stopped at a viewing point, and just probably 30 meters in front of us, there were lions who were just eating for the day, their hunt, their spoils of the day. And then also we stopped at a place where just next to the road, there was a beautiful lioness just sitting over there. And there was also a point where I was constantly telling her that, you know what, elephants are not to be disturbed in the wild, because they can actually attack you, and they're very fast. They run at 30-40 kilometers an hour. So if you especially spot a rogue elephant, be very careful. But then soon after having this conversation, we had this whole herd of elephants just crossing us with little baby elephants. And oh gosh, it was scary and thrilling at the same time.
I can imagine.
And there was no cell reception in this park, but there were rangers, of course, every once in a while. But it felt like a real thrill, because we weren't doing a dedicated safari, we were just doing the whole drive by ourselves. And it was an amazing experience, especially for people who are thrill seekers, who are really adventurous. I would highly recommend this place.
But how much is it costing you?
All right, so this trip cost me about 1.6 lakhs in total. And it was completely split with my friend. So if two people are traveling, the car rental becomes a little cheaper, because we also rented a 4x4 to be able to drive across the country. And we hit a straight route from Victoria Falls to Harare. So it was a complete route, and it was really nice.
And how many days?
It was, again, I think 14 days.
Okay.
Yeah.
Okay, so one last destination, but we're going to have to run through it very quickly.
Yes.
Oman. And people are reasonably familiar with this. Muscat, everyone's heard of. What drew you to that place?
Okay, I took up a challenge that I want to do a really, really, really budgeted trip. And this was a challenge that I took for myself because I was traveling solo. And believe it or not, including flights, I ended up spending just 50,000 on this entire trip.
I'm sorry, I don't
for 10
believe
days.
you.
I know you're not gonna believe me, but it is surprisingly cheap, and the kind of things you get to do over there. So there's a place called the Manyat Islands near Muscat, and you take a day trip from Muscat to go to this place, and you get to snorkel with a bunch of turtles, which are huge.
Wow.
And I went snorkeling with more than 30 turtles for the first time in my life.
It's an incredible experience.
Yeah,
I had the fortune to see a turtle once.
Oh,
it's
you
amazing.
did? Okay. And that mostly on most of my scuba dives or snorkels, I get to see one turtle.
Yeah, I saw one turtle.
Yeah. And over here, there were more than 30 just floating all around me, and the water was so clear. In fact, if you see some of the drone footage of this area, it may look like Maldives to you because the water is so clear, but it is Oman. And then not just that, I also went to some of the destinations in the south side of Oman, and beautiful country. I think if you just can plan a road trip across Oman, it can be an amazing experience. I saw some bioluminescence near the beach towns of Oman. So at night, literally went swimming in the water. I was camping with my friend, and we were at this pink beach, and we went swimming in the night. And as we moved our arms, it was just blue water because it was glowing with bioluminescence. Beautiful. And then we went to a turtle reserve, and we saw turtles laying eggs in the night and then going back to the sea. And while they were going back to the sea, there was bioluminescence, which was glowing the entire coastline.
You've painted such a beautiful picture. And hopefully our listeners and viewers are going to put this on their bucket list. But I want you to also take them through a few tips and tricks, because it seems like you've gone to so many places on a budget and you managed to have amazing experiences. So it's not like you have to spend a lot of money. You can have those experiences.
Yes.
What travel hacks would you suggest?
Okay, so two of my favorite tips are, firstly, you should always maximize on your loyalty programs and your airline loyalty programs, hotel and airline loyalty programs and credit card points. So I'm very efficient when it comes to getting all the loyalties, all the credit cards. And believe it or not, one of the advantages of being a part of an airline loyalty program is that you can get upgrades for free. So not a lot of people know this, but this year I got two times I got a first class upgrade on a flight, just because I was a part of a loyalty program. And most of the times if they have free seats, what they'll do is they'll upgrade you to a better class. And they'll mostly prefer people who already are a part of the loyalty program. So I got it for Emirates and Air India this year. And both times, just because I had I'm guessing, or that's my best guess, that if you have a loyalty program, you are preferred over other people to get it. So that is tip number one, always join loyalty programs. And if you're anyway going to take a flight, might as well just get points for it. And not only through the loyalty programs, also through your credit cards, because a lot of your credit cards will give you a miles transfer option also. So if you accumulate your credit card points on any of your credit cards, especially if they're good ones and if they accrue the points really fast or efficiently, you can just utilize all of your spendings which you're anyway going to spend. If you're spending, let's say, a certain amount every month, let's say your budget per month for running your chores or household is 30,000. If you can accrue the points for that on your credit card and make all of your spending on that, by the end of the year, you're going to have a sizable chunk of points on your credit card, which you can just redeem against free hotels, free airlines. So why wouldn't you want to do that?
It's a great point. And this is definitely useful information. Thanks so much, Tanya, for painting that picture for us. Now we have to get into how to check those off our bucket lists, and my next guest is going to do that. Thanks once again for joining.
Thank you so much. It was a pleasure.
Hopefully at this point we've given you some good ideas of what to put on your bucket list. Now let's talk about how you can check those off. Joining me now is Kirtan Shah, the founder and chief executive officer of Credence Wealth. Kirtan, thanks so much for joining me. Kirtan, we've had some amazing destinations spoken about on this program already, but there are so many that you can do. The thing that I've noticed is that a lot of people either don't travel at all and aspire to, but never end up doing it, or they spend too much on travel and entertainment. Is there a middle ground that is more pragmatic?
I think, Alex, this is a brilliant question that I really want to answer through this show. I think if you don't travel, you are missing out on a lot. You don't really want to be in a situation where you want to die rich.
Yes.
Right? What's the whole point of having so much of money when you retire, but your health does not really support you to travel? I would definitely not want to be in that situation or a position at all.
So don't push your travel all the way down to when you're 60.
Absolutely not, because you might have the money, but you might not have the body to support you to do the travel, right? I am somebody who believes that if you are making money, live in the present, enjoy. Of course, don't be a spendthrift, but at the same time, you don't really want to take away the spice from life and only keep working. Won't solve any problem, in my opinion.
Okay, so that sets the context for the rest of this conversation as well, because I think if you're traveling abroad, one of the factors that you need to bear in mind, and I was thinking about what we could speak about, it's a fact that we've seen the rupee depreciate quite significantly. And so if you're talking about expenses that are denominated in euro, or you're talking about denominated in dollar or anything like that, then your costs are going to go up every year. So do you plan for that?
Alex, 100%. Like theoretically, both of us know that probably the rupee depreciates 3% year after year for the longest time that we've known of. But I'll tell you, travel planning is very different from planning for a child's education, which is going to be 10, 12 years later.
Yes.
In my opinion, travel planning is a very short-term planning.
Yes.
And you can't really set up an SIP for a travel plan because you would want to travel each year and not once in 5 years.
Yes.
Right? And hence, if it's a short-term plan and you want to bucket or save for something today, which you're going to do the next year, a 2-3% movement really won't make a lot of difference.
Okay.
But theoretically, the answer to your question is yes, that when the rupee depreciates, your travel is going to become expensive. But accounting for it is a little too stretched for a 1 year goal.
Yeah,
Yes.
you don't have to take so much trouble, basically.
True.
But okay, let's club a couple of things, because I would think travel is part of your experiences. Entertainment should also be part of that. And so from that perspective, I know you said that making a fund simply for travel does not make sense, but would you have a large fund that you set aside for experiences per se?
100%. I think when I answered your first question, I said I don't want to die rich.
Yes.
Right. So we make it a point that as a family, we end up actually spending 5-10% of our annual income in the entertainment bucket.
Okay.
Because I think out of all the money that we make, if we don't spend this much for our leisure, what's the point of making that kind of money?
Yeah.
So whatever SIPs that we actually do every year, I think 5-10% of that money is actually intended to be spent over entertainment.
Okay.
Right. So that's the kind of budget that we personally have to spend.
So you don't have a separate fund per se, but you will take from your surplus and you will take some portion from what you've set aside for the long term. Is that fair?
Yes, because like I said, that travel for me is not a one-time thing where I'm planning to roam the world 5 years from today, right?
Yeah.
And hence, because it's a yearly engagement, I am typically adding or clubbing that to the normal SIPs that I keep doing and removing 10% of my annual income as a spend every year from the total fund that I have towards my travel. But when I'm setting up an SIP, the objective of that SIP, one part of that is definitely that I want to keep accumulating it so that I can withdraw.
And no one's saying that you have to go for that 3 lakh right now. If you are earning 12 lakh or if you're earning 6 lakh, you can do the same thing, and you can level up over the course of your career.
Absolutely. I think all of us, and I think I would really like to thank COVID for this. People have really realized that you don't really want to save everything for
a rainy day.
A rainy day, right? That rainy day may not ever come, right? So I think I'm very happy that people, especially the younger lot, has taken this up on themselves, that they really want to enjoy the money that they make and not only keep saving it for the rainy day, like we said.
Okay, so couple of things from the planning perspective. Now we've established that you can actually take from your surplus and you can plan accordingly. But something that you don't talk about very often is travel insurance, and I think for good reason, because you're planning your itinerary not for something to go wrong on your trip. But how important in your opinion is that?
Extremely important. I can tell you a story which is a month back. I was in the US. I developed something called as shingles. Shingles are nothing but
it's a deficiency, right?
No. So anybody who's got chickenpox, in the future, that virus is always in your body and something will trigger and then you might get that back.
Wow.
Right?
Okay.
Not going too much into the
details.
So I developed shingles in the US on my trip, and a 5-minute consultation costed me $3,600 in the US.
Oh my God.
Now imagine if you don't have an insurance, what can happen in such a case? And I'll tell you, a $25,000 medical policy was just $2,500 rupees. I think that's hardly anything for you to not have an insurance for. And especially when you are in a foreign country, you have absolutely no idea of the medical system. And I can tell you the medical system in the US is broken, and how.
Yeah.
Right? You don't really want to be caught between not knowing what to do next and in a country that you have absolutely no idea about. I think medical insurance is sacrosanct, and that is something that you should not miss on.
Okay, so that's very clear. And so therefore, when you're planning a long trip in particular, you must do it, particularly if you're going to Europe, I think, and to places that have costly healthcare, right? The other thing I wanted to ask is, you transact obviously in whatever currency in the place that you go to. And so from that perspective, what is the ideal way to do this? Of course, the options available to you right now are significant.
I think, Alex, because I'm an avid traveler, I'll tell you, credit cards do a much better job.
Yes.
Right? Because they are safe, they are convenient. You don't have to bother about carrying currencies and all. And specifically, there are two very large costs, right? Let's say if I'm going to Vietnam and I want dongs. Typically what you do is you first convert your rupee into dollar, where you pay a currency conversion cost, and then you pay another currency conversion cost when you put or convert your dollars into dong.
Yes.
Right? Versus that, again, depends on which card are you really using, but the cost is significantly lower.
You're paying the merchant fee.
Yes, significantly lower when you use the card, right? So your cost is lower on foreign currency transactions and your conversion on both accounts, right? So I am somebody, because of the kind of cards that I use, I find it extremely comfortable and cheap to use my card than, kind of converting my rupee into multiple currencies.
And if you're a little wary of using your credit card, you can always set limits,
100%.
Especially for international transactions as well.
Oh, absolutely. Right? You can do that. And plus, at the same time, there are a lot of benefits. Of course, you may use your card for lounge access and various other things in general also. But I think that's a great plus. You can set off a lot of points that you've collected over a period of time to do hotel bookings or something like that when you are traveling. I think prudently using your card is a blessing for sure.
Absolutely. I think we've covered some important bases. Kirtan, thanks so much for joining me on MoneyWise.
Always a pleasure. Thank you so much for having me.
And that brings us to the end of this edition of MoneyWise. Let us know what you think in the comment section and stay tuned for a lot more. This is NDTV Profit.
We set you up for the day's trade. 30 calls before the markets open on NDTV Profit.
Jubilant Food above a 600 level on Friday.
Wipro can be first trade to buy all commodities, but in that Vedanta looks good.
Our experts give you the top stock ideas to prepare you for the day.
ICICI Lombard stocks hit the first target. It has given a very good momentum with good volume.
Don't miss the chance to make the right moves. Only on NDTV Profit, where winners are made before the bell rings.
When the whole day passes like a blur, the news just whizzes past, and you're trying to stay informed. It is our job to bring you news that truly matters. At Profit 360, we cut through the clutter, the Wall Street deals, finance and policy news that could shape your tomorrow. The newsmakers, the trendsetters, and the innovators. In 30 minutes, we've got you covered. So stay ahead, stay informed, and stay profitable with Profit 360.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
When the whole day passes like a blur, the news just whizzes past, and you're trying to stay informed. It is our job to bring you news that truly matters. At Profit 360, we cut through the clutter, the Wall Street deals, finance and policy news that could shape your tomorrow. The newsmakers, the trendsetters, and the innovators. In 30 minutes, we've got you covered. So stay ahead, stay informed, and stay profitable with Profit 360.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
When the whole day passes like a blur, the news just whizzes past, and you're trying to stay informed. It is our job to bring you news that truly matters. At Profit 360, we cut through the clutter. The Wall Street deals, finance and policy news that could shape your tomorrow. The newsmakers, the trendsetters, and the innovators. In 30 minutes, we've got you covered.
Hello and welcome. Thanks for tuning in. You're watching India Market Close here on NDTV Profit. I'm Harsh Saita. With me is Neeraj Shah. Quickly on to where we are on the Nifty. An hour from close, an hour and a half from close. Largely flat. We've been range bound in that sense. Just about 130 points. Days high, days low. We're smack in the middle of that 130 point band in which the Nifty is trading in. Let's pull up the Nifty Bank as well, try and get perspective. Of course, while the speech was on, we clocked the day's low, both in terms of the Nifty and the Nifty Bank, after which we've seen a bit of a rebound, some positivity with regard to, for banks in particular, with regard to no rate cut to some extent. Also, the fact that CRR has been cut, which means that there will be more system liquidity available and deposit rates will likely come off, and that's why the reaction on the banking counters especially. But that's how it's essentially playing out. The Nifty Bank too trading in a bit of a range, just about 600 to 700 points in that sense. Let's also pull up the heat map with regard to sectors, get a sense of which sectors are not doing as well, and IT is that one pocket which is not doing as well today. After, of course, what was a very strong move yesterday, Nifty Realty also largely tepid. Pharma flat, banking flat. We spoke about banking. But what's doing well is metals, auto doing very well in trade today. You also have something like a PSU bank, 0.5% odd higher. Again, one of those sectors which didn't do as well or did pretty much nothing in trade yesterday, the Nifty PSU bank. Participating in trade today. So that's how it's really shaping up. Let's pull up the advanced decline before we go to broader markets. That's how the advanced decline is shaping up. And the Nifty mid cap and small cap, we can pull that up. Essentially, broader markets outperforming the Nifty for sure. So around 0.4% higher on the Nifty mid cap. And after, that little bit of volatility at the start of the day, you can see that kind of somewhere seen more stability towards the latter half. At least that's how it's playing out as we speak. But the band is narrow nonetheless, 200-point band on the Nifty small cap as well. Last off, I want to pull up the BSE 500 top gainers, top losers. Some names over there to focus in on. And ITI is doing very, very well. PV Fintech is up and away. Delivery is doing well as well. MCX is up 8% odd. Borosil Renewables up 5%. Additional duty, of course, aiding Borosil Renewables last couple of days. You have what's not doing well. You have an M&M Finance, a 5-star, not doing well. You have an HEG, some bit of profit booking was there yesterday as well as today now. Canfin is down 3.7, and you also have something like a CAMS which is down 3% odd. But that's how essentially the day is shaping up. Neeraj.
Yes, indeed. Let's focus on what to do in a scenario like this, or with the technical and the fundamental view. Ruchit Jain, Johnson, to talk about the tech side of the market. Narendra Solanki of Anand Rathi on the fundamentals. Gentlemen, both of you, thanks for joining in. Ruchit, how do you observe trade today? It's kind of flat, but the PSU banking pack is still active. How does one place trades?
Yeah, hi, very good afternoon, Neeraj. Very good afternoon to everyone. Well, last few days we have seen a decent pullback move in the indices, and Nifty is right now hovering near that 50% retracement mark of the entire corrective phase. And that retracement is around 24,770 to 24,800. We witnessed a breakout above that in the previous session yesterday, but we have not seen a firm closing above that 24,800 yet. So I think we might enter some sort of time-wise corrective phase where the index would continue to consolidate within the range, and there would be more of a stock-specific action which would go on for next few days. So 24,800 is the important level that we are watching out for. On the index front, if that is taken out, then we can expect an up move towards 25,120 in the near term. Until then, I think 24,800, 24,500. This is the range where some time-wise correction would be seen. So I think the broader markets definitely has been doing well. So taking a stock-specific approach till that 24,800 is not taking out. I think that should be the approach to trade in these markets.
Okay. So do you trade, would you initiate a trade on any of the indices right now, Ruchit, at this moment?
No, frankly, I would wait for a breakout about 24,800 on the Nifty. And once that breakout is done, then I would recommend initiating longs for targets around 25,120.
Bank Nifty.
Yeah, so Bank Nifty relatively, I think, has been doing better because we have seen a consolidation breakout of last couple of months sideways range, which was there. But in last 4 trading sessions, already it has rallied from that 52,500 to 53,600. So I think here a buy and dip approach would be a better trade setup because the momentum readings on the lower time frame chart are a bit overbought. So if we get any kind of dips towards that 53,000 mark, then the stop losses would be no smaller. So around 53,000, if we get 53,000, 53,100 range, that should be used as a buying opportunity with stop below 52,800. And positionally, I think 54,000 would be seen on the Bank Nifty index.
Okay. So that's the view coming through on the technical side. Narendra, let me quickly take your views on the fundamental side of things. First off, outside of the policy that we heard today, in general, give us your view on the index itself. How are you positioned and how do you believe the index is placed?
Yeah, see, at this moment, I think the market has already priced in all the negatives, plus the event has also been out of the way. So after around 1,500 kind of point of rally for the Nifty, I think the markets are placed evenly on both the sides, and we don't see any runaway kind of a rally. It's stock specific kind of a market. Also, we don't also see any sharp downside as well. So we might see a range bound 1 to 2% kind of a range either side, at least for this month. And even after 2 weeks, the FIs would also be going on a long holiday after 20th. So only I think 10 trading days are there. So post that, I think the market volumes would also be very stagnant from fund flows point of view. So don't see much of volatility in this month. And then maybe from mid-Jan onwards, we might see market taking some more direction as we also have some fast-moving data on macroeconomic also coming out. That would also give a direction in terms of how the consumption has been doing in this market, especially post Q2 results, wherein we have seen some decline or some slowness in urban consumption. So with that kind of data coming in from mid-January onwards, we see that market would take another rational look around that time.
Narendra, so how do you pick in this market? What is it that you are looking or finding interesting?
We are positive on cyclicals, manufacturing, and rate sensitives. Especially, we are focusing on rural kind of a picks, especially in two-wheelers and in four-wheeler passenger vehicles. We are focusing on companies like M&M, which are having rural presence as well in terms of tractors as agri inputs. So that kind of pick. Plus, in manufacturing, we are positive on capital goods, engineering kind of a space where a lot of things again would start to happen when new administration comes back in the United States. So China plus one would again start taking steam. So that would also benefit some Indian companies, as in the import substitution as well as the larger share in exports would also be beneficial for our manufacturing companies. So this is how we are trying to play.
Okay, Ruchit, your picks this afternoon?
Yeah, so a couple of buy recommendations. First would be buy call in Exide Industries. This stock we have seen that post the recent correction has formed a bullish hammer pattern on the monthly chart. And even if you look at the price volume action, the kind of volumes the stock has seen in last few trading sessions, rising volumes along with the price up move indicates that the stock could do well in the near term. So short-term traders can look for buying opportunities at current market price in Exide with stop below 448 for potential targets around 490 to 500. And on cash market stock, Narayana Ridale, NH is looking quite interesting over here. last 1 month the stock has seen some consolidation phase, but this entire consolidation has been done above its 200 DMA. And no, the stock is on the verge of a breakout from this consolidation. Volumes during this week, if we see, then they are better than the average. And if we get a breakout in the stock, then we could see some good momentum in the short term. So NH1 can look to buy with stop loss below 1270 for potential targets of 1415.
Okay, so those are the picks for Ruchit this afternoon. Let's quickly switch focus though. Very interesting note coming in from Nuvama. They've maintained their buy rating on Zentech. They've revised the target price, indicating a 16% upside. Varsha joining us with the details. Varsha, break this down for us.
Yes, Harsh. So the main focus is for this note is about Zentech, which has signed an MOU with Florida-based AVT Simulation to enter into US defense market. Now, this will expand its serviceable market in simulation training and anti-drone system. Now, the partnership combines Zentech's anti-drone expertise with AVT's aviation simulation technology, addressing modern warfare challenges like counter-UAS solution. If I were to talk about the order inflow, so Zentech experienced a muted order inflow in H1 FY25. A significant uptick in orders in H2 FY25 is crucial for meeting its aggressive revenue and PAT targets. So Zentech aims at 50% of revenue CAGR with 35% of operating profit margins and 25% of PAT margins over the next 2 to 3 years. Lastly, if you see, the company is broadening its presence in North America with including US and Argentina as well.
Okay. Now, let me come to Ruchit first. Ruchit, on the technical front, how does Zentech look? 1.5% higher. Of course, Nuvama constructive.
The stock is in an uptrend, but frankly, the risk reward is not that much favorable over here. If you look at the month of August, the stock has resisted around the 2000 mark. Today also intraday it crossed the 2000 mark. It's not able to give a closing above that. So the trend is positive, but I believe that either one should wait for a close about 2000, so that the next leg of a move starts and a confirmation would be there, or any kind of dip towards 1700 if comes first. Then the risk reward ratio could become favorable to do some bottom fishing over there. So I won't recommend going long at current levels, but maybe a buy and dip strategy would be a better approach to buy this one.
The thing, Narendra, I wonder if you like any of the defense names, or particularly Zentech as well, if you have a view here, because now there are a couple of transactions that have happened post the QIP, and the promoter sale also has been digested.
Yes, as far as Zentech is concerned, we don't have any coverage on this stock, but definitely as a theme, we definitely like defense stock, and especially in defense, we like to more focus on ancillary plays rather than platform plays, because there is a lot of competition and the order books are very slow, especially if you are a platform player. So in ancillaries, we like KN's Technologies, Data Patterns kind of plays, and Bharat Electronics kind of plays.
Okay. Fine. The main event, Neeraj, today was the RBI monetary policy that the governor came out and gave his statement. On the disappointment side of things, of course, growth shrink, increase in inflation, bit of a concern. But just to give due credit to Nomura, because yesterday they came out with a marquee note. And in that note, they had predicted exactly this, inflation of 4.8 and growth of 6.5.
But they said rate trajectory wrong.
They said, that's correct, yes. So they got the repo rate wrong, which was of course the key. But outside of that, they got these 2 points right. And clearly both of those disappointments, to a large extent, have played out in this MPC itself. But the CRR cut, which is the interesting piece, because it will infuse a much needed bit of liquidity in the system. It'll inject that, and what it will also do is it'll likely cause deposit rates to fall, at least on the short-term side of things. What it will also do is that it will improve, therefore, margins for banks. Bank margins, according to Citi, will improve by around 2 to 3 basis points. Effective Q4 FY25, because the rate will get cut over a period of a couple of fortnights, and therefore by end of December that entire rate pass-through will happen, and therefore you will have the the impact of margins only coming through in Q4, but 2 to 3 basis points roughly is the impact. 1.16 lakh crore within the system getting freed up likely will push growth, so that's one impact parameter, and the other piece is of course margins. 1.16 lakh crore currently earning zero for the banking system will start earning a little bit more in terms at the very least, even if it's parked in government securities or a simple fund, and therefore likely will optimize margins for banks, and therefore that move on banking counters. But Neeraj, just quickly having your take, what really stood out for you?
No, just this. I think they opened the door for a Feb rate cut, right? With the inflation numbers given for the Q1, Q2, Q3 of 2025. So I think, and maybe which is why, aside of the CRR cut, I think there's expectation that now maybe Feb cut is definitely here. This probably helps the PSU banks for sure. In fact, on that note, Harsh, let's hear out what Rajiv Anand had to say, Axis Bank's deputy MD. He said that the CRR cut will have a positive impact on banks, margins of about 3 to 5 basis points from Q4 FY25. Listen in.
The 1.15 lakh crores was earning the banks nothing because it was impounded as CRR. Now that it is being released, at the very least, we can actually go out and put this money in overnight liquidity at 6.5%. Obviously, what banks would do with this money is they would put this money into a mix of corporate lending, retail lending, including unsecured, and so therefore this CRR cut will positively impact NIMs of banks by somewhere between 3 to 5 basis points. Not in this quarter, but because the CRR is being released in 2 tranches in 2 fortnights, the impact will come from the next quarter onwards.
Okay, so Rajiv and the Axis view seems to be that it's going to be 3 to 5, but could be either 2 to 3, 3 to 5, so roughly 2 to 5 basis points in terms of NIM is what the impact is going to be. The major companies or banks which will get impacted or which will benefit from this, PNB, roughly 2% of operating profit is what this cut will add to it. SBI around 1.5%, Bob around again 1.2%, Federal Bank 1.2%, HDFC and Axis around 0.8% of operating profit impact. Of course, NII as well, those numbers on your screen just for a quick viewpoint. But that's of course on the side of what Citibank's views are or what Citi's views are with regard to this entire play. Narendra, I'm curious to know your views. What do you feel will be the impact, or how would you play this going forward if you were a market participant or an investor?
Yeah, I think it's overall net positive for the banking system. As we have been seeing since past couple of months that banks have been struggling to match the credit growth with their deposits, and the deposits they were facing pressure. So there is some relief from that point, and that will definitely trickle down to the margins. And coming to the Jan to March quarter, I think usually there has been a drain on the liquidity for the banks. So this is much needed cushion for the banks, especially ahead of the Q4, and since the rate cut was not announced, so this is a much needed cushion for the banks. Plus, we have seen that first half of the economy has not grown so much, so we have also seen some drag from the government spending as well. So this would help in terms of transitioning from that period in the short term. Overall, and now in H2 we see that the government capex coming back gradually, and we've seen in November some capex have been picking up. So I think this is a much needed cushion for banks to transition in the short term, and it will definitely help in the credit growth of the overall system.
In terms of NBFCs, you believe that it'll obviously impact NBFCs, but just your view on which is the best play there in terms of who will benefit the most right off the bat.
I think NBFCs have been struggling, have a different problem. They have been struggling with the quality of their books. Some of the NBFCs, especially in unsecured lending. We have to see how things plays out from that point in time. However, coming to the specific NBFC players, we would prefer NBFCs who are more into home loans and consumer loans. So that would be faring much better than
Okay. Let's though switch focus. Renowned historian and philosopher Yuval Noah Harari is in India to launch his new book titled Nexus, A Brief History of Information Networks from the Stone Age to AI. Tamanna Inamdar caught up with Harari and discussed what he calls the unprecedented challenges and opportunities posed by artificial intelligence. Here's a short version of that chat.
I'm a historian, but my view of history is that history is not the study of the past. History is the study of change, of how things change. And history is more relevant than ever before because we are in the midst of the biggest change ever in human history, the AI revolution. AI is really different from everything we've seen before in history, because it's the first technology which is not a tool, it is an agent. Every previous human invention, when people invented the stone knife, or the wheel, or the printing press, or the atom bomb, this was inventing another tool that makes us more powerful. Now we can do this, now we can do this. AI is not a tool, it is itself an agent, which means it can make decisions by itself, it can invent new ideas by itself. An atom bomb could not decide what to bomb. An AI weapon can by itself decide what to bomb, who to kill. An atom bomb could not invent the next generation of bombs. Like the atom bomb could not invent the hydrogen bomb. AI can invent new things, including the next generation of AI. So we are now creating something which might be potentially more intelligent than us, that might escape our control and start making decisions about us and changing the world in a way that we don't understand. You know, it's already beginning in so many different ways, like you apply to a bank to get a loan. Previously, it was only human beings who could decide whether to give you a loan or not. Now, increasingly, in many banks, it is an AI deciding whether to give you a loan or not. And this will happen more and more in universities, in government offices. People sometimes have this science fiction idea that the danger of AI is the big robot rebellion, like one day the AIs will try to take over the world. It's unlikely to happen. The real threat is that we will have millions and billions of AIs, these new super intelligent agents everywhere, as AI bureaucrats in the banks, in the hospitals, in the government offices, in the militaries, making more and more decisions about us, changing the world with new ideas that we cannot understand, and we will lose control over our lives and over the future.
We set you up for the day's trade. 30 calls before the markets open on NDTV Profit.
Jubilant Food above a 600 level on Friday.
Wipro can be first trade to buy all commodities, but in that Vedanta looks good.
Our experts give you the top stock ideas to prepare you for the day.
ICICI Lombard stocks hit the first target. It has given a very good momentum with good volume.
Don't miss the chance to make the right moves. Only on NDTV Profit, where winners are made before the bell rings.
When the whole day passes like a blur, the news just whizzes past, and you're trying to stay informed. It is our job to bring you news that truly matters. At Profit 360, we cut through the clutter. The Wall Street deals, finance and policy news that could shape your tomorrow. The newsmakers, the trendsetters, and the innovators. In 30 minutes, we've got you covered. So stay ahead, stay informed, and stay profitable with Profit 360.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
When the whole day passes like a blur, the news just whizzes past, and you're trying to stay informed. It is our job to bring you news that truly matters. At Profit 360, we cut through the clutter. The Wall Street deals, finance and policy news that could shape your tomorrow. The newsmakers, the trendsetters, and the innovators. In 30 minutes, we've got you covered. So stay ahead, stay informed, and stay profitable with Profit 360.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
When the whole day passes like a blur, the news just whizzes past, and you're trying to stay informed. It is our job to bring you news that truly matters. At Profit 360, we cut through the clutter. The Wall Street deals, finance and policy news that could shape your tomorrow. The newsmakers, the trendsetters, and the innovators. In 30 minutes, we've got you covered. So stay ahead, stay informed, and stay profitable with Profit 360.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
When the whole day passes like a blur, the news just whizzes past, and you're trying to stay informed. It is our job to bring you news that truly matters. At Profit 360, we cut through the clutter. The Wall Street deals, finance and policy news that could shape your tomorrow. The newsmakers, the trendsetters, and the innovators. In 30 minutes, we've got you covered. So stay ahead, stay informed, and stay profitable with Profit 360.
Headlines you start your day with.
Well, back with India Market Close right here on NDTV Profit. And if you just take a quick look at what the heat map is suggesting, it's absolutely flat by the way for the benchmarks, including the Bank Nifty. But the heat map will give a good depiction of what stocks are moving. Now, remember, it's even Stevens, and autos have a bit of a spurt to themselves today. So if you look at Bajaj Auto, Tata Motors, or a Maruti, kind of staying afloat and doing okay. So that's part one. There is strength in Mahindra and Mahindra as well. So that's the auto bucket which is holding out. Larsen and Toubro and Axis Bank amongst others, non-auto which have held out. And on the losing side, Cipla, Adani Ports, Airtel. These are the top three. And then a little bit of heavyweight participation in Infosys as well as Reliance Industries. But stocks which have moved the most, and just the top three, and the kind of moves that have made not just today, but over the last 3, 6, 12 months. So ITI, big mover today, right? 14% higher, not done too much in the last 12 months. As you can see, 14% over the last 9 months, which includes the 14% gain today. So very flat over the last 9 months, but doing well today. Rain Industries is the other one, which has actually had a good move, but again, not done too much in the recent past. So is this just the starting of the move? That's the question. The third top gainer is Borosil Renewables because of the duty, the countervailing duty put in, 7% higher. Again, not something that has really participated in the recent past, but moving today. So today's gainers are actually a bit of breakout moves from lows. What has not done well, a bit of a pullback for HEG. Remember, Graphite India had a pullback yesterday. So this is one. And then Poly Medicure, a little bit of sulk today, nothing too dramatic. So watch out for this as well. Last but not the least, and this is of course Canfin, but last but not the least, two stocks, both of which have moved because of an order win to one, which is Kernex Micro. So Kernex itself is up about 5%, if I'm not wrong, should come up on your screen. Big move there, post the order win. Look at that, 5% higher. But on the back of this, HBL Power has actually gained nearly 10% because I think the street believes that what's come for Kernex in terms of Kavach orders will actually go to some of the others as well. Look at this move, 10.5% for this one. So good going for a clutch of mid-cap names, but broadly, Tamanna and Harsh lying absolutely flat today, the benchmark indices.
Yeah, and I just want to, mark out some stocks as well. Start from when Neeraj finished off. Let's pull up some platform companies. Paytm, PB Fintech. If we can also pull out something like a delivery, not per se platform, but to some extent new age. Seeing some good buzz. Okay, so Paytm 1.7. It's off those highs for sure, but 6% higher on delivery. And PB Fintech also, I believe, 5% plus higher. There you go, 6% higher on PB Fintech as well. We're very close to the day's high. Ruchit, I want to take a quick check from you. Any of these on your list, and do these look interesting to you, or what are the levels you look out for?
I think within this name, clearly, Policy Bazaar is one stock which is standing out. Even Paytm has done well off late. At Policy Bazaar, I think the chart structure still looks much stronger because the recent consolidation, we have not seen the stock going below its 100 EMA, and now the high top, high bottom structure has been resumed with very good volumes. Positionally, if I take retracements of the recent correction, then it gives a possible targets around 2400 kind of levels. So I think still good amount of room left for Policy Bazaar. So the uptrend could continue over there.
All right. That's the story with PB Fintech. But I think we should take a fresh check really on the indices as well. Hi, Ruchit. Good afternoon. Tamanna here. And, with the kind of volatility we've seen, obviously a big bump up in the middle of the day after the RBI governor's address and when clarity came in on the CRR cut, and then you're flattening out completely. What is the kind of position you would take to set up for the next week? Where would you be sitting right now? Would you be going long?
Yeah, hi, very good afternoon, Tamanna. In the markets, you've already seen a pullback move ahead of the event, what we have seen in last couple of weeks. Now we are trading, interestingly, near that 50% retracement mark of this entire correction that we have seen in October and November, and that is around 24,800. So we are waiting for a breakout about 24,800. Possibly, then only I think it would be prudent to take a fresh long position on the index, because once that level 50% retracement level is broken, then it would get open up for 61.8%, which is around 25,120. So I think here we expect some sort of consolidation to get in the indices, and rather more stock specific approach, keeping a stock specific approach should be a better strategy.
Okay, thanks for that, Ruchit. We'll let you go on that note. Jay, let me welcome Jay Bala, joining us, founder and chief market technician, Cash the Chaos. Jay, quick take on how you're viewing markets at this point, And as Tamanna, I'm not sure if you had a chance to listen to that question, but put it across to Ruchit as well. How are you setting up for next week?
Hi, good to be here. Thanks for having me on the show. I think, I indicated a few weeks ago that the market's bounce from 23,264 is a counter-trend bounce, and anticipated it to come to somewhere close to 24,400 to 24,800. The market has come to 24,850. I think this was very close to an end of a counter-trend bounce. So to your question, a direct answer to that, I'm setting up to watch for a break of support to short the market. So not yet short, but waiting for the support to break down.
All right, Narendra Solanki also with us this afternoon. Narendra Solanki, great to have you on. Just want to get your sense on the BFSI play right now. In this time of uncertainty, now that we're clear what kind of a path we are moving towards as far as interest rates are concerned, the CRR direction also coming in very clear. Would there be any big bet that you would look at right now?
Yeah, good afternoon. Yeah, definitely. I think with today's policy decision, the path is clear that in 2025 we are going to see rate cuts, and the pace and the amount is yet to be seen. But definitely the path is clear. And with this, I think overall, if you see the two broad pockets, one is PSUs and one is private banks. So for PSUs, I think the ROAs have already been, we have seen that it is already at its peak and maybe peaking. So now the play remains is that how long, what kind of margins they are going to see going forward. So I think the overall recovery would be continue to remain strong for the PSUs. ROAs have maybe peaking or have already peaked out. So the much strength would be on NIM. So I think NIM should still hold at least for a quarter or so for PSU banks. So the PSU banks will continue to remain one of the favorites among the banking space for us. In private banks, I would go with the Axis Bank, especially it's trading at a lower end in terms of price to book, which is almost trading below around I think 1.5 times or something, 1.6 times 1 year forward, which is really amongst other banks is lowest. And I think the kind of recovery it is expected to show in the next 2 quarters is very really good. So I'd like to go with Axis Bank in terms of private banks, and would like to avoid NBFCs as a general, but would like to go with home finance companies. So Chola, we like the play, and so that stock continues to remain in our list. So these are the stocks in which we would like to have position.
Okay. Well, I'm just trying to look at stocks which are really flying today, and liquor companies right up there. So Tilak Nagar Industries is up 11%. Allied Blenders is up about 4.5%. I remember when Allied Blenders spoke to us guys about, this was 4 days ago, the stock was at made 320, and he spoke about how he believed that the growth will be 12 to 15% at the very least for the next few years, and then newer products could actually aid growth, move higher than that, newer products, better numbers, etc. Look at that stock as well, from 320 to 365, really strong show. I wonder if Global Spirits and the likes also, Piccadilly Agro for example, I don't know if that one has also done well, but certainly liquor companies seem to be doing okay. Jay, good afternoon, and I wonder if any of these liquor companies have caught your attention.
Yeah, the relatively new listing of Allied Blenders, it's looked quite interesting, and the momentum is quite strong. I think it's due for a fresh all-time high. I think it's unlikely to pull back to something like 345, anticipating fresh 2-week highs past 380 to 400. Yeah, the momentum is quite strong.
Okay, well, so that's some of the liquor names which are up and active in trade today. Jay, did we get your ideas in? I don't think we have. So could you give us your stock recommendations for the afternoon?
Yeah, I have 2 short calls. One is a conditional short, one is a straightforward short. One is L&T Technologies. It's been an underperformer, and from 6,000 it dropped to the recent low in October in a 5-step fashion, which we call as a trending move. And after that, it's pulled back to the recent highs, which is very close to the Fibonacci retracement of 61.8 level. And hence, a stop loss at about 55.50 with a price objective of 4,600 for the stock. And the second is a conditional short on Coromandel fertilizers, or Coromandel International it's called. If it breaks the level of 1745, that will trigger the short level for this. It'll probably complete a top from the 2023 low, and hence we are being a bit conservative. If it breaks 1745, anticipated the stock to drop somewhere close to 1500, and maybe a bit deeper too, but we'll keep it conservative. Wait for the 1745 to break and then activate this.
All right, let's just take a look at Newgen Software. Newgen has gained considerably in trade today after Jefferies came out with a positive outlook on the stock. Why is Jefferies so constructive on Newgen? Let's listen in.
So Jefferies has come out with a note on Newgen Software after the meeting takeaways. Well, it has maintained a buy rating on the stock with a target price of 1500, implying an upside of about 15%. Now it says that management highlighted strong growth outlook in the coming quarters, and Jefferies therefore believes that strong recent bookings can provide comfort to the revenue growth, and they also believe that there is scope of margin improvement, especially in FY25 to 27, wherein they expect the margins to be at around 25% during that time. It continues to step up its action to gain traction in the US is what Jefferies believes in terms of Newgen Software. Therefore, it values the company at 42 times its PE ratio, and the PEG, that is PE by growth, comes at about 1.5 times. Now let's look at the share price. The share price surged in trade today, but if we look at the one-year performance, 90% returns in last 1 year, and in last 6 months it is up by almost 54%. But when we look at the analysts covering this stock on the street, we see that there is a bullish stance over here with 5 buy calls and 3 hold calls, and return potential of around 5% based on the consensus target price. Back to you.
Okay, so Newgen Software in focus. Jay, I'm wondering if you're tracking the stock at all?
Yeah, I've been bullish on mid-cap IT names since October 2022, and it's been the mid-cap that's been outperforming the frontline names. And Newgen in particular, it's come up from 230 odds in 2023 to some 1300, 1400 now. It's still got one more sequence of higher high to come through, but that will probably be the final high that started from 2022 October low. And so the price objective for this move is somewhere about 1660 to 1700. So still bullish on it, but it's a bit late.
So up to 1700 is your target price. Is there a stop loss?
I think stop loss about 1150 is the stop loss for us.
1150.
That's correct. Yeah.
Okay. So now you talked about mid cap IT. How are you feeling about a Sonata, and how are you feeling about a Persistent on the charts?
Yeah, Persistent I gave again I've been bullish on it since October 2022. And it's Persistent, Coforge, and Newgen. Those types are still bullish, but they're all on their very last stretch. So it's all quite late. And if TCS and Infosys, which are weaker than the mid-cap names, if they start to turn down, I think that will start trickling down into mid-cap name too. So to a specific question on Sonata Software, not that good looking. But Persistent and Coforge, they still have a little bit juice left, but it's all quite late in the day. So be very careful, have very tight stops on the mid-cap IT names, and Sonata Software is an avoid for me.
Okay, I wonder what's happening in some of the QSR names as well. And some of them really buzzing in trade today. Let me pull out a few of them. Let's look at Westlife, up 2%. Now Westlife is on the back of a Goldman Sachs note as well. 30% upside is what they expect to see. And before I go on the fundamental side of things, let me just take a technical check. Devyani is up 4% and Jubilant is up nearly 5%. So some of them really zooming in trade today. And in fact, at the day's high as we speak. Jay, let me come to you with regard to some of these names. What do you reckon is happening here?
Yeah, Devyani, or you're looking at
Devyani, Jubilant, the whole pack. Jay is buzzing. Yeah. So Westlife, Devyani, Jubi, all of them up. Yeah. Anything between 2.5
Jubilant,
to 4.
I would believe that's the best from the space, and Devyani is an avoid. Jubilant it's got very strong momentum. I'm very sure it's going to top fresh 52-week highs, somewhere close to 800. A stop loss is about 640 from current levels. That will be the trailing stop actually. So the best of the order this is probably Jubilant at current levels.
Right. Also, just in terms of Westlife, want to try and cover that note which I was talking about. Goldman Sachs, constructive, believes that H2 will be a much productive quarter, mid-single-digit growth, but they will stand out is what they've suggested in terms of management commentary to Goldman Sachs. Goldman Sachs building in a target price of 1,045, no change in target price per se, but a 30% upside is what they're penciling in. 2% of that already getting bought into today. And, just in terms of operating leverage kick through, same store sales growth, these are two things which many analysts are going to be tracking going into H2. Will be very crucial to see whether McDonald's or Westlife Food World is going to do in this regard. Narendra, let me come to you with regard to this one. As well as the larger QSR pack, consumption as a theme, in fact, has been something which a lot of analysts on the street are talking about and positive on. Your views with regard to consumption and QSR in particular, and any names that you like in this space?
Yeah, definitely consumption is a good thing to have and good stocks to have in your portfolio for long term. But right now, I think since the inflation was high and now it is being seen that the inflation is peaking out. So maybe the commodities, especially on the food items, the prices are going to stabilize and going down further. So that could add to the lower input costs for these kind of stocks. So that may have been the short-term thinking of the markets, which is driving the prices now. As far as companies is concerned, we don't have any stocks under QSR segment under our coverage, so I cannot. So maybe I'm not able to comment for the long term. But I think the coming off of inflation gradually and the overall rate cut scenario will be leading short-term momentum in this space.
Okay, and Narendra, do you believe that overall QSR, would you say that there is a case to suggest that there could be a recovery, and what would that case be in your view?
I think if we're looking at the latest Q2 results, you have to see how the urban consumption space is behaving. So we have seen that urban consumption has slowed down in Q2, which is likely to pick up by Q4. But still, we would like to wait and watch and see what kind of trends, especially the urban consumption, shows us. And since the QSR is mainly about urban consumption, so we have to still see how things evolves around that. So I think from our side, it is better to wait and watch and see how the urban consumption shapes up, because right now there are some divergence trends and which is still not clear how it is developing. So I think we have to. It's better to wait and watch and then assess.
All right. Thank you so much, Mr. Solanki. Great to speak with you today. Stay on with us, Jay. We'll take a very quick break, coming right back with top ideas for this afternoon session. Stay tuned for all that and more.
We set you up for the day's trade. 30 calls before the markets open on NDTV Profit.
Jubilant Food above a 600 level on Friday.
Wipro can be first trade to buy all commodities, but in that Vedanta looks good.
Our experts give you the top stock ideas to prepare you for the day.
ICICI Lombard stocks hit the first target. It has given a very good momentum with good volume.
Don't miss the chance to make the right moves. Only on NDTV Profit, where winners are made before the bell rings.
When the whole day passes like a blur, the news just whizzes past, and you're trying to stay informed. It is our job to bring you news that truly matters. Profit 360, we cut through the clutter. The Wall Street deals, finance and policy news that could shape your tomorrow. The newsmakers, the trendsetters, and the innovators. In 30 minutes, we've got you covered. So stay ahead, stay informed, and stay profitable with Profit 360.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
When the whole day passes like a blur, the news just whizzes past, and you're trying to stay informed. It is our job to bring you news that truly matters. At Profit 360, we cut through the clutter. The Wall Street deals, finance and policy news that could shape your tomorrow. The newsmakers, the trendsetters, and the innovators. In 30 minutes, we've got you covered. So stay ahead, stay informed, and stay profitable with Profit 360.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
When the whole day passes like a blur, the news just whizzes past, and you're trying to stay informed. It is our job to bring you news that truly matters. At Profit 360, we cut through the clutter. The Wall Street deals, finance and policy news that could shape your tomorrow. The newsmakers, the trendsetters, and the innovators. In 30 minutes, we've got you covered. So stay ahead, stay informed, and stay profitable with Profit 360.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
When the whole day passes like a blur, the news just whizzes past, and you're trying to stay informed. It is our job to bring you news that truly matters. At Profit 360, we cut through the clutter. The Wall Street deals, finance and policy news that could shape your tomorrow. The newsmakers, the trendsetters, and the innovators. In 30 minutes, we've got you covered. So stay ahead.
Back with India Market Close right here on NDTV Profit. A quick check on the markets and well, precious little really. IT's in fact come off at 0.26%. So from yesterday's best performing index to down about 0.27%. Nifty IT's had some issue. Volatility's come off as well. But the good part is that the broader end of the spectrum seems to be doing okay. If you look at the Nifty small cap 250, that index is up about 0.5%. Mid caps too up about 0.47%. So good going at the broader end of the spectrum. And that's symptomatic in the way some individual stocks have moved on the back of news. One of them is Kernex Micro. Why is Kernex up 5% in trade? Anushi is joining us to tell us the latest on that stock. Anushi, good afternoon.
Hey, good afternoon, Neeraj. A significant order win is what has moved the stock in trade today. Now, if you look at Kornex, they've received an order worth about 2,041 crore by Chitranjan Locomotive Works. This pertains to supply, installation, testing, and commissioning of 2,500 sets on board of Kavach equipment. That is what we are seeing, and this order is to be delivered by December 25. So, very short period of time, 1 year period of time, we are looking at, and a significant order at the best that we are speaking, because if you look at the FY24 revenue of the company, that was at 20 crore, which was 5 times the growth. And even if you look at H1 FY25 performance, they had clocked in about 70 crore of revenue this quarter as compared to 2.37 crore. So 29 times of growth we are looking at in terms of revenue in the first half. EBITDA was also at 15.1 crore and margins at 21.6% of a range. Market cap of this company is around 1,900 crores. So just taking this kind of an order size into consideration is what is working out for the company, for not just today, for even for the longer term as we speak. In fact, in their outlook forward, the company had mentioned in the previous conversation that they had with us around June and July that they expect to achieve about 700 to 800 crore of revenue this year and are expecting around 10,000 crore worth of tenders from the Kavach side as we speak. There are 2 more players in this space, which also includes the likes of HBL Power, one of the names being that. So even that is up in trade today. So definitely watch out would be on more of these Kavach orders as we speak, and a significant order that Kornex is seeing today and why the stock is up in trade.
Okay. Thanks a lot for that. So, Anushi, just very quickly, you mentioned that the company is expecting 10,000 crores worth of orders. Is this the first of that, or has something else come in the recent past too for Kornex?
So if we look at the past, in Kavach, what we are seeing is that this essentially is one of the latest developments as we speak.
Okay.
So yeah, so the outlook would be on what the future would be, especially considering H2, which is more on the order heavier side for these kind of businesses.
Yeah, Anushi. Thanks for putting that into perspective. Neeraj Devan, independent market expert with us on the show as well. Neeraj, I mean, it's a small bucket, but these companies, anybody which is winning these government orders or getting large orders are doing well, right? On the defense, on the railway side, we saw that happen with Solar Industries 3-4 days back. Large market cap, 2,000 crore export order did very well. Now, Kornex, small company, but a large 2,000 crore order doing well. It's already spurred some of the other potential Kavach order victors as well, the likes of HBL Power up in trade. Have you looked at this space at all?
Yeah, good afternoon. I think if you talk about Kornex, which had been buzzing because of this likely orders which will going to come their way, the stock is already close to 2,000 crore market cap without any revenue being coming so far. But now the orders have started coming and they can be huge orders. So maybe what is looking very expensive right now, will look moderately expensive if you're getting this kind of order. And somewhere down the line, if they get more orders, the company will not look that expensive. So there are a lot of potential opportunities like this in the market. Even HBL you mentioned, they also have some division, one division which is into Kavach and railway security. So they also expecting good orders. So they have other businesses also which are doing considerably well for them. So I feel that wherever there is a likelihood and there's a visibility of order inflow, I think the stocks will remain at a premium. So, you may get some correction, you may get some entry, but still that premium is inbuilt, whether it's railway related stock, whether it's defense related stock, whether it's electronic manufacturing services. There are segments where, these lumpy orders come and some orders are for long period, like they can be for the next 3, 4, 5 years, which, it can make the valuation over a little longer term not that expensive. So I think there is growth, so you have to pay for the growth in some of these companies.
Okay. Another set of companies on our radar is oil and gas. Agam is joining us to tell us why Citi is looking at the space closely.
Well, Citi is positive on the oil and gas space, and at the moment what they are basing their positivity is on expectations that the GST Council could perhaps consider a proposal to bring City Gas Distribution Company specifically under their ambit. And the government lowering the excise on CNG is also something that could potentially be on the cards when it comes to the union budget on the 1st of February. Moreover, there's also an expectation in terms of sharp earnings recovery from OMCs through a healthy marketing margins. And because of this, we've had positive cues coming in from Citi when it comes to, well, the entire oil and gas space. So when it comes to your OMCs specifically, they see an upside of anywhere between 60% to 40% for HPCL, GAIL, IOCL, and even in terms of IGL and MGL, they are expecting an upside of 25 to 29% respectively. All in all, looking positively towards the sector.
Okay. Well, thanks a lot for that. And it's interesting that people think of a slightly longer term view given by Citi out here on IGL and MGL. They're saying that people who have a 6 to 12 month view, it promises to be a very good investment candidate, these two. Now, Jai Bala, you look at slightly longer term charts as well. These stocks have gotten a hit in the recent past because of regulatory moves. Have they, from a charts perspective, hit any kind of areas wherein you could maybe think that they've hit a bottom and they could bounce back, if not in the very short term, then in the slightly medium term?
Yeah, that's right, Neeraj. Not in the short term, but possibly in the medium term. And of that, Indraprastha Gas doesn't look good, but MGL might be slightly better off. Each of them have one more sequence of lower low to come through that got registered in November. So once that is done, we could see a bounce back come through, but we still have to evaluate if that will be a medium-term bounce back. But, on a slightly related note, I'm anticipating for the very short term, I'm anticipating Brent crude to drop below the September low. It's about $3 below the September low we saw in 2024. So that might give a little bit of a tailwind for oil and gas names. But, the bad news is that
Jay, sorry, I missed it. Are you saying you are expecting crude prices to dip below a particular level?
Yeah, I'm expecting crude prices to drop below the September 2024 low. I'm anticipating it to drop about $3 below the September 2024 low.
Oh, okay.
So once that is done, it will be a very big bottom for Brent. But this short-term drop that's anticipated to come through, that can give a little bit of tailwinds for oil and gas companies.
So, City Gas Distributors and focus is I find that interesting. Wondering if Neeraj has a view there, our fundamental guest, on this entire situation, considering the kind of headwinds you're consistently seeing with administered price mechanism, etc. Does IGL look strong to you?
See, in the shorter term, what has happened now is that the allocation that was getting, the priority gas allocation, which has been cut by the government. So some margin pressure will be there, and I think they had to increase prices. IGL didn't increase the prices in Delhi because I think elections are due sometime down the line, but other places they had increased the prices. So that pressure will be there for the short term, definitely. But the kind of correction we've seen, I think the stocks have corrected about 40% from the highs they saw some months back. So the correction has been huge in these stocks. And, after this short-term, adjustment which happens because of the priority gas allocation, because of the price hike that they take. So I think after the short-term adjustment, I think for a medium to long-term, definitely for these stocks, these can be opportunities for a medium to longer-term period. Though still there can be some more consolidation, some more news flow which may impact the prices in the shorter term.
Okay, so that's the view coming in on IGL. The FMCG sector also in focus. They are expecting a slow end to 2024 with companies cautious about near-term growth, but hopes are higher for a better 2025. NDTV Profit Sesha Sen brings you the full picture.
The FMCG industry remains cautious about FY25 growth as high inflation and unemployment continue to weigh on consumer sentiment. The operating environment for companies remains tough with prices of key commodities like wheat, tea, cocoa, palm oil all moving northwards, forcing companies like HUL, Britannia, Nestle and others to take price hikes of 2 to 9% across categories such as biscuits, chocolates, soaps, shampoos, etc. to offset the inflationary pressures.
companies. While the price hikes may aid revenue growth, the company said that volume growth remains elusive despite the crucial festive season, which has offered little help for the industry. The urban stress is palpable, while the rural recovery appears to be the only bright spot for the companies. However, with rural sales comprising only a third of the total sales, the gradual pickup in rural demand may not be enough to boost the overall growth. Now, in its outlook for 2025, market researcher Kantar expects volume growth for the sector to remain flat. Now, as we look forward to 2025 and beyond, experts say that the FMCG sector indeed finds itself at a crossroads.
Okay, but switching focus, PG Electro as well in focus, and some of the EMS plays have been, doing very well. Dixon, for that matter, if you can pull up the 6-month chart on Dixon, just been on a tear, right, in the medium term. In fact, even in the short term, doing very, very well for itself. But PG in particular, and it's because, one, they're going to do a QIP at 705, stock currently priced at 815. So it's had a good run up, nearly 10% odd in the last 4-5 days itself. And you also have a guidance which has been revised. So instead of 4,200 odd crore, they'll do 4,800 odd crore in terms of top line. And they will continue to grow from there. They are also diversifying a little bit. Neeraj, I just want to quickly have your take with regard to some of these EMS plays. Extremely interesting, but valuation comfort not there. On a general, on a relative basis, I want your views both with regard to the prospects as well as how you view valuations at this point with regard to some of these players.
Yeah, see, I've been mentioning about EMS for some time now. But the growth that is there and the growth that they've been showing quarter on quarter, take the case of PGEL only, PG Electroplast. I think they've been showing good growth, and whatever guidance they've been giving quarter on quarter, they've been beating that, or rather taking their guidance up from whatever they've been saying. So I think the entry to get into these stocks is not so easy, because every time you look at a stock, you'll be trading at valuations that are very expensive. So, one has to take a call whether at what level they'll be comfortable. So, PGL in this correction that we saw just about a couple of weeks back did correct and did give an opportunity to invest. I think if someone is looking at an entry into these kind of stocks, they should look at opportunities whenever the stocks are correcting because of market correction on any news flow which comes their way. But specifically, as far as the premium is concerned, the premium valuation that they are demanding, I think that will continue for some more time, because you are seeing a stock which is delivering a growth of 30-40%, and margins are also stable or maybe slightly improving as the economies of scale play. I think that is something which will keep on driving this high valuation.
Okay. So PG Electro, all right, high valuation question. EMS space continues to be hot. Look at the 12-month return at 255%. So definitely a multi-bagger in the making. Anushi joins us now. She's talking about the top buzzers in trades today. Anushi, I must say that the buzz has slowed down a bit in the last hour or so, but nevertheless, what's standing out?
Hey Tamanna, so the right on top of the list is Asahi Glass, 14 times the volumes that we are looking at, and this is compared to their 30-day average, and about 7.8% of an intraday high. In the last 5 days, if we look at the stock, it has moved around 11%, a lot of these gains coming in from today's session as we speak. Second is HBL Power Systems. The stock is up around 12% with about 11.35 times the volumes, and a lot has to do with what we will be watching out for is for potential orders coming in for the company, as it's one of its peers, Kernex Microsystem, has just received a significant 2,051 crore of an order size in the coverage, wherein HBL Power System is also a player in that space, so a watch out would remain on that. Then the next one on the list is Godavari Power and Ispat, 6.26 times of volumes with about 7.6% of days highs. The stock was up 14% in the last 5 days. And if you look at its year-to-date returns, they were about 34% up, 34 to 38% up. What was the recent development for the company was it has acquired 51% stake in Jammu Pigments. So watch out to be on Godavari Power as well. And the last one on the list is Maharashtra Seamless. Around 6 times the volumes, a continuation of what happened in trade yesterday, wherein it was the top volume buzzer with about 38 times of volumes compared to its 30-day average. So second straight day of high volumes that we are seeing for this counter. The stock is up around 5%. So these are the couple of counters where we are looking at high volumes on the back of some news updates and on back of some higher trading volumes taking place.
So in some news updates, I'm not sure what the news update is in Maharashtra Seamless. You're seeing action for 2 days in a row. Jay, is this stock you're tracking?
Which one was it? I missed that.
Maharashtra Seamless.
No, I don't track that closely, but of the names mentioned just before, HPL Power, that's looking interesting. Okay. And also, PG Electroplast, I like that quite a lot. And PG Electroplast maintenance stop is about 710, probably fresh record highs to somewhere close to about 1,000. Yeah. So Asahi also looking good, but but the stops is quite wide. So PG Electroplast, of the names mentioned recently, that's probably looking the best now.
Vari Energy is also in focus. That news just flashing on your screen. They've incorporated a wholly owned subsidiary in Australia. I mean, we spoke to the company just a couple of days ago, and they are definitely on an aggressive expansion spree. They talked about their new facilities in the US. They're very, very bullish, and it's a 60-40 mix right now in terms of US and India for them. So Australia becomes another market to look at. Vari showing a positive view here as well. But let's focus on Strides Pharma, another stock that we're tracking this afternoon as it sets its record date for its spin-off of, its OneSource business today. Varsha brings us the details.
Yes, Tamanna. So if you see, the stock price is down almost 54%. So technically, it's not down 54%. The stock is trading at X CDMO business. So the record date for spin-off of its OneSource business, which is a CDMO business, is today. Now the stock is trading at 682, which is the X CDMO business. Recently, Stride Pharma had announced spin-off of its CDMO business. Have announced a swap ratio of 1:2. Now the CDMO business will be listed in Jan or Feb. Talking about the guidance that the company has given for this OneSource business, so they're guiding $160 million to $180 million in revenue in FY25 with 34% of EBITDA margin. Significant part improvement in Q3 and Q4 is expected as their GLP get commercialized, which is a obesity drug. And they're also the CDMO business, that is OneSource, is expected to reach almost $400 million in sales by FY27, and this will enable company to double its business every 3 to 4 years. And lastly, we know that how Indian CDMO company will be benefited because of the US Biosecure Act. CDMO is a high entry barrier business with strong growth prospects that will also aid for OneSource as well.
Okay. Strides Pharma in focus. Of course, a guidance for OneSource has also come in. A lot of action in that stock. Neeraj, Devan, you're finding Strides exciting?
Actually, I will not be able to comment on valuations because I've not really seen the valuations the last year or so. So I really can't comment. But definitely whenever there's a demerger, it is there to create value. So I'm sure this will also create value for the investors, but I can't specifically comment on the valuation.
Okay. So not in this case, but in the pharma space, anything that you're tracking right now, Neeraj, and you're looking at closely that you like?
Actually, pharma space has been doing well. Some of the stocks have already done quite well. So I'd been liking BV's lab, but then that has run up. But I think still, after some consolidation, it can still continue its up move from these levels. Then there's been Sun Pharma, which is doing well, and I think that should also continue doing well. Though that major rally that we saw over the last couple of months, 3-4 months, has been done in the pharma segment. Now it will be more stock specific, action which may continue in some of the stocks.
recovery actually today after the slam dunk that it faced yesterday. Jay, let's get your view on strides and Divi's as well.
Yeah, before this, the CDMO business split, I think it was likely to correct, so somewhere close to about 1180, but it's a very strong stock in the medium term. But the short-term correction, if you adjust for the split, it works out about 1364. So I think it's got a little more downside to work with, but it's very strong for medium term. Pharma as such, I've been bullish on pharma since the COVID lows. And that is one sector I've never been bearish on. But recent price action from the all-time highs for pharma sector is saying that its pharma sector is due for a sizable correction. And I would avoid investment longs here. So whatever you're doing here, keep them trading long rather than investment long. Let the correction play out. Once the correction has played out, we can look at medium-term to long-term positions. Right now, the correction is still pending. Further lower lows to come through for pharma sector.
Okay. I want to try and take your view, Jay, with regard to Divis in particular. You like it because the stock has had a very good rally, of course. Over the last 8 to 10 months, it's given phenomenal returns to investors. Seen a bit of a cool off last couple of days. Some negative news, no doubt. But how do you view it on charts now? Divis is a big name and it's done fairly well.
Yeah, Divis, it's very close to finishing its move that started from the March of 2023. So I would watch for the support to break at 5,700. If that were to break, I think the stock is also turning. Right now, this is a slight outperformer within the pharma space. So for people who are long, 5,700 is a bull-bear divide. So watch out. As long as the stock stays above 5,700, it's bullish. But the momentum is very clearly slowing down. But you can still hold on, as long as it stays above 5,700.
And, interesting view coming in from Jefferies with regard to the pharma space, the whole change with regard to US policy, likely change, of course, not yet happened, but, likely to happen. And Jefferies sees some triggers for Indian CDMO stocks. Especially given the Biosecure Act, etc. Varsha joining in with all of the details on that one. Varsha, take it away.
Yes, Harsh. So the Jefferies note on India Pharmaceuticals focuses on how Indian companies will benefit from US Biosecure Act. Now, if you see, the Indian CDMO companies have seen strong gains in the last 6 months due to expectations of better US funding, better US biotech funding and progress on the Biosecure Act. Even companies have seen increased inquiries and site visit as said by Syngene's CFO as well to NDTV Profit. Now, there's high expectations from China +1, which has seen valuation of CDMO companies re-rate to 40 to 60 times. Now, the Biosecure Act, if you see, is currently under consideration in US Senate, though House version of it has been passed in September 2024. The US Senate is expected to discuss the Biosecure Act in December so this will impact CDMO companies. Now, the stricter version of the act would benefit Indian CDMO companies by limiting US contracts with Chinese firms like Wuxi Aptech. If the act is not passed in December, then the bill will expire and then we'll have to take up under new administration. Delay or dilution of the act may negatively affect Indian CDMO companies. Now, if you see December, so all in all, the conclusion is December is a key month for all the CDMO companies, including your Divis, then Laurus Lab, Syngene, then also Suven and Newland Pharma. Because if the Biosecure Act will pass, it will impact positively to these companies. If the act is not passed, this will impact negatively to these companies. So December is a crucial month for all the CDMO companies.
Okay, so CDMO triggers in December becomes important. I think Jay making an important or a crucial point, saying that we now really need to look at staying away from pharma for a bit, at least on the charts. But another company that has been in focus is Wonderla. They raised 600 crore rupees via QIPs. How does the company plan to use their proceeds? We spoke today with the MD, Arun K. Chittalapalli. Listen in.
so we had raised about between 500 and 600 crores. The exact amount is still being finalized, but it'll be close to the 550 kind of number. And this money that we have raised is going to be used for our upcoming project in Chennai mostly. It's a 500 crore investment that we are doing in Chennai. So this will be used mostly for that. And also for expanding our existing other amusement parks in Bangalore, Kochi, and Hyderabad. So this is what the money is going to be used for.
Okay, that was our conversation with Wonderla. But, Neeraj, I want to understand if you're looking at a December theme for hospitality overall, for travel tourism, any of these counters that